Please get on that. We actually had 195 people on that yesterday, so that's great, and people were making connections. So the program and the attendees are on that app, so feel free to use that. And we would love you to tweet or LinkedIn or Instagram about the event, because we're proud to be continuing to hold the event in the circumstances, and it'd be great if we could share that with other people. And then finally, we're very happy that CraftCoin, our entertainment sponsor, will be hosting a networking reception at Mercato Mayfair at 6 o'clock tonight. So anyone who feels inspired to come and have a drink and chat with people from the conference, then please come along to Mercato Mayfair. So thank you. We're going to get going. Just looking back on yesterday's program, I think there were a few key themes coming out that are worth reflecting on. I mean, one that came up a lot was the issue of regulation, the challenges of regulation, the fact that the regulators are struggling to keep up, and even knowing what to regulate, and that grim reality about regulation supporting incumbency, which makes it much more difficult for the challenger organisations to have success. There was a great panel, as you would have known if you were here, on central bank digital currencies, the whole issue of the challenge of the new private currencies, Libra coin, JP Morgan coin and so forth, and the fact that in effect this has created a battle for the control of our global economic system. So that's something that I think we will continue to see play out over coming months. Data. I think Jamie Burke said platforms are eating the world, and the whole conversation about banks and platforms and challenger banks and who owns the customer and who owns the data kind of has the control. So this is something, again, we're going to be seeing more of. One of the things I hope you saw yesterday, because there has been some disparagement, if you like, of blockchain as a technology, some of the really real use cases that were showcased yesterday, the supply chain one with AgriLedger, Bosch, Chainvine, Nuggets with their platform, and a whole range of other ones in the finance and banking sector. I think what you can start to see is, even though the kind of hype and excitement of 2017-18 has calmed down a little bit, there are serious people working on serious applications. And then finally, one of the messages that came through yesterday, which we'll talk more about today, is that in fact emerging markets are one of the big opportunities, and that's where we're seeing a lot of the innovation move fastest, because they don't have the legacy institutions and the challenges of incumbency to the same extent as we do here. So today's going to be a bit of a different sort of a day, because we're going to move off the very strong financial services focus onto a much broader focus, looking at sustainability, emerging markets, what's going on with VCs and investors, and a whole range of other topics. So we hope you enjoy today, and I'm really thrilled to have Anthony Day from IBM as our first speaker, because I want him to introduce the day really trying to help people see how you can create transformational social impact with blockchain. So please give a big hand for Anthony Day. Thank you.
Good morning, everybody, and to everybody watching at home. I hope you're all safe. I hope you're all well. We live in exceptional times. The pace of change in our world is never going to be slower than it is today. Let that one sink in just for a second. We have never had more capacity, capability, and potential as a human race. But at the same time, we've never been in greater danger. And what I'm going to talk to you about over the next 20 minutes or so is why we should be a lot more worried than we currently are about the impact that we're having on our planet, and to give you some relief and some tools and some ways of thinking about what we can do about it today. So just to let you know, why am I qualified to talk on this topic? I work in technology, right? First things first, and I work in blockchain, as many of you do. I'm a vegan. I ride an electric motorcycle. I use plastic-free toothpaste. I am the stereotypical middle-class climate warrior, right? Greta, I am not. I'm not out there making the kind of impact that maybe I should be. But I'm trying my best. And today I want to use this platform to help share a few messages and a few learnings that I've taken away from my work in technology and what I can see that's the domain of blockchain and distributed ledger technology can help us to do more with what we already have. And also, these are my children. This is Connor and Chloe. And the main reason I want to talk to you today about social impacts and climate change is that 30 years from now, I want them to be stood on a stage like this, looking out with unconstrained opportunity and positivity, not staring into the audience, asking them, with guilt, why didn't you do more when you still could? This is the great acceleration. If you look on the left-hand side, you'll see the socio-economic trends that have played out over the last 200 years. And you'll see a bunch of exponential curves. Population growth, urbanization, use of transportation, all of the things that have accelerated in how we live our lives as a society in this country and all around the world. And then if you look on the right-hand side, you can see the Earth system trends, what our impact has actually led to in terms of growth in carbon dioxide, in nitrous oxide, tropical forests and deforestation, acidity of the oceans, not growing linearly, exponentially. Right? And I'm not going to go too much into the climate science because many others have done better than that, but I do want to double click on the importance of exponential trends. Right? So if we look firstly at a linear basis, this is the thing that the human brain can understand very, very well. If we project forward from now to 2050 in years, that's 30 years, that's 30 steps, that's relatively easy for us to understand and to follow. We get that one. And 2050 is the term, or is the year that many have said, we are going to be carbon neutral as organizations, as countries, as companies. And I want to tell you why that's too far away. Let's talk about 10 exponential years. Right? Let's just fast forward to 2030. So if we take 10 exponential steps, doubling every year, the situation that we find ourselves in today will be 1,000 times worse 10 years from now. Right? That's how exponential curves work. Fast forward 30 years from now to 2050, the situation we'll be in will be greater than 1 billion times worse than it is today. Right? That's a pretty abstract concept, but that is a lot worse than we find ourselves today in terms of emissions in the atmosphere, in terms of global warming, in terms of pollution, in terms of deforestation. If we continue as we are, growing on an exponential curve, we may well be 1 billion times worse off 30 years from now. Now, that's not an exact science, but if I look at that and I look at my understanding of exponentials, I wouldn't be sitting comfortably in an audience like this. I would be losing my damn mind. I would be out there running around the streets saying, I am not doing enough. This is not going to work. We are not going to be able to reverse the impact that we are having on our planet if we continue accelerating. 2050 will be too late. That's enough climate scaring for the time being. I'm going to get off my soapbox and I'm going to tell you that it's hopefully going to be all okay if we apply some of the thinking that I'm going to take you through today. Right? The path that we're on is one towards scarcity. Scarcity of resources, scarcity of time to make an impact. What we need to try and create, and any of those who follow Singularity University, this is one of their core tenets, we need to try and create abundance. An abundance of talent, an abundance of data, an abundance of capacity, an abundance of capability to be able to reverse the trends that we see happening in our world today. Incremental change, incremental small improvements year on year is not going to get us to reverse that billion exponential impact by 2050. It's not going to be enough. It's going to be like asking Thanos to prevent the snap by offering him workplace sensitivity training. Any of you who haven't watched The Avengers and don't know who Thanos is, please come find me afterwards. I will explain it. There's a complicated origin story, but stick with me. I'm happy to explain it after the show. What we really need is an intergalactic group of technologically advanced superheroes all working together to prevent an existential crisis. That's my analogy for the situation we find ourselves in. Again, anybody who doesn't watch Marvel or The Avengers, please come find me afterwards. We need to treat an exponential threat with exponential capabilities that we have today to drive exponential change. But people get in the way. And not just our friend Donald, anybody who is in a position of influence, whether they be leaders in government or any one of you in the room with the influence that you have. Right? There are any number of technologists out there who will happily evangelize the great technology that we have in AI, quantum, blockchain. But the dirty secret is, blockchain will not save the planet. We will. Right? Individualism, denial, short-term thinking, short election cycles, whatever you want to call it, has led us to the situation we're in today. It's not my problem. It'll solve itself. I've got more pressing things to focus on. Whereas what we actually need is to work together as a collective, to combine resources, to set transformational goals that are big enough and important enough to reverse the trends that we see in our world today. So what's blockchain got to do with all of this? Right? As I said, blockchain will not save the planet, but we can learn a few things from what we've seen over the last years in terms of how this technology has been deployed and exploited. As many of you know, blockchain is a technology for bringing multiple parties together. People who've never typically worked together on technology programs, whether that be the lowly farmer, regulators, customers, public, private sector. It's a technology for trust, for trade, for transparency. And if you bring these capabilities together, and you bring different parties together, you can create new applications, you can create new functionality, you can rewire the way things are done. You can open up networks and platforms, you can create open source communities that can work together to use that data, that channel, that scale, to do something meaningful. And the interesting paradigm that has emerged over the last 3 or 4 or 5 years is the concept of a business network or a consortium. And this is important. These are global organizations, traditional competitors, all working together to build technology platforms using blockchain as the underlying fabric for those networks. And we see them in every single sector worldwide today. In finance, in distribution, in manufacturing, in public sector. Everywhere that we look, in every industry today, you'll find a business network or a consortium using blockchain technology to try and transform the way things are done. So now I've proven to you that it is possible to have some of the largest organizations working together for a common goal. How do we apply this to social impact and climate change? Well, first you need a common goal, or something that people will work together towards. The United Nations Sustainable Development Goals are a perfect place to look for this. 17 different categories of areas that we can all agree on are things that we need to improve. And as you go back to your organization, the companies, the institutions you work for, ask them, how do the things we do as a company relate back to some of these Sustainable Development Goals that will be helping to reverse the trends that we're on? And are we doing enough? Do you even know? Do you even lift? And another great example is Project Drawdown. Project Drawdown is a really great resource online. You should definitely go check it out. And what they've done is they've categorized, in order of significance or potential impact, different initiatives or different themes against which we can help reduce or remove atmospheric carbon dioxide or carbon emissions from the world. And if you look at that list, you see things like materials management, renewable resources, reducing food waste, moving to a plant-based diet, better land use, reduced deforestation, education. And you can imagine in every one of those, you could find a group of organizations from across supply chains or across countries working together to address those sorts of things. And we're already seeing some of that. But these are the places to look, because this is where we're going to have the biggest impact and be able to accelerate the reversal if we focus in on these areas. But the mantra must always be the triple bottom line of people, planet, profit. So today, a lot of these networks, a lot of these initiatives have been driven by just profit. And that's understandable, right? I'm not going to judge on that. There are private organizations out there, listed companies, whose primary goal is to stay in existence, and to stay in existence, we have to generate profit so we can reinvest. Not challenging the concept of profit. But we should and we can focus on all three. Can we have a benefit on society? Can we have a benefit on the planet and also create profit? That's the equation that we're solving for. And if we're not looking at all three together and in harmony, we're getting it wrong. We're not doing enough. So I'm going to give you some examples, a few case studies of what's already being done. Again, to give you the confidence that we are able to use this technology and others for good, for the triple bottom line of people, planet, and profit. First one, and shameless plug, IBM Food Trust. IBM Food Trust is a platform where we're able to connect from start to finish, from the very beginning, from the farm to the customer, an entire supply chain, and track the information, the data, the status of what's happening to our food and our produce. And with that, we can look at the carbon footprint of the food that we buy. We can reduce the waste. We can optimize distribution and logistics. And we can start removing some of the carbon dioxide or focusing with a data-driven view on the impact that our food supply chains are having on the planet. And talking to executives, talking to the business people from a profit perspective or from a key metrics and outcomes perspective, you can look right across safety, freshness, waste, sustainability, efficiency. You can talk about as many profit drivers as you like, and you've got a compelling narrative. Another company that I love is an organization called Food Cloud. They're looking at redistributing food from retailers, restaurants across the UK and Ireland, and they've distributed, equivalent of £81 million worth of food, reduced a significant amount of carbon dioxide, and they're making sure that that food doesn't go to waste. As we saw from Project Drawdown, the reduction of food waste is a significant driver in reducing CO2. And they're looking at creating traceability on those products as well, especially towards the end of life of food produce. We have to be super careful as to the provenance, how it's kept, how old it is, because we don't want people who are consuming those products to be ill or to be sick. IBM are working with an organization called Yara to create an open data platform for farmers and for farm data, combining logistics data, farm data, soil, weather data, consumer data, any source of information that we choose to use to make more of the agricultural ecosystems that we have, to be able to make more with the food and the scarce resources that we have to grow more, to have less pestilence, to have better efficiency in terms of how we buy and how we sell. Again, all focused on making more with the limited resources we have. And this platform is open, so anyone can contribute. Tenet is an organization in energy distribution, and they're looking to create a giant virtual power station using electric vehicles and home storage. And why this is important is because we want to reduce the waste or maximize the use of renewable energy. And the production of renewable energy is oftentimes variable. So we want to be able to use that extra storage in the system to reduce our dependency on non-renewable resources. Imagine that basically your electric vehicles will have their own wallets, and they'll be able to make money for you while you work or sleep, while also creating a giant virtual battery across Europe. Really powerful concept and will help us to reduce our dependency on fossil fuels. Plastic Bank are creating a circular economy around the use and reuse of plastic, where individuals can collect plastic, be rewarded for doing so, and where we can incentivize manufacturers to reuse that plastic. A number of plastic and plastic-based organizations out there doing very, very similar work and using blockchain as the underlying technology. Bbox, another great organization providing solar panels as a service. So for those who need renewable energy in the developing world, but also using that solar energy to create verifiable carbon credits so that we can also create a source of income from those particular panels as a service and to be able to expand the ecosystem and make more of what we have. Again, focus on renewables. Now, blockchain is not the only technology in all of these use cases, right? But it's one of them. And there are a number of others. We talk about artificial intelligence, augmented reality, drones, satellite data, robotics, the Internet of Things. All of these are the exponential capabilities that we get to use. These are the assets and the tools that we have to do something more, to enable the initiatives and the platforms that will allow us to reverse the trend of climate impact and damage that we're creating today. These are our exponential Avengers. So before I end the show, I'm going to leave you with a few more concepts or some learnings that can help you to identify where we can create abundance. Who's ever seen one of these before? The humble vegetable peeler. This is a lesson on innovation. 5, 10 years ago, a company came out called Oxo Good Grips, and they said, we are going to transform the vegetable peeler experience. We are going to throw all the innovation assets that we have at this underappreciated segment of the market, and we are going to create this. Safer, sharper, better grip, rubberized, ribbed for her pleasure. This is the innovative potato and vegetable peeler of the future. Right? This is innovation, guys. This is what you need. Wrong. The customer doesn't need a potato peeler that is rubberized. I just want peeled carrots. So think carefully about what is the outcome that I'm actually trying to achieve. As I'm investing in technology, as I'm investing in innovation, am I just going to create a rubberized version of the shitty process that I already have? Or do I actually want to transform towards the outcome that I genuinely want to create? Focus on outcomes, not incremental improvement on what we already have that might not be fit for purpose and that got us to the situation that we're in today. Second thing, key learning from the work that we do in blockchain is there are 3 critical domains to think about as you're building business networks or consortia. And oftentimes the technology is the first thing we do. We build a proof of concept, we say, great, blockchain is going to solve this, that, or the other. We're going to hash it, we're going to make a token, we're going to put it on a distributed ledger, we're going to send it around the world, and actually it goes nowhere. Because the business value or the governance for how we actually scale in the real world haven't been considered. And these 3 streams don't often go in parallel either. I was having a conversation on a podcast with a colleague of mine the other day, and typically the legal process for creating a consortium can be 9 to 12 months. Right? So we can spin up a proof of concept in a few weeks, we can go to pilot or production in a few months, but the lawyers are going to take us 9 to 12 months to figure us out how we're going to do this. So actually how you plan your initiative, your timings, and what you do and when has to be interdependent on all of these things. And the business case is critical too. We talked about people, planet, profit. Who's going to pay to transform whatever it is that you're looking at? Because not oftentimes this technology comes for free. Building a new platform in any technology costs something. Where are the incentives? Who benefits the most? Not all consortium participants are equal. We want to talk about fair. But we have to invest people, time. This platform has to run. It has to be supported. Right? The business case is critical for that. But ultimately, it still comes down to a matter of hearts and minds. Right? We talked about people standing in the way of progress. We still need to influence the people out there to take action. As we said, people get in the way of progress oftentimes. So how do we tell a compelling story for those out there, for the people who, when you leave this show, you are going to go out and influence and talk about the things that we can do differently and better? First things first, you've got to start with a common enemy, a common goal. As I said, oftentimes these are traditional competitors who have to work together to create a startup. People who've hated each other, who fought for decades. If we don't have something that we can all agree on, we're in trouble. Whether that be fraud, whether that be profit, or whether that be an impending existential crisis. I think we can probably all agree on that one. But if you don't have that common thread that everybody can get behind, if anybody is not interested or it steps on any of their competitive territory, you might have a problem. So think very carefully about what is the mission statement and the common goal. Secondly, you're going to need a facilitator. You can't just expect these guys to sit into a room and be happy families all of a sudden. It's going to take some time. It's going to take some orchestration. And thirdly, you're going to need some lawyers. We are going to break stuff. Right? One of my favorite phrases is, blockchain needs more lawyers. And to anyone out there listening, this is one of the most important things I will say today. When we work together and create and transform, we are breaking the current way of thinking, whether that be regulation. A lot of the regulation out there is based on the idea of a centralized single party who holds all the data. That's not the way that we work anymore. We're going to be dealing with intellectual property, with funding, potentially with areas like antitrust or data privacy. First person you call in those instances is going to be your lawyer. So lawyer up, guys. In summary, we need to use exponential technologies and work together to solve an exponential crisis and deliver exponential change. The mantra, as always, is people, planet, profit. If you're missing one of those three, you're not doing enough. Go back to the drawing board. There's some good news for those of you who are fans or aware of Moore's law. The technology that we have is only going to get more capable, right? Technology is growing exponentially too. The capacity or the power or the performance of technology is growing exponentially. And we haven't even got into quantum yet. That's coming too. So we're going to have an even stronger arsenal with which to play. And we have demonstrated that some of the largest companies in the world can work together to create instantly scaled global startups. That's an important thing to have proved. So remember, blockchain will not save the planet. You will. And the people you will influence, or the networks that you will create. We do not need any more technology evangelists in 2020. What we need is influencers. And I'm going to leave you with a quote from Davos, a guy called Surya Karki from Nepal, wonderfully wise young man. If we don't take care of our planet, profit will be a useless concept. So as you go back to your organizations and institutions, take with you the triple bottom line of people, planet, profit. Take with you the evidence of what we have been able to achieve in a limited time without focusing too much on the bigger picture. And remember that what we have is only going to get better from a technology perspective, but that we don't have a lot of time. So please, when you leave here today, or when you leave your desk or your comfortable place where you're sitting at home, move quickly for all of our sakes. Thank you.
Thank you, and what a powerful opening for the second day. But I really want to encourage all of you to think very hard about that, because I think everyone in this room, from wherever you come, has the opportunity to take some personal responsibility and use your capacity to influence to make sure that we're not 1 billion times worse off by 2050. So please walk away with that thought from Anthony and think about how you can be part of making this change something transformational, and that we don't, as was suggested to us at our opening, all turn into cyborgs, sitting on our bed with our virtual reality glasses on, getting our universal basic income and pretending that we're something fabulous. So let's not have that future. Let's have a better future and let's all be part of it. So thanks, Anthony. That was a great start. So now I'm really pleased to present our second speaker. I've had the privilege of listening to Ian Dowson every year, twice a year since 2017. He's an extraordinary guy, and he follows what's going on in the global economy better and more thoroughly than anyone I've ever seen. And he's going to do a presentation on following the money. And for those of you who haven't seen Ian, I'm sure you're going to find it quite riveting and very illuminating. Thank you, Ian.
Thank you, Jane, for that brilliant introduction. I'm unworthy. Right, so what I'm going to talk about is looking at the investment trends into blockchain and fintech and what they mean for the future. The very first thing is my legal disclaimer. I apologize. Nothing I say is any kind of investment advice. So what I'm going to talk about, VC and corporate investment in blockchain and crypto, the ICO ecosystem, the backdrop of fintech investment, and then I'm going to take a few speculations for the future. So now on to VC and corporate investment. This is real money invested by corporations or private equity people who are looking for a real return from this technology. So here we have it. So in 2019, $1.8 billion went into blockchain and crypto investments from private equity, compared to the previous year where it was 3.9 million. So it's down by 2 billion, but the number of projects is about the same. What are they invested in? These are the cumulative figures. Payments, infrastructure, it's the building of more efficient blockchains, stable coins, and middleware. Exchanges they've invested in. They invested a lot in hardware, and I don't know whether to do mining, and I don't know whether that investment now is as good as it seemed 5 or 6 years ago. Investing into capital markets, and that's twofold. One, to create capital markets around blockchain and crypto, and secondly, to bring the process improvements of blockchain to existing capital markets. And then you can see the other segments there. This is looking at the 2019 trends. The most popular area for investment was exchanges up on their traditional, the cumulative investment of 13%, a quarter of the money went into exchanges. Payments conformed to the trend, about a quarter of the investment. Digital assets and projects, they're up on the investment trends, whereas coin infrastructure and capital market investment was down. Now, to take on further the illustrations from IBM blockchain. Here at Trade Finance, you have 6 very powerful consortiums. The corporate use of blockchain is there. It is a thing. It is working. It's been proven. It is processing transactions now. And if you look in the left-hand corner, you see TradeLens, which started off as an IBM and Maersk collaboration, but now is processing data, and they're up to 16 million containers. And I come back to that at the end of my talk. Again, looking at the corporate blockchains, they're everywhere. And I think, looking at it globally, something important's happened. Corporates have got digital transformation. They've also got platforms and platformification. They're now starting to understand the power of blockchain to consolidate their whole trading ecosystem. And this is quite a fundamental shift from corporates who had the concept of simply the firm. They're now looking at the whole ecosystem around the firm. And again, every finance company's looked at it. Food seems to be around provenance. Luxury goods seems to be about a combination of provenance and privacy. Manufacturing is around process. And in the computing world, allegedly you can now, from the cloud, spin up a blockchain application in 30 minutes. I'm told reliably you can do that. And Google provides you with all of the data on the most popular coins. The corporate coin world is there. It's big. It's being used. It will supplement and may challenge the swift way of making global payments. The corporates involved here have gone very quiet after the Libra explosion, which I think has really woken up the regulators to the potential disintermediation of using a coin-based system to do the world's payment processing, both for consumers and both in capital markets. So just to summarize, VC investment has been significant in this area, and the popular areas for investment at the moment are exchanges and payments, and the corporate implementation of blockchain. It's real, but it's changing. Large corporates are starting to understand they live in an ecosystem. So the ICO, STO, IEO, and Bitcoin and other coins environment. And is this a new form of economics? There's no single point of anything. And underlying the distributive nature of the data is a self-reinforcing mutual economic behavior. And that's the part which really hasn't locked in my own opinion. Where you have a coin and a business activity, the mutuality between the coin and the business activity as a way of creating economic wealth, we don't have too many examples of that. Here's the roller coaster, month-by-month analysis of ICO investment. You can see it went up to the first quarter of 2018, and it's gone down since then. And by year, this is a bit more understandable that 2018 claimed investment of $15 billion, 2019 down to $3.4 billion. Looking at the mix of the investment, and I've tried to compare two probably incompatible domains. On the right-hand side, you have an analysis of where the investment went from the ICO domain, and on the left-hand side, you have an analysis of where the investment is in tokens which are now being traded. You can see money, DeFi, is 38% in both domains. So money's popular in terms of the investment and what the market values it at. System infrastructure, i.e. better blockchains, stable coins, in the investment sphere, a quarter went in, but over a half of the value in the token market is in system investments. Content and process is higher in the blockchain, in the ICO domain, but lower in the market value domain. In coins and tokens universe, of course, the biggest one, as we all know, is the Bitcoin one. Ethereum 17%, and the other coins are 13%. But the big point I'd like to make is that Bitcoin is still there. Hasn't gone, hasn't died, is still alive. And the other coins are chipping away at the dominance of Bitcoin, but Bitcoin remains the gorilla so far as digital coins are concerned. Looking at the value of the tokens, these are the market value of the tokens. I looked at what I'm trying to get at on this slide is the underlying business activity, the business model of the token world rather than the coin world. And you can see there's the large value coins, large value tokens. You have basic attention token, 400 million, the largest one. You then have two gaming ones, one for privacy, and then an old friend, BitTorrent. Who would have believed it? Back from the dead. And in the smaller tokens, this is where it's more interesting, where you have real-life business activities using coins to create that mutual economic relationship. Currency lending, the liquidity of the cryptocurrency world, now up to 4 billion. Two companies have done 4 billion. DApps, most interesting, they're starting to get a little bit of traction now. If I believe the annualized volume of 61 million a day, that's 22 billion a year. So fintech investment, the backdrop to all of this, 2019 down from 2018, but the reality is when you take China out of these numbers. It's 35% up because China investment reduced by 18 billion. 2018, you had the investment in Ant Financial, that was 14 billion. And China's refocused its investment onto data analytics and blockchain. Loans and payments have taken half of the investment. An investment by region, every region's up with the exception of China. UK fintech investment, as we're in London, spectacular achievement. I'm confounded by this. And probably the UK ecosystem was the largest one in the world for fintech investment last year. And you've got these tremendous companies which have been created over the last 10 years. And the basis of competition, I think, is moving towards ecosystems. And I'll just talk about 3 of the ecosystems. Payment ecosystem, it's red hot, absolutely, in terms of investment, in terms of M&A, in terms of IPO. Every day, there's a new M&A deal being done. Enormous size of deals. And I think this is basically the digitization of money globally is driving this investment. Digital app bank challenges, there's about 50 worldwide, and then 150 neobanks, which bring innovation to banking in terms of experience. APIs, an absolute explosion of financial services APIs you can get. There are 2,000 there, but the largest economic generation of wealth has been providing the layer between the API and the end user, i.e. Plaid was bought for 5 billion by Visa. And what does a digital app bank do is that they create an ecosystem for the customers, and this is an example of how Revolut does it. And digital app banks innovate, and this is an illustration of how Revolut are innovating with cryptocurrency. The emerging world, 13 years ago, Kenya had 4,000 places where you could get money from. Now there are 225 agents where you can take your phone along to and get money. This has led to a boom in investment in African fintechs and a boom in the African ecosystem, tech ecosystem, where you have over 600 tech hubs in Africa. And it's now spilling over into solar power and the provision of individual units of solar power, but it's merging into microgrids. And there's a real problem in creating the energy management of microgrids and the payments, which can be solved by blockchain technologies. Future trends and speculations. So I think in terms of change, you might get a segmentation in 4 areas. Large corporate industries with global chains. Regional change based on money corridors and trade flows. Local chains based upon particular local problems. And then vertical chains, maybe product-based globally, i.e. the provenance of milk globally, and in emerging nations, the provenance of baby milk powder is very, very important. And the control systems, I think you'll have a formal control systems, government or corporate, or the autonomous control systems illustrated by Bitcoin. So when you think about the future, you've got to think about space. Space and the universe is expanding. Space is big, and space is relatively unexplored by humans. And you've also got to think about, when you think about space, you've got to think about science fiction to get imagination from. And what may happen in the future is that chains may become intelligent. Chains may become adaptive. The application of deep learning and artificial intelligence may enable economic chains to be optimized in real time, where you have the combination of artificial intelligence and blockchain. And then you might see the emergence of intelligence, autonomous agents to optimize your position in a chain or a system. And there are a number of investments into that. And then when you get an intelligent chain and intelligent agents, you might see the application of swarm intelligence, i.e. the mathematics behind shoals of fish and flocks of birds to optimize systems. And that's why DeepMind seem to be very interested in the emergence of complex cooperative agents. And then to come back to the example of trade finance, 3 chains there, one chain to move your container around the world, another chain to finance it, and another chain to pay for it. You use the coins to interact between the 3 chains, but the autonomous intelligent agent may optimize your position in each of those chains in real time. However, the real killer app for blockchain, I think, may emerge from celebrity. Here you have Eden Hazard working with All Sports Blockchain. That's Real Madrid, great football team. They won 2-0 against Barcelona. And then you have Barcelona. They're going to be bringing out their own token, probably the largest sports brand globally. And once you tokenize football support, you get an immediate integration between brand, content, celebrity, money, messages, e-commerce, and data. And you also get disciples which are greater than blockchain disciples. They love their football even greater than blockchain disciples love blockchain. And their market cap's 50 million. That may be the killer app that gets broad use of tokens. So in conclusion, I think VCs and PCs private equities will continue to invest in blockchain, very focused. There's a sea change amongst corporates now. They're starting to see the emergence of corporates understanding the economic potential of blockchain and using it as a specific business strategy. DApps are just starting to emerge. An enormous amount of blockchain system architecture has been built, but use cases really have to start to emerge. Fintech investment really will start now to push legacy financial services companies. Blockchain and AI, something powerful may emerge from that. And the killer blockchain app, I would like it to be around privacy and data, but I think it may be around celebrity and sports. Thank you very much for listening to me.
Thank you, Ian, and what a great session and what a great couple of sessions, and I hope that this is making you all really think and reflect and maybe change some of your thoughts about what the future is going to be. But Ian brings a huge amount of detail and research to improve our understanding of what's going on in this ecosystem and world. So thank you for that. So just not wanting to ruin the morning, we've got another really fabulous speaker that we're absolutely delighted is joining us from Taipei, Jay Liang, and he's going to talk about blockchain enabling an all-inclusive economy. So let's welcome Jay. Thank you.
Thank you, Jane. Good morning, everyone. Thanks for Ian's very detailed industrial analysis. I'm going to be more philosophical here. From my own background, like my dress, you can tell I'm a very conservative investor from Wall Street. 20 years ago, 30 years ago, I started my career and spent more than 25 years in the industry. But now I'm actually drifting away from there. I believe that the whole world is controlled by the financial sector. However, the financial sector somehow is manipulating the economy. And somehow technology, as I mentioned here, blockchain as the cutting edge technology is not only a technology innovation, but also a social revolution. And it would enable equal access to financial services, allow extensive sharing of capital, and further disrupt the conventional relationship of production. And let's go back to what's going on here in the world. We know that the economy is mostly financially related, and all the financial transactions has to be done upon trust. And somehow trust is very expensive in the past. And multi-layers of intermediaries are always taking a lot of profits, a lot of money away from the production system. And barriers are very high. It's not accessible for everyone. And somehow for many people who possibly never had any financial service at all. The GDP by country, from small one to big one, and come to GDP by industry, you will see that the financial sector has always been one of the largest industry in every single country. The largest one, US, financial sector is 19%, much larger than we called the so-called big government. The big government is only 13%, and somehow about 50% below the financial sector. And in a medium country, like South Africa, and you can tell the financial sector is still the largest one in the economy. And somehow the profit is always from the capital. Whoever controls the capital, real estate, of course, the most profitable one because they always have the largest amount of capital invested here. And also, of course, the financial sector itself, finance and insurance. That's the second most profitable industry. And barriers to the financial services are very high. Yes, they're making a lot of money, but they are very selective. The financial industry somehow does not allow equal access for every single person on the earth. A lot of people on the earth still has low or very limited financial access there at all. For example, we can tell that in Central Asia, the 49% of people that have very limited financial access. And here in Sub-Saharan Africa, you can tell that 80%. Yes, Ian brought us some good news that mobile banking is thriving there. However, we still have a large amount of population have very limited financial access. And somehow, this is not fair for the world. And of course, blockchain comes into being. We all understand that the blockchain, of course, the killer app is Bitcoin. However, the real mechanism of blockchain is the trust machine. And somehow, blockchain automated the whole trust process. The whole financial service can be allowed more easier to be accessed. And somehow, digital currency, especially, and all those digital currencies are automating the banking service now. With a mobile phone, you have your wallet, and you can download that, and you can use it as a payment, as a cross-border transaction system. And of course, the coin system underneath, Ripple, JPM coin, and Libra, and so on. And a lot of CBDC, central bank digital currencies are also in development process as well. The trust machine enables the whole process, of course. In the old days, if you have your money or you want to pay somebody else, you have to write a check from a bank. The bank has to verify it, and then, of course, talk with the counterparty's bank, and the transaction done through the banks, and then forward to the payee somehow. It's a long process. But in the future, it's not in future, nowadays, we simply use our wallet. It's peer-to-peer, very simple process, and that's authenticated, disintermediary, no more banks there. And that's why all the banks are jumping into the blockchain industry. A lot of corporate blockchains, JPM coins, they are trying to catch up with the trend. The low, they are going to be somehow in trouble. And fully traceable, somehow, and also, of course, encrypted. That's the beauty of the blockchain. And in a way, the banking system is under a major threat from the blockchain. Of course, 3 years ago, you can say, Jamie Dimon said that, hey, Bitcoin is just a fraud. And 2 years ago, he said, I regret saying that. And last year, he said, now, hey, we have our JPM coin. It's a joke, but that's a process. They have to accept the fact. Technology is there to bring disruption to Wall Street. And on the other side, you can say that the technology firms, Libra, it's a big startup for all the central banks last year. And China started their CDBC, it's called the digital currency, DCEP, and somehow due to the virus issue, somehow they delayed the process, but it's already in the experimental payment system in 3 cities, from Shanghai to Shenzhen and to Hangzhou. And we will see a lot more. The big corporations, Walmart, they are doing their own token as well. Not only the banking system, but also the capital market. Capital market somehow is controlled by the rich and the intermediaries as well. Now, possibly everybody knows that the story from, written by Thomas Piketty. The whole world is split in 2 parts. People are making money from their labor, from their service, and people are making money from their capital. The 2 different trends are completely, totally different. The top 1% in the US, their growth of the income every year is higher and higher. On the other side, 50% of the population, the average people, their average wage growth is lower and lower. And this is even worse. You can look at this chart. And somehow, this is from Thomas Piketty's book. That's 21st century, Capitalism of 21st Century. And here, we see the productivity is right in the middle. However, the average household income is much lower than the growth of the productivity. Where the money goes? Of course, the rich guys, whoever control the capital, including the Wall Street professionals. And of course, the center of this whole capital market is a black box. It's called exchange. I like to tell you the story that I personally experienced 25 years ago. At that time, SEC started to revise rules to allow ECN to be incorporated into exchange system. ECN stands for Electronic Communication Network, which means the tech firm can use their own routing system to access the exchange. At the beginning, actually, late 80s, the exchange already had their own electronic system called SuperDot and DOT. And in mid of 90s, you say Island and you also say ARCA. On the left, on that side, on the left side, you say New York Stock Exchange. That's the old black box, built in 1792. And from there on, they started to control of the whole capital market. They decide who can invest and who can come to the investment market to raise money and who can become richer. And that's their role. And they somehow use the membership system to allow very limited amount of people, even amongst the financial professionals, very few. And on this side, you say ARCA. Archipelago is a tech firm founded in 1996. And somehow they use their own ECN to access the whole stock market. And they become automated trading system, open and also connected to almost every single trader on the street. And they become one of the largest trading platforms. From there on, yes, this is a very encouraging story for everyone here. For all the entrepreneurs, that's your dream. In 96, they started their business. And 98, they already become very profitable. And year 2000, somehow they are gradually taking over part of Pacific Stock Exchange, the largest one on the West Coast. And 2005, end of 2005, they took over. They actually had a merger with NYSE. Nowadays, you go to SEC's website, NYSE is no longer called NYSE Exchange. It's called NYSE ARCA Exchange. ARCA name is there. That's one small startup back in 96. They used the technology. The second generation, well, combining with the first generation internet technology, the computer technology there. And somehow they made their way out to buy, to merge with NYSE and relevated NYSE into an automated exchange. No more black box, open, automated, and also totally in cyber cloud. And so the exchange floor is mostly for a show instead of the real trading. And that's the story of the two exchanges, the old one and the youngest one. And of course, technology never stopped there. And nowadays, you know Bucket, BAKKT, and that's kind of like a baby child of the blockchain baby of NYSE. And it's ICE, the parent company, Chairman Jeffrey Pritchard, and his wife, Katie Loeffler's baby. And somehow they became one of the largest Bitcoin future trading platform. And you see that we also have many other people jumping. NASDAQ was founded in 1971 with internet technology. And they tried to disintermediate all they try to cut through all the brokers, bankers, and market makers. And now they are really making their way into blockchain as well. Eraser exchange as well. And in the future, we believe that everything can be tokenized. With AI, IoT, and many other technologies, the world will be a wallet-based, peer-to-peer transactions economy. And capital market will be much simpler, much more direct. And somehow, we believe that a better financial world for everyone with everybody access to financial service and every innovation with access to market, that will happen. And tokenization will be done for sure. We have over 80 trillion, let's see, we have 80 trillion capital market total stock market value and 230 trillion debt and plus 250 trillion real estate, and of course 500 trillion derivatives. All those can be tokenized, and this is a part of the insert from T0, which is one of our portfolio company as well. And of course, here the commodities can also be tokenized, and we have all the commodities there to be tokenized as well. Of course, all the other assets, as I mentioned here, up to 80 trillion equity market, and 230, 220, 15 bond market, and 217 real estate market. And that's the detail of the tokenization. Very simple. End of the day, we'll have a wallet-to-wallet transaction on everything. Not only in the banking transaction, but also the capital market transaction. On one side of the wallet will be the AI to do the recommendation for you, which asset you should pick up to increase your liquidity or take more risk to get a higher return. On the other side, you may also want to sell your assets there as well, and to maximize your profit and to gain the liquidity for your company. The Industrial Revolution, therefore, had to wait for the financial revolution before it could occur. Dr. Hicks said this, and we believe that the revolution is happening, and everyone here, you are part of this. Let's do it. Thank you.
Yeah, thanks very much. And it's just great to have all of these people who are helping us think about how to care better for our world and for the people in it. So continuing on with that theme, our next panel is going to be talking about emerging economies, blockchain and digital innovation. And I'm really delighted to invite Loretta Joseph to come up with her panel that got a bit smaller since I last saw it, but let's make the best of it. They're great, so it's going to be a fabulous panel. Thank you. Just sit here. Yeah.
A rose between two thorns. Oh, no, yes, that's right. Hello. Not a...
I don't think I might go.
No, you're very quiet.
Okay. I have to shout. Can you all hear me?
Oh, you're about to get a mic.
I was going to stand there, but I'm going to break protocol because I think I look stupid. Okay. Morning, everybody. Morning.
Morning.
Okay, there's only a few of you, but let's make a lot of noise. So welcome, thank you for coming. This is going to be a very interesting panel. As Jane said, it's emerging markets, blockchain and digital innovation. Something that's very dear to my heart in the emerging markets. You've got a very interesting group. There's three of us, but I promise you we won't be boring. I do policy and regulation in the emerging world. I have an incubator on the left of me, and I have an infrastructure builder on the right of me. So before we get going, I'm going to let them just introduce yourself, and then I'll talk a little bit about the work, and then we'll get into a bit into the nitty-gritty of the topic in 20 minutes.
Hi, my name is John Kamara. I am the founder for Ada Labs in Kenya. We are a smart technology-driven lab focused around social impact projects with commercial viability underpinned by blockchain solutions. And we focus on consumer mass products within the economies that we work with, agri-tech, fintech, lifestyle, education technology. And the idea for blockchain for us is a multi-layer approach where we first use blockchain for solution development, transparency, security, and then once we've created a community, then we start looking at tokenization. So we actually have real usability for the token projects that we do rather than the other way around.
Okay, I've got, Charles, I think you're mic'd up. So.
I think I'm mic'd up. Yes, hello, I'm Charles Cunningham. I run the Tabber project. The Tabber project is concerned with blockchain as infrastructure. What that means in practice is getting a blockchain that delivers massive transactional throughput. One of the big challenges of blockchain systems, especially public consensus blockchains, is that they have very low transactional throughput rates. Bitcoin does a massive 5 transactions a second, and Ethereum does an even more massive 12 transactions a second. And our approach is to parallelize the consensus algorithm, which allows us to scale linearly. The more processing power you put in, the more throughput you can get, to millions of transactions a second, although we haven't achieved that. We're up to tens of thousands in our labs. My concern with the emerging markets is that a lot of the nations that are emerging, still emerging, are emerging because of government failure, basically. And I'm interested in seeing how and using blockchain to ameliorate some of those government failures. An example of this is that the World Bank estimates, for example, that Western aid to the developing world amounts to about $150 billion a year, of which 3/4 of it goes, or more than 3/4 of it goes direct to governments. But the World Bank also estimates that 1/4 of that money going to governments is stolen by people in government. So blockchain could help with that problem. That's as an example.
Being the moderator, my name is Loretta Joseph. The emerging markets is very dear to my heart. I moved to India with a kid on my own in 2005, one of the largest emerging markets in the world. And in 2010, I'm going to tell you a story about why I decided that technology was very important. So I had a number of people working for me in my house. I was running RBS, a large bank. One of my workers had 11 children. She lived in the slums. Her 13-year-old, who was the middle of them, had to go to work at 13 because they couldn't afford to educate her. Her first day at work, she got raped and murdered by 20 guys. They burnt the body. She had no ID. I couldn't stand up for this kid. I had to bury her. She looked after my little girl. And I remember thinking back in 2010, how does this happen? How does the world happen like this? There has to be a better way. So I got into looking at how we could solve some of the problems of things like ID. So when I discovered blockchain in 2013, I was also a banker. I looked at it not only from the way that we could disintermediate financial markets, immutable, transparent, secure databases, but also how we can now use cases to help some of the fundamental problems that are in the emerging world. So we're an interesting panel. I write policy. I don't know if some of you listened to me yesterday. I wrote the first legislation on digital assets in Bermuda. I consequently work across Africa. I work across Nigeria, Kenya, a number of other African countries. Yesterday there was a landmark decision in India to not ban Bitcoin from the Supreme Court, the biggest democracy on the planet. So I think looking at where digital innovation goes, that was very, very powerful. I sit in Mauritius, which is a tiny little island in the Indian Ocean. But Mauritius opens up and is the gateway to both Africa and India. So I believe if policy and regulations are aligned, we can help this emerging world. And the emerging world is where blockchain and digital innovation actually have the most impact, because everybody has access to a telephone. I think the internet changed everything, and in the emerging world, the access to digital innovation through a telephone is incredibly powerful. It's probably the most powerful thing that we've seen in our lifetimes, and it will continue to, because technology goes across wealth, education, and everybody has access to it. So digital innovation will come, I think, first from the emerging world, because they don't have the legacy systems. It's very hard for me to write policy and change laws in Australia, in the UK, in the US and Europe, because the legacy system is very difficult. But when you're sitting in emerging markets where you have real problems, most people don't have identifications, there's no financial inclusion, sleuth of problems. Technology can leapfrog. And I think India was a perfect example of this, because when I lived there, India, I don't know if anyone's dealt with the Indian government, but they don't answer you on an email ever. Now, the reason that happened was because nobody in any government office had a computer. But the minute the mobile device came in, everybody jumped straight to WhatsApp. Everybody in India will answer you within 30 seconds on a WhatsApp, but they'll never answer you on an email. I was in Madagascar 2 weeks ago. Madagascar is the poorest place in Africa. It has the lowest GDP. It's the highest resource-rich country in Africa, 4th biggest country in the world. 90% of the people live under the poverty line. 95% people have access to a 4G mobile phone. So you look at what the impact of things like blockchain and digital innovation can do in these places. In a country like in the UK, in Britain and in Australia, where 95% of your population are banked, are we going to move fast? Probably not. But when you're looking at some of the other countries in the emerging world where 90 to 95% of the people are not banked, this actually changes economic and social means. So I'm really keen to hear about what you're doing with the entrepreneurs, because the people that are leading this in the emerging world are the young kids. You look at Africa and India, youngest populations in the world, but they also have the hugest customer markets for all of you. We can test markets in these world as long as policy and regulation is good, and we're training entrepreneurs to build systems which they need to build for their countries.
Yeah, I think I grew up in Ireland, so Ireland and London for years before moving back 4 years ago. One of the things that I learned very quickly was the fact that the mass economy market in these emerging communities are ready-made and ripe to innovate very quickly. And the people who drive that innovation are the young people. So we decided to start this lab and specifically focus on mass economy products and be able to then see how, first of all, do we use blockchain to help these entrepreneurs to create a more transparent product, because one of the things that we also struggle with a lot of, we have so much data we're collecting, huge amounts of data. I mean, we build platforms and within a year we have 1 million customers or 2 million customers, which you can't get in the UK or in Ireland. It takes forever. Our cost per acquisition is sometimes as low as 10 cents. So it's a haven for investors. But so first of all, you look at that, then also you look at transparency, who's handling this data. There's young kids as well who are handling this huge amount of data. They build an application, they build a platform. The next day, they have 500,000 customers who are transacting on a payment platform. So okay, we can underpin it using blockchain technology. And then when we look at some of the problems that we want to solve across the ecosystem, so I'll take a specific example of one of the companies in our lab called Ecoba. So one of the key drivers for economies in most African countries is women. And in those women, we go to what we call savings groups. So these women have been existing, same thing in India or any emerging market, for years, saving informally amongst themselves to borrow themselves so that they can survive in the market. And we're talking about millions of women. I mean, Ecoba, this company, they have access to almost 8 million women in one go, just in one country. One country, 8 million women they are going to be talking to. But the savings group is also a functional bank offline, and is also a functional lending association at the same time, but is also a functional economy at the same time. So what we've decided to do with them is, how do you digitize these people, first of all, by using blockchain to provide a lot of transparency and a lot of security around the digitization, because they all have 4G phones, these women. All of them. I was in the Masai Mara and I could use my WhatsApp. So that's how connected it really is in the Mara, which there's nothing. So now you digitize these women. What this Coba guys did, after they digitize the women, then these women are already saving. So each woman saves about $30 a month. So they save $30 a month, each one of them, group of 30 people, then they borrow themselves the money. So that's how they survive in business. Then you have other groups who are much more, even women who have proper jobs and who are a little more technology savvy, save a lot more money. But within this whole ecosystem, they're always looking to find how they borrow money outside, because they never felt they had enough money. But what Ecoba, the entrepreneur, figured out was that if you actually bring this group together and they're transparent, they actually see they don't ever need to borrow money. They can actually borrow money amongst themselves at reduced interest rate within that actual functional groups. But it was because there was no visibility. And when she did an analysis, within the group, every month they transact over $15 million. They just don't know it because they work in silos. So she came up with the idea, I'm going to digitize all these people, show them the value of themselves, give them transparency, then begin to look at the social enterprises that exist within the group. Now I'm going to tokenize that group. Because the user is a merchant, is a customer, and is also somebody who's looking to use. And then off the back of that, because it exists in multiple countries, I will then be able to use the same token to create intra-Africa trade. So the group in another country and the one in this country, they will willingly accept the token in that economy because it's one huge economy. So you have created usability for that, crypto token project out of need and necessity, rather than just creating a great ICO because it sounds good. But there is real usability on day one, because those merchants on the streets will now ask you, how do you want me to pay? You say, pay with my Koba coin. And they will actually take it from you on your phone. You snap your phone, I snap my phone, the Koba coin goes from my phone to your phone, and then that's it. That's it. And it's all recorded on the blockchain. public ledger within that ecosystem. So that is what she's building, and we're incubating her. And I think at the moment they already have signed contracts with almost 500,000 of those groups to test. They've just started. We have another platform, which is Ducare. In 6 months, they've transacted 23 billion shillings worth of transactions, okay, in the retail FMCG space. But again, trying to then tokenize that economy and create value within that economy for the consumers so that they can process money quicker and faster, because processing Kenyan shillings against dollars, against this for those retailers is quite a complex scenario because the central banks. And so again, using that smart token within that economy, they can cross-save money very, very quickly as they're actually processing for all the FMCGs and all the retail manufacturers. And I think last month, they hit 25 billion shillings worth of transactions. They're 6 months old. They have 42,000 retailers on their platform in 6 months. So to acquire these people, because everybody is now going into that, fourth industrial revolution that we're talking about, driven by the mobile phone. The most important thing that's happened in Africa is the mobile phone. And once you understand that the world revolves around that phone, then everything you provide, which is why we see Binance and all these platforms now coming into Africa to begin to look at specific African token economies. And for me, the key objective is not just saying I want to run, at least in Africa, I want to run ICO because there's some really cool stuff I want to do. No. What is the real problem that we're trying to solve? And let us first of all solve that problem on a digital landscape. And once we're able to do that, and we create a proof of value and a proof of use within, you have enough community within that community. And that's how M-Pesa started. Yeah. The last example I'll give you is a brand called OPay in Nigeria. So they basically have their application on the phone, OPay. And what they did, they started we have what we call Okada drivers, border borders. I don't know if anybody's ever heard of that before. It's motorcycle drivers. You get on them and they transport you from one place to the other. So it's like your black cab, but it's motorcycles.
A bit scary.
Yeah, a bit scary, but there's thousands and hundreds and thousands of them. So they went to these guys and they basically said, hey, look, we will take every motorcycle ride. It's a mobility platform they started off with. Every motorcycle ride, we will pay you 5% if you get the consumer to pay with the OPay app. So the motorcycle driver is an acquirer. There's like 100,000 of them. And he's happy. 5% is probably like 30 cents. But to him, it's a shitload of money. Okay? So he's like happy. So he goes to you when you get on the ride. And he says, hey, look, you need to pay me via OPay. I don't accept anything else because I'm getting 5% on top of this ride. Then after that, he says to you, you also get 10% discount if you pay me. So you also download the app. And then you now ask him, how do I fund the app? He said, give me your money. I will actually fund it for you. So he funds your app for you at the same time. So now you're fully funded. Then you integrate your bank and everything. Now you use your OPay app. Then they pay you an interest rate of 5% per month on every money you leave deposited in their application. But they're getting the 17% from the bank. Sorry, real quick. But the objective is that they basically built an economy, and now they're tokenizing an economy of 4.6 million people. Buying a token, the O token, is the only thing you can use. Their ICO is probably going to be one of the largest you've ever seen because the economy is already created. The economy trusts each other, and they're willing to accept the token in that economy.
Yeah, and it's interesting. I spent a lot of time with the man that built the M-Pesa. I spent a lot of time in Kenya, and to me that's one of the best use cases that we saw that came out of digital innovation in someone like Africa. And he was telling me about the last mile, getting that money into the people. Before we had blockchain was a very interesting use case. But getting to your point, women are the people that save. Women are the ones that run households. Giving them the ability, I do a lot of work giving mobile top-ups. If people give their data, we can do it with blockchain that is secure now. Because women, once they have money and you can start to financially make them literate, the first thing they do is educate their children. Their children have access to mobile phones. So if you give them the ability to use the internet, this whole wave of digital innovation in places like Africa and India is so powerful. because it takes people out of poverty. But we're going to move quickly on because we don't have much time left, but blockchain is not the be-all and end-all. I mean, I have to tell you that I think AI, the Internet of Things, and blockchain in these economies will merge together. Blockchain doesn't stand on its own. It's just one part of it. And we still have many problems. We talk about scalability, throughput, interoperability. I'm going to let you talk a little bit about that, Charles, because it's very dear to your heart. But we are solving these problems. 6 years ago, I think we've come a long way. I think the biggest problem that I see in the community is that people come into these countries and goes, it's winner takes all. It's not. We all, across protocols, across each other, across governments, across policy, have to work together. I have this hashtag, collaboration is the new survival, because it's not winner takes all. Ethereum is not the killer protocol. Hyperledger is not the killer. But all of us together can work to make these protocols work better. Bitcoin doesn't scale. We've just had this conversation. Throughput's still an issue if you're looking at things like money transactions. We need scalability, social adoption, and you need institutions to buy into this. So just some quick thoughts on your infrastructure.
Okay, I got a mic.
Sorry.
Yeah, so the projects that have just been spoken about the usability consumer projects are all going to run into a big challenge when they reach full adoption, and that is that the platforms they run on won't be able to process the transactional throughput that they generate. And that's the challenge that we're addressing. So if you think about an economy running on a blockchain, replacing cash, how many transactions that involves. So we've got 1 million people and they will do a transaction a day. That's 1 million transactions a day. The current transactional throughput of cryptocurrency systems at the moment is about 300,000 a day for the world. So you can see there's a bit of an issue there. But it's an issue that we can address now. We've developed techniques for allowing blockchains to scale linearly with processing power. In the past, you used to put a load of processing power onto your blockchain system, and it'll become more secure. And the approach we've taken now allows us to put more processing power, and it will just scale by the amount of processing power you're adding in. And I think that's a really significant step forward. It's a bit like aeroplanes. The aeroplanes started off in 1903 with the Wright brothers and Kitty Hawk moment. But it took until 1950 for the jet engine to be commercialized. And once we had jet engines, we could cross the Atlantic and fly. And that's basically the analogy I like to see with parallelization of the consensus mechanism. It allows us to have massively scalable blockchains to support your type of applications.
So I think we're now out of time. I think the emergence of this emerging technology and digital innovation, which I think we all have to say thank you to Robert Kahn, who built the internet for this, because 35 years ago we wouldn't have been talking about this. The digital innovation is much greater in the emerging world. I do believe myself that you need sensible regulation and policy. I don't believe that a bunch of technologists need to be wandering into Somalia and Uganda and telling the governments how to make regulation, because that doesn't work. There has to be sensible collaboration between policymakers, industry, and the governments. I think there needs to be a will from these emerging markets too to take out the corruption, because a lot of these places are still very corrupt. We have a lot of challenges, but technology is starting to solve it. So I hope we've given you a very broad range of the incubator, the policy, and the scalability and technology issues. It's been a pleasure to moderate the panel with you too. Thank you, Jane. And I hope you all have a really, really interesting day and get some great information out of the next panels.
Thank you so much. Let's give them a big hand. And I just hope that's opened your mind to the incredible possibilities and what's already going on in emerging markets. And John talking about the customer acquisition cost and the speed with which you can bring hundreds of thousands of people onto platforms because it solves problems for them means that these things are moving really fast. So I mean, again, you could do a whole day on that, so I hope it's kind of whetted your appetites and inspired you to think about how these things are happening and how change can really transform people's lives in emerging markets. So I hope you've enjoyed that first session. We're going to break for coffee now. We'll have 30 minutes, so if you could come back at 20 minutes to 12, that would be really great. Thank you very much. Okay. 5 minutes. Everyone please come inside and take your seats. We have our next panel ready to go. Thank you. I'm not announcing it. Just give it a minute. Okay, welcome back, ladies and gentlemen. And for those of you who are having coffee, switch on the live stream because we're going to get started. So a really important conversation that we're now going to be having after coffee break is around blockchain and government. And as many of you know, government have been kind of slow to come to the party, and there are a lot of different efforts to look at how to engage government to think about what blockchain technology can do for citizen services and for efficiency. And I'm really delighted to have the next panel to come, led by Helen Disney, to talk about blockchain and government. So please give them a big hand.
Thank you so much, Jane, for inviting me. I'd like to welcome all of my panel up to take their seats, first of all. So I think one of the reasons why Jane has asked me here is because before my life in blockchain, I spent about 15 years working in think tanks and public policy. And one of the things we did was trying to communicate complicated ideas around policy and get them to become more accessible and get them to a wider audience so that we could effect reform. And what we've been doing over the last year or so with a project called GovChain Research is trying to apply that same technique to how blockchain can be introduced into the public sector and used by government. So we had some great panels yesterday for those that were here, and welcome to everyone who's watching on the live stream, where we talked about the issue of the regulation conundrum and about some of the challenges of creating the right policy framework for how we can encourage blockchain companies to come to different countries. But what we're going to talk about today is actually government themselves using blockchain. So how can the public sector use blockchain? So there are various different examples. It could be something like medical credentialing, so saving doctors and nurses from having to keep redoing their paperwork. It could be different kinds of registries like land registry or vehicle registries. It could be delivering welfare services. It could be a lot of other examples that we're going to hear from the panel. So without going on too much, I'd first of all like to introduce all of my fantastic panel who've all been involved in some way, shape or form, either as service providers in delivering public sector projects in lots of different countries, or in trying to speak to governments about how to do that, or in the policy making process and in sort of mapping what's actually going on. So I'm just going to go down the panel from this direction downwards and just ask Lavin to start by introducing himself and explain a little bit about what he does and how it relates to public sector blockchain.
Thank you. So I'm Levin. I am the director of Thassa Consulting, which is an emerging tech consulting firm focusing mainly on blockchain and crypto assets and looking at the policy implications around that. I used to work for the European Union as an advisor at the Parliament, specialising in this area. And that's actually where I met Helen, and we began discussing that there was a lack of information around a public sector implementation of blockchain and no single one place, and that's when we coordinated also with Cadre to create GovChain, which we had our launch of about 6 months ago now, which maps out across 25 jurisdictions public sector implementation of blockchain. So that's how we kind of came together and make this panel quite relevant.
Hi everyone, my name's Laura Bailey. I'm co-founder of Cadre. So we are a blockchain company that has an underlying blockchain platform built from scratch. So it's the infrastructure layer, and there we build products and services on top of that. I've been involved in the blockchain space now for probably about 6 years. And I also sit on the board of Tech UK and worked with these fantastic people on the GovChain project that I'm sure we'll hear a little bit more about.
Hi everyone, Mohammed Salman Anjum. I'm breathing blockchain for the last 3 years, and as an educator, and now founded one entity in Dubai, and we are like delivering to projects now, implementation of the blockchain for the government side and United Nations body as well. And that's what we do, and that's why we are like, again, as relevant for this panel discussion.
So I guess my first question to all of the panel is, how far have governments actually got in implementing blockchain? You know, are there kind of countries that are the sort of leaders? You know, what is the kind of environment that allows them to do that, or the key factors that have allowed certain countries to push forward faster, and how can we learn from that? So maybe Lavin, you can go first, since we did kind of try to map this out with the project, look at the sort of green kind of adopters, the orange explorers, and the red skeptics. So what were the kind of leading places in your mind once you saw the research?
So one of the things that we had actually seen is that smaller jurisdictions found it a lot easier to implement blockchain services and kind of upgrade their infrastructure to do so. So across Europe, for example, the jurisdictions such as Gibraltar, Estonia, and Malta had implemented such sort of frameworks. For example, in Gibraltar, I'm sure many of you would know that they'd put in place the DLT framework, which attracted a lot of businesses to come and establish themselves in a jurisdiction with that regulatory certainty. But outside of Europe, one of the jurisdictions that we had also seen that had done extremely well was that of the UAE, and actually that's where we had been speaking with Mohammed. So actually, perhaps you would want to talk about some of the stuff from the UAE.
Yes, as you mentioned, small have been very quick. Switzerland is another thing. Singapore, along with the UAE, but UAE is, I believe, not because I'm based there. UAE in a year's time will be leading the use cases for all across the globe, because they are putting 50% of their transactions of government on blockchain. Will yield, actually, we were discussing about the yield or the ROI of blockchain, especially in the government sector. So they have already identified that $5.5 billion each year they will save based on their putting their e-services on blockchain. So that's the worth of one Burj Khalifa, which is the tallest building in the world. So they have calculated the ROI as well per year, and this is what they have done. Now it has a ripple effect in the other Middle East countries. They are now joining in the race of bringing their solutions on, at least doing the POCs and pilot projects for the government e-services on blockchain. I am from Pakistan originally, so that's catching up. We are doing 3 projects there. So going back to the basic of your question, where governments are at the moment, what's the trend, at least they have formed the differentiation. They got the understanding of the differentiation between the cryptocurrencies and the enterprise blockchain solutions, how it can be helpful. Even if they don't like the cryptocurrencies, they have some fears about that, but at least now they have formed this understanding that yes, blockchain for the digital transformation initiatives is very must. So that's, and we are being approached now. 2 years back, we used to knock the doors and we used to go out and at least justify ourselves that we are not crypto guys, we are basically to help you and building up in your process development, digital process development and all that. Now they are asking us, okay, when can we have a meeting? So this is a progress, and this is not just in one region. We see, I travel a lot for different events. It's been happening everywhere. Even Mexico, last month I was there. So there is a strong appetite in governments now for the blockchain.
It's encouraging to hear that. Is that your experience as well, Laura? Because I know Cadre has been, one of the first providers of blockchain kind of POCs in the UK. How do you think things have evolved since those kind of days back in 2015 or so?
Sure. So with a lot of things, I'm going to say it depends. So Cadre, our underlying platform was the first ever blockchain to be used by a government. It was back in 2015 with the Isle of Man government, and it was a registry of companies. So that project was successful, pilot was very positive, however it wasn't taken forward. And I think this is where the barriers, or the hurdles, should I say, come up, which are natural. And it's not just governments, this is corporates as well. So it's the chicken and egg situation, which we were talking about earlier, in terms of comes back to a business case is needed to show how much money can be saved or how can we increase security. And it's great that we're starting to get some figures and things like that, but that along with the distinction, which I agree it's completely progressed now in terms of cryptocurrencies and blockchain, is another area that has slowed things down. However, I think we've got over those, that traction, and it's everything to play for. I mean, Lavin, you were saying that the smaller jurisdictions are doing well and progressing, and I'd agree with that. But at the same time, the information's now out there for it to be grabbed and moved forward with. So, yeah, now is the opportunity.
Yeah, that's the difference between UAE and other governments. They have approached it top-down. The top tier, they recognize the utility of blockchain in their digital transformation initiatives. They calculated the ROI. They have enforced basically their IT departments and different authorities to come up and explore the opportunities or use cases for themselves on blockchain and other emerging technologies as well. So this is the difference between, as we are discussing now, why they didn't follow up, because maybe there was not a top-down approach. So there was an IT department who was willing, maybe the authorities were not willing to take it forward. So that's the difference between the countries who have progressed, Estonia, Singapore, Switzerland, Dubai, they have all approached it in a top-down.
If I could just build on that, I think really interesting point. There is talking about blockchain and talking about blockchain implementation and talking about innovation and talking about what we need to do to solve world problems. And then there's actually investing, doing, trying, breaking, getting things wrong and iterating in that circle. And that's where boxes are ticked if it comes from the top-down approach of we must look into blockchain or we must explore it. It's kind of like we've explored it, tick the box and move on. Whereas actually, like with all things in life, you need to look beyond the initial KPIs and metrics of what are we trying to achieve here, and find the hurdles and smash them out of the water and prove them wrong.
Yeah, I mean, we've obviously identified some key points already. There's the proof of return on investment, so how much is it actually saving, and maybe at the beginning that's just doing things that government already do in a slightly more efficient way, getting rid of paperwork and bureaucracy and cutting costs, but longer term it could also be more innovative ideas that we don't do right now. Political leadership is obviously key, and maybe that's easier in smaller places where there's a sort of stronger pull to bring in business and to bring inward investment and jobs. And obviously there's also the policy environment. So I just wanted to bring Lavin in on this, because one of the things we did with the GovChain research was to try to not just map what was going on, see which countries were doing what, but also recommend changes and sort of identify common success factors. So obviously things like having a sandbox was one kind of identifying area, but also, I mean, what's been quite interesting is things like recent announcements from the US on safe harbor. How do you think that things have progressed since we first launched our recommendations? Do you think that the policy environment is improving?
Yeah, absolutely. And I think actually just to at first address the kind of top-down approach that was spoken about, I think there absolutely needs to be leadership from the top, from the governments to really attract private actors to come and give them the confidence to develop products. But at the same time, there really has to be, which is one of the recommendations that we have on the GovChain report, is public-private partnership, because it can't be government making these decisions on what needs to be done. It really needs to be a strong communication between the two to understand what the potential of the technology is, really identify that, as Laura was saying, and then how this could be implemented to really benefit the citizen, which is the core focus of the government. And so this is actually one of the things that I think has been done very well across the EU. In 2017, the European Parliament did a report on virtual currencies, which had then recommended that the EU set up the EU Blockchain Observatory, which looked at use cases for blockchain, where it could potentially be useful for public services and for social good as well. And actually it goes to Mohammed's point as well. This actually first of all started as a virtual currencies report, which then quickly transitioned to actually the technology. Distributed ledger technology is actually the real winner here of how we could use this in public services. So I think where we are in a policy space now is actually really interesting, because we're now seeing great movement from the European perspective, putting out a consultation paper on a European digital strategy, announcements earlier this week on the European blockchain service infrastructure, with nodes across Europe going live. And as Helen was saying as well, even from the US perspective now, there's a change in narrative from perhaps taking quite a stringent approach to this technology and crypto assets to SEC Commissioner Hester Peirce's safe harbor proposal, which is actually identifying yet again another GovChain recommendation of let's not kill these projects very early, give them some time to mature and to develop. So as per the safe harbor proposal, a 3-year period to see how a token matures gives companies a bit of good faith to be able to establish themselves in the market. And I think that's an approach that's been taken that I think is really positive, and a positive trend that we've seen.
Yeah, that's what we believe, that 2020 is the year for showing blockchain, not telling about blockchain. And the use cases, platforms like GovChain can take it forward and bring it into the public and also into the decision makers, like on table of the decision makers, that this is what have been contributed by blockchain in this particular vertical of government, and of course in that vertical, in that region, in that authority. So once they will have around 100+ cases to see, their confidence of testing or even implementing it will be far more greater. So I'm very confident 2020, like there are many players in different regions bringing up the showcasing the blockchain solutions, not just telling in the events about the use cases of the blockchain that it can do for healthcare in this thing, or it can do this, it can do that. It is doing this. That's what we are getting out of the blockchain, and that's, I think, will be the next year we will see a lot of adoption in the governments.
Yeah, I mean, I was really encouraged to see, when we were speaking in the panel prep about the different examples of use cases that you're working on in the different countries. So I think just the ones that you mentioned to me on the phone, this land registry, aircraft and aviation regulation, government document management, lots of different examples in different countries, Canada, Pakistan, Montenegro. So, already since we did our last research, there are new examples coming of different use cases, but also different countries that are starting to adopt, which is really encouraging. And I think the other factor is the more collaborative approach to regulation. So it's not just, as you say, that regulation is something that comes top down from policymakers that they sort of do to us as blockchain companies, but it's something that we work out together. What is the best approach that will facilitate innovation, but also ensure consumer protection and ensure that we don't get fraud and we don't get, things going wrong with people's money when we're talking about completely changing the way we handle digital assets and things like that. So it's a very interesting time. And I want to just come on to the issue of data management, because one of the things that was referenced in the panel sort of description was hacking and leaks of data. So obviously blockchain has some elements that could allow us perhaps to keep data more securely and to, as governments, to manage all the data that we hold. How do you think that blockchain is going to change that relationship between the sort of citizens' data and the way that government manages that? I know you're working on a few projects on that, so maybe you can kick off.
Yeah, that's what we identified. What is the real value of enterprise blockchain solutions, especially for the governments? It's basically the security of the data, which is the primary, paramount kind of importance for them. And we are not touching how we are different than other companies or other entities. We are not touching the functional layer. They already have invested millions of dollars on their Oracles, Microsofts, and XYZ. We are not touching that. In fact, we are additionally giving them a value by bringing a blockchain layer to give the integrity to their data and the workflow. That's what they are basically missing. Because of the centralized systems they already have, yes, there is one DBA pilferage can do any damage to any government authorities' record keeping. So with the help of distributed architecture in that existing setup of IT, you can help them. And this is our way forward in all these 6-7 projects which we were doing. Not touching the functional layer, just giving additional value to their data layer, to their validation of data, and plus the process flow. This will take them to the next level, and they will come on to the distributed architecture altogether. So currently it's a hybrid approach. You can offer them just additional value of blockchain, and that will bring them to taking it forward in the gradual manner.
I mean, Laura, what's your experience on that front? I think that's quite an interesting point, that you're not sort of attacking the existing systems. You're trying to offer an additional service that maybe improves on what's already there.
I think you articulated it perfectly. Blockchain, maybe even 2 years ago, was sold as the answer to all problems. It's an enabler to progress things in a very powerful way. And that's probably what I didn't articulate that well when I was speaking a couple of minutes ago, in terms of when you come up with hurdles and problems in projects and life, you've just got to solve them, right? Sounds easy, obviously it's not. But blockchain enables you to do that because it's exceptionally modular in terms of it's not one blockchain fits all or one distributed ledger. It comes back to the integration piece. And we were talking earlier about the chicken and egg comes back again, because we know that blockchain has the opportunity and the ability to save a significant amount of funds in every part of the economy and increase security. But you've got to enable a blockchain, the blockchain, whichever you want to use, to connect with existing systems so that they can help fix or improve the issues that are happening at the moment. So it really is an enabler and answer to increase security. Now, again, there's ways that it can be done wrong. And it does come back to the architecture and the decisions that are made at the human level. So I think technology's there. It's about human pushing it forward in the right way with the right thoughts and morals in mind.
Okay, well, I think that's a very kind of clear framework for people to kind of understand how they could approach that. We've only got a few minutes left, so I wanted to close by just asking each of the panel, I mean, you all meet with policymakers at high levels on a regular basis. What's the one thing you want to say to them about why should government really care about and be implementing blockchain? Maybe Lavin can start.
I'd say current government services are not fit for purpose. They are not efficient, and blockchain offers the opportunity, a solution. It is an enabler, as Laura was saying, to provide better services for citizens. If we just look at for example, the distribution of welfare at the moment, the kind of loops and the hoops that people have to jump through to be able to get their welfare payments is inefficient and often leads to people being either underpaid or for the system to be gamed. Actually, if we implement technology such as blockchain into this to provide more connected services, we can give one easy and efficient distribution of welfare, but also accurate distribution of welfare as well.
So I would say think about the bigger picture and take a step back. World problems that we're dealing with at the moment, and links into the next panel, I believe, sustainability. Blockchain really can help solve these problems. It can help decrease corruption, increase security, and make us more accountable for exactly the decisions and the actions that we're making. So it draws a lot together.
I agree with both these points, efficiency and the thing which we just mentioned. But the most important point for any government, any authority of government, is the trust. And blockchain is really bringing that trust to their services and their efficiency as well. So this is one area where when they understand, okay, if we provide our services on blockchain platform, people will trust us more. In fact, they will start trusting us. Basically, in their third world countries, this is the biggest deficiency factor on the governments and e-services provided by the governments. So putting the land records on blockchain, putting the birth records on blockchain, it gives them the trust factor, which is missing in those parts of the world. And blockchain is an enabler. And that's what I think is an easy selling point now these days for blockchain for the governments.
Yeah, all fantastic points. I think we can see many, many reasons. I mean, often when governments look at sort of policy to attract innovation, they're thinking about, we want to create the right conditions to bring companies here so we have the jobs of the future and we have the economic impact, but it's also about a tool that they can actually use to deliver their own services to citizens and to solve bigger social and economic goals, whether it's climate related or something like false information, thinking about our current public health crisis, coronavirus, and I know a company recently that's just implemented coronavirus tracker on distributed ledger just to be able to have accurate information on cases that are appearing around the world and make sure that governments aren't covering up information about the cases that are being discovered. So there's many, many reasons why this technology is going to be fundamental to our society, and just like to close by thanking a fantastic panel. If you want to find out more about GovChain, the website is govchain.world, and there's also a few of the pamphlets outside on the front desk, so if you haven't seen it and you want to pick up that little leaflet that summarizes the research, then please do help yourselves to a copy. But thank you very much to all my panel for a great discussion. And I look forward to, I'm staying on the next panel, so you're going to have to hear from me again to hear about sustainable finance. But thank you so much to my group.
Thanks, guys. Are you taking that with you? Okay, thank you very much. And that's really cutting-edge research that they're talking about. So now we're moving on to our next panel, and we've got a big thank you to Global Development Finance for supporting this, and Abdul Hasib Basit for being the moderator. And they're going to be talking about Unlocking the Potential of Blockchain-Powered Sustainable Finance, aka Can Blockchain, hashtag Be More Greta. What a great topic. Okay, can blockchain be more Greta, powered by global digital finance? So please welcome to the stage.
Thanks very much. Can I ask my panelists to join me on stage while I introduce the topic? Thanks very much to FinTech Worldwide for having us. Just a brief intro into global digital finance. We are a not-for-profit membership association representing the digital asset space. We have developed codes of conduct for digital assets and crypto assets. To date, we've developed 9 codes of conduct, which have been adopted by over 70 companies. We work with global regulators and a global community of 200 firms in the space. We're also developing more codes of conduct. One of the areas that we are addressing is sustainable finance. I'm really pleased to have such a great panel assembled. Helen, well done for soldiering on back-to-back panels. But let's just go down the line briefly. Brief introductions, a minute each, and then we'll kick into the discussion. Richard, do you want to go first?
Yeah, hi, Richard Pears. I was at Microsoft for about 23 years in the Global Financial Services Strategy team. Set up my own business called Responsible Risk recently, and I'm contributing editor at Finextra on their Sustainable Finance channel.
My name is Jamila Noor. I'm a technologist by training and by profession. I've spent the last 10 years working in technology within the financial services and the energy and commodity sector, implementing, supporting, working throughout the whole software lifecycle. And I'm also here representing RFI Foundation, where I'm an advisor on the tech committee for the CDIT initiative.
And many of you have guessed that's not Lawrence Wintermeyer, so apologies for the graphic error. Nicole?
Hi, good afternoon everyone. Nicole Anderson. I am founder and managing partner of the Red Sand Group. We are essentially a venture studio and soon to be investors in the area of green and impact fintech. So we have spent the last 8 years developing and spinning out ventures on behalf of institutions that are either focused on the green agenda or that have true impact, predominantly, obviously, within the financial inclusion space.
Thank you, Nicole. And I've seen some of the projects that Nicole's been working with, which are very, very interesting in how you can use blockchain to drive forward more sustainable goals. So it's a fascinating area. You heard from me on the previous panel about GovChain. My sort of day job is I run a platform called Unblocked, which is about educating executives on blockchain and holding events and providing more information about what projects are doing. And one of the areas we have looked into is energy and environmental impact and how blockchain and tokenization can be used to drive forward those goals and lead to a more sustainable future. So looking forward to hearing from the whole panel on that.
Thank you very much. So sustainable finance, I guess since Davos this year has been very topical, as well as with the intersection of discussions around climate change and climate responsibility. But when we talk about sustainable finance within the context of fintech and digital assets, Richard, can I turn to you to just give us a sense of what that encompasses?
Yeah, I think that what we're talking about just broadly is how do you unlock the world's capital and make it available to projects that are going to do things, under the heading of the UN SDGs or climate agenda. And the problem fundamentally is traceability and data in terms of actually building those assets, funds and portfolios. So when you look at it in the context of the way it's done today, it's largely done through self-reporting, and there's all sorts of associated greenwashing problems associated with that. So when you come to blockchain, the promise is that you're able to get provenance of the data and the asset all the way through the supply chain, which then is able to much better inform the portfolios that are being created. And one example of that, although not perfect in its use case, but I think it's quite well written up, so you can go and look at it afterwards, is an organization called MineHub. And MineHub is in the minerals extraction business, which is why it's not a great example of a sustainable business, because it is fundamentally extractive and carbon creating.
But nonetheless, we use those things in the world, and other practices around corruption and process and human capital, etc., can be improved enormously to make it more sustainable. And MineHub is using blockchain from IBM to actually build a process by which all of the well-stated benefits of blockchain have come into place. But then they're also looking to actually create an STO so that as it sits within that chain, that there's the ability to able to get investment. And one of the areas around is around royalty, which is a standard piece of investment within the minerals business, where fundamentally, you say I've discovered gold, if you will, and so you need the investment to actually go and actually dig that out of the ground. So that royalty is being turned into an STO so that they can get the investment at the early stage and move that through the process. Now, all of this is just sort of one example in this area.
So in that context, what does the application of a security token offer to that process?
So essentially, the way that's happening is because of climate change and SDGs, etc., the investment in the minerals business is going down. So they're not actually getting it through the traditional mechanisms. And there are also many associated inefficiencies in the traditional process. So what this is allowing is more of the sort of PE market to actually get involved and invest in this so that these investments can go on. So as I say, it's got a kind of double-sided coin to it, right? So you're driving down through investment pressure, in perhaps practices which are socially unacceptable, and this is giving them another way to actually get access to capital. But there's a greater transparency in it all, hopefully therefore better governance. And if you look at the fundamental thing of a Tesla, right? So a Tesla is a car that people will invest in because they think it's green, and on the consumer you'll get a green loan. But on the other hand, if you're looking at it as a share, then it might well be measured by ESG quite low because it's actually using lithium ion and cobalt. Now, if you can trace that cobalt to a well-managed business, then actually you drive up its ESG pricing. So it's a very complex mix of variables, and this is just one piece of quality validation that might actually come into that market.
Thank you. So Richard's touched on some of the inherent challenges in this space, and Jamila, you're working with the RFI Foundation, which as another not-for-profit focused in this area, have been looking at some of these issues around provenance and traceability. Can you talk a little bit about what the CEDA initiative is that RFI Foundation has launched and how you see that evolving?
So yeah, it came about a couple of years ago from a round table, and it was really about how we can kind of rebuild trust in the civic society with financial institutions and around sustainable/responsible finance. And this initiative is really to kind of build and improve that relationship, so making certain organizations hopefully accountable, so ideally putting down the kind of commitments they have in terms of responsible finance and having the public and civil society kind of review them and rate them in the sense of what they've actually carried out. So it's still in early stages, and we're looking at how we can find the right organizations to partner with and to help build this system out. And yeah, so it's essentially kind of, I suppose you can kind of say it's like TripAdvisor, but for financial institutions.
And so within that framework, then what's the role of the blockchain? Is it mainly to make that claim that the organization has set out upfront immutable, and so that it can't be altered when it comes to reporting on it?
Yes, exactly. So making it accountable and it's easier to trace, so it can't be tampered with. And I think that's the only way we're kind of going to get to rebuild the trust with the public.
Thank you. Nicole, if I can turn to you now. We've heard about some of the challenges that we're trying to overcome here. And with your aspiration of launching a fund in this space, what are some of the things that you're looking for as signals for blockchain to become more mainstream or help sustainable finance generally become more mainstream? Sure.
So, I mean, if we just step back slightly and we look at the fact and the real huge dilemma that is facing the global financial industry in this transition, right? This decade of transition in order to meet the aspirations of the Paris Agreement. Finance fuels the world. Finance is the biggest catalyst for industry. And if you look down just that value chain to consumers, consumers are everywhere, very aware of environmental and social issues, and they live them daily. But without choice in what they consume, and that's provided by industry, they have very little ability to act. So finance and financial services is the connective tissue and the catalyst for change, and yet the industry as a whole is grappling desperately with how they can upskill and how they can enable industry. So we heard this morning a little bit about the fact that, you know, we're now living in a much more connected world. You know, the transition and the responsibility between big institutional flows of capital and industry are more connected than ever before in this coming decade. So, how do solutions like blockchain and blockchain not, I don't believe alone is obviously the panacea, we know that. But it's, as Richard says, the only way to accelerate this transition is to have greater transparency. Greater transparency in how capital is allocated, where it should be allocated, where it shouldn't be allocated, and also to find, you know, new opportunities, new commercial entities, new commercial markets that are viable and could assist or accelerate the transition. So I think blockchain is an amazing, in and of itself, an amazing enabler to enable that transparency. So if I give you an example of one of the use cases, I've worked in a few use cases, but using blockchain in the Nordics, so Helen and Richard know about some of this, but we've been involved in actually unlocking capital using essentially an Ethereum-based engine for the real estate market in Norway and Sweden to create greater access for investors to be able to participate in an asset class that is, number one, opaque for most investors, you know, professional and certainly consumers, very costly. To you know, even enter into the investment cycle. And then also the tenure of return is incredibly long. But blockchain and our solution and this particular use case has enabled much more fluency and much more liquidity, as you'd expect, and much more inclusion, right? So that's one example. Another example of unlocking capital is the use of tokenization in supply chains. And the shorter the supply chain, the better, but generally, in some of these capital-intensive industries, supply chains are incredibly complex and incredibly opaque. And the fusion of blockchain, IoT, and of course, you know, any data, ESG tech, as Richard has coined the phrase, is incredibly useful. And I believe any investor, any institutional investor cannot claim to be anywhere near impact if they cannot hand on heart be able to trace every dollar, every euro, every pound to the source and continue monitoring that capital. And that is an immense challenge.
Thank you. So we've heard about some of the challenges. We've heard about what the industry itself is doing to help overcome those. Helen, if I can ask you, with your sort of GovChain hat on, what role does government really need to play in expediting all of this? We heard in the last panel what they can do themselves for their own purposes, but what does government need to do for wider industry?
I think it's really interesting because we've kind of heard three sort of examples of what blockchain could be in relation to this. You know, blockchain could be green in the sense that it just provides efficiencies in supply chains or in business processes which make them more sustainable because we're getting rid of waste and paperwork. blockchain can be kind of a trust machine, which is what the Economist called it, which is, being able to know where things are coming from, how money's being spent, and prevent, the greenwashing and those kind of issues, or just sourcing more sustainable goods and services, and preventing some of the more environmentally damaging practices that go on. But it can also be sort of this incentive machine for actually, money talks. It's what drives us all to fund our businesses, to get a job, to spend our money in particular ways. But we can now talk to money with blockchain, right? So we can tell our money what to do. If you have a digital asset and you have a smart contract, you can essentially embed priorities and incentives within the money itself. So I think that's what's really interesting. So government can have a role, I think, in creating the right incentive structure for that to happen. So that could be, creating, a better policy environment for blockchain businesses and digital assets to have a clear signal from the regulators that they're open for that business in this country or in other countries. But could it also be, we have green finance strategies and so on. Does that really kind of sit in a wider context of innovation, or is it just sort of seen as a standalone thing? Because quite often policymakers put things in all these different silos. So, they'll do a green finance strategy and they'll say, right, we've got to meet these environmental and social goals, but they don't really see that blockchain could be a big piece of allowing them to actually deliver that strategy. So they're not linking that kind of policy framework and the people that have those discussions with people in the technology world. So I think if you could bring those different groups of expertise together, blockchain and digital asset companies could be a key part of delivering that strategy, which, is a big government priority, but maybe they're not really involved in a lot of those discussions. I know some people here are, but, the wider community is not. And certainly investors that I've spoken to have said, we really want to invest in blockchain businesses because we can actually see this as a way for us to meet our goals of impact investing. It's not only that we like those companies and we think they're good for the world, but it actually allows us to be compliant with the things that we're trying to do. So it gives us this really clear way to actually get the data and prove that what we're doing is valid and not just something that we've sort of tried to create new processes for that we can't really audit and prove in a clear way and have the clear data to show that we've done what we said we were going to do.
Thank you. We've got a few minutes left. I'm going to open up to audience questions because I've got more, but I'd like to give you the chance to ask the panel some questions. Anyone got any burning questions they want to ask? No hands. Okay.
I have one for Nicole, actually, which is, in creating this fund, is that where the demand is coming from? Is it investors themselves saying that they really want these products? Because it seems to be that, many, certainly, especially a younger generation of investors, particularly, people that I speak to in the kind of cryptocurrency and blockchain world, they really do care about these issues and they would like to be able to put their money in places that support those kind of goals. Is that where the demand is coming from, or is it coming from the institutional side just because of kind of regulatory and compliance issues?
If I'm honest, I think there's part a tailwind, which, it's timing, so very fortuitously. It hasn't happened often in my life, but it's happening now. Mainly because of the project work we've done in building ventures that have had direct impact. For all our ventures, we've either seeded them ourselves and invested directly or gone on to secure other investors. So there's always been a community of investors we've worked in that have known and believed in our ability to execute. But I've been more and more drawn from social impact to more environmental impact in my work. And there, the piles of money have just got bigger. The problems have become more connected. And there, obviously, and then you have this overlay of huge amount of I guess, scrutiny and challenge of, all right, how do we unlock this capital? So that I basically brought that together and said, right, if there's ever a time to look at spearheading innovation in finance, this is the new wave of fintech. And I'm fintech through and through, for good or for bad. And I just think this, I've been able to stand on any soapbox that anyone has been able to give me and said, this is the next innovation wave, and it's a different friction point, because with financial technology innovation of the last 10 years, in the main, 80% of that has been spearheaded by retail investors or the person in the street, right? The inclusion, the exclusion, the credit crisis. Now, the friction point is big pockets of money, so institutional challenge of being able to deploy capital is a massive issue, and then you link that to the regulatory fluidity, which is another opportunity for innovation, always has been. RegTech is a big segment, and you bring these two forces together, and if they don't get it right, we're basically going to starve industry of capital. So putting all that together, that's the thesis for the investment, our investment thesis and our fund structure.
So then I guess a follow-up to that, there may be people in the audience who are from financial services firms who are not necessarily blockchain enabled or haven't really thought about the sustainability of their business. As they seek to address this space, what are the things they should be looking at? Now, obviously GDF has an aspiration to be a starting point for that with some of the codes of conduct we've produced around how you issue a tokenized security, for example. What else do companies need to be looking at, especially on the sustainable side? I don't know, Richard, if you want to maybe address
I think one of the challenges that it always comes back to, again, it's back per the example that I gave on MineHub. But the problem with that is, although it's kind of an interesting example, it's a particular set of technology, it's a particular consortium, and it's all sort of private and permissioned, which is needed, for the private data which is being exchanged between those organizations. But if you do want to sort of move to the world that we're hearing about from Nicole, where kind of the world's capital is going to get allocated, then there needs to be more transparency. And the speed with which it will take to get the technology in that example to move across every industry and every scenario so that the FTSE could build an index which it believes is universal based on that kind of set of truths is very limited if we're doing that kind of consortia permissioned approach. So, I mean, the sort of things that I'm interested in, I don't know if it's the answer, but I'm interested in this sort of baseline protocol, which I don't know if you've heard about, from Microsoft, EY, Ethereum, Consensus, and so forth, where they're sort of saying, well, maybe we move away from blockchain just being where the record is held, but actually to becoming more of middleware. And that makes some sense to me, because then you can actually interoperate better with all of the existing technologies, diverse as they are around the world, and then you can start to use its strengths, but also within the existing weaknesses of an incumbent market. But then you should get transparency much more rapidly into deliver these sort of solutions that we're looking for. So I would say look to blockchain not just as it is today as the panacea, but actually what it delivers and what it can deliver in its next, perhaps incarnations.
So we are running out of time, but just briefly have one more question for each of the panelists. Actually, two. Firstly, if we're convening here in a year's time, Blockchain 2021, Blockchain Week 2021, where do you hope this space will have moved to? And if the audience want to find out more about what you do, perhaps Jamila get involved in Seed It, how can they find out more? Richard, can we start with you and go down the line? Yeah,
from my point of view, I just hope we'll have some really good more case studies which really show to people the art of the possible. So simple as that. And then where can you find more? I think the best place about me is to go to Finextra/Sustainable. We're building out a channel of video research, editorial, interviews, and we hope to showcase some good examples there.
I think in 10 years' time, as Richard said, we'll probably have real-life examples and use cases of where blockchain has been successfully implemented, because as everyone knows, it's at early stages at the moment. And to find out more about Seed It, RFI Foundation have a website, and you can also reach out to me on LinkedIn or connect to Blake Good, who's the CEO of the foundation, can provide more information on how to get involved.
Did you say a year or 10 years?
A year.
Okay, all right. So in a year's time, look, I think I back up what Richard has said. I I think it'd be very interesting to see how blockchain becomes infused to drive some of the normalization of standards, right? Because we desperately need that in this new world of sustainable finance. I hope I'm not going to be, banged over the head as I walk out today, but I always talk about ESG is incredibly, we should be living and breathing it, but ESG scoring is a little white lie that the entire industry is perpetuating. And I think blockchain has an amazing opportunity to actually normalize the disparity of scoring, both private and public companies. And I don't know if that could be done in a year, but no, I doubt it. But, on our way there. To find out more about me, just look us up, the Red Sand Group. And I'm Nicole Anderson. Look, I'm on LinkedIn. Yeah.
I think a year is sort of both a long time in politics and a short time in policy making, so I doubt a huge amount will change in a year, but I would like to see sustainability more included in every aspect of policy making, and I think as far as blockchain goes, there are specific things that could be done, incentivizing sustainable blockchain projects into sandboxes, things like that, widening the criteria for looking at how some of these technologies are included in different policy-making areas so that you don't just have these kind of, well, that's environmental policy and this is innovation policy, but actually these two things should be joined up. So I would like to see more of that. You can find out more about me at Unblocked Events on Twitter. Also on our website we have all the materials from an event we did called Energy Unblocked, where we looked at various projects like this, which are using tokens to incentivize use of renewable energy, or actually MineHub were at our supply chain event back in September. So there are lots of videos and resources you can find there if you want to learn more about sustainable blockchain projects.
Thank you. That's our time up. Thank you very much to a fantastic panel. Thank you for your attention. Just finally, you can find me on Twitter and LinkedIn, and if you want to find out more about GDF, we're at gdf.io. And we do have an open call for input for Sustainable Finance Working Group. So if you'd like to get involved in that, please get in touch. Thank you very much.
Thank you very much. And of course, that issue of sustainable finance is becoming more and more and more important, and we're going to see more, and we need to demand more. But now, our final session before lunch, I'm absolutely delighted to welcome my friend and my colleague, world-renowned futurist and thought leader in blockchain and fintech, and from Oxford and MIT, and someone who I don't think he must sleep because he's continuously publishing something. So thank you, and let's welcome David Schreier. But David, before he comes up, is going to talk about dirty data and contaminated blockchain. So big hand for David. Thank you.
Thank you. Thank you, Jane, and thank you all for soldiering on in this interesting times that we're living in. So I thought it would be kind of cool to talk before lunch about the things people don't like to talk about. And by the way, if you hear my throat is a little hoarse, don't worry, it's not COVID-19. I took the red eye in and then went to a noisy restaurant, and anyone who knows me knows how much I like to talk. And so I was trying to be heard by my friends across the table, and that unfortunately is the result. So today I will do my best to project, but bear with. So our talk will focus on dirty data, right? Blockchain is a database. It's got all sorts of interesting features. You all know about this. We've been talking about this all day and yesterday. But things that people don't tend to talk about so much are how do we make sure the data getting into our blockchain is the data we want? And so that's what I'll talk about today. We're living in a world of enormous amounts of data, right? We're presently looking at 44 zettabytes of data that have been generated just in the last few years. And to give you an idea of how big 44 zettabytes of data is, if we printed out that data into book form and we stacked the book, one on top of the other, we would make 10 round, we have 10 journeys to the sun, 5 round trips. That's how big 44 zettabytes of data is. A lot of the people who touch and manufacture and govern this data are the FANGs and the BATs. Right? These data oligopolies have arisen. So we know them as Facebook, Amazon, Netflix, Google, and Baidu, Alibaba, Tencent. Some might throw Apple and Microsoft into that mix. But the point is, there's a very limited number of these organizations, and they've got their hands on a lot of this data. However, there is some good news that within the past few years, government policymakers have stepped in and liberated your data from the FANGs and the BATs. Okay, great. Open banking, PSD2, GDPR, CCPA is the California Consumer Protection Act. So we've got now a body of emergent regulation that's propagating across the world that's liberating your data from the FANGs and the BATs. And some of this data is finding its way into distributed ledgers. Right? One of the exciting things is seeing how we can take that static data and make it more dynamic and interactive. We can begin to attribute value to various things that previously were sort of difficult to keep track of and remove all the middlemen, okay? Very exciting. But, to quote Apollo 13, Houston, we have a problem. These are the 4 horsemen of dirty data. All right? The first one is data decay. How many of you work with consumer data? Anyone? Anyone? Okay, we have a few. If you take someone's name and address down, how many of you work with small business data? Okay, so let's call it half of you work with either consumer or small business data. That data gets stale. It ages around things like name and address, 20 to 30% a year. Within a few years, your database is obsolete. You've got to refresh it. Now we put it on a blockchain, it's there forever. What do? Okay, that's data decay. Unfortunately, a lot of data that gets put into these databases is inaccurate. It's incorrect data. Right? I signed up for what's called a DUNS number. Right? You go to Dun & Bradstreet, which has a monopoly on small business credit information, and they issue you a unique number for your small business. So my consulting company, Visionary Future, fill it out. Well, when they keyed in the information to set me up with my DUNS number, they put me in as Visionary Few True, which is sort of an interesting name for a company, but it's not the name of my company. Getting it fixed was awful. Now imagine we put that in an immutable ledger. Okay, so incorrect data. What's worse is if people make up things, fake news, false information, and they put it into a database, right? Malicious data, deliberately incorrect data. That also is contaminating our data stream. In fact, there are large-scale state-sponsored efforts to deliberately contaminate our data stream. Things like voter registries are getting messed with. And finally, synthetic identity theft, right? I'm going to take your legitimate data and attach it to the wrong person. It's crap, and now thanks to distributed ledger, it's immutable crap, to quote a senior financial services executive. Or if we want to be a little more polite, it's rubbish. Okay, so now we've got this permanent rubbish thanks to the 4 horsemen of dirty data. What do? We've got to be able to do something about this. Well, not unlike what we're all being told now to do, you got to wash your hands. You got to clean your data, engage in data hygiene. Data hygiene is not a new idea. All right? My second job out of college. My first job out of college was working off-Broadway doing theater. But my second job out of college was working in a big Wall Street investment bank in their data department running database systems. And data hygiene was a core part of my job. It's not very exciting, but it's necessary to make everything else go. And so we need better data hygiene. What is better data hygiene? Well, you want to audit your data and take a look at the 5 R's as part of putting together your good data hygiene strategy. The 5 R's are relevancy, recency, range, robustness, and reliability. You'll notice some of this applies to things like, is my data quality good in terms of, is it correct or not? And others relate to, is my data quality good in terms of whether or not it'll let me do what I'm trying to do? But taken together, this ensures you have good data quality. So, relevancy, is it the right data? Recency, how fresh is the data, or has it decayed? Some data stays the same forever, other data changes very rapidly, a lot of it's in between. Right? The range, right? What's the scope of the data? If you're doing a census or voter registry and you only capture half of the population, you've failed in terms of range for your data. The robustness, what is the signal to noise ratio? A lot of that 44 zettabytes of data that I was talking about earlier is noise. Can we extract the most important data and put that into, let's say, immutable records? We don't need to keep track of all the noise other than to know that it exists and avoid it. And finally, how accurate is the data, right? Did we get either accidentally wrong data or deliberately wrong data entering our system? And a data audit, when you have someone come and look at your data to make sure that it's been set up correctly, will look at these 5 R's. Convergence is your friend, okay? We bring together not just DLT, but also AI and big data analytics. And these are tools which can help make your data quality better, have better data hygiene, clean data, not dirty data, right? Imagine you put an AI filter in front of your data before it makes its way into the distributed ledger. And it is very good practice that every 6 to 12 months you do a data audit. You have a third-party firm come in and check your data in terms of your data architecture, your data scheme, and maybe they'll sample some of the data to make sure that we've been able to keep good hygiene. It's just like going to the dentist every 6 to 12 months. You want to have your data checked because bias, for example, can enter into financial databases very easily if you haven't audited your algorithms. And that's the other thing. Your audit is not only about the data, but about the things touching the data that put it into your immutable record. There's one very large financial institution that adopted an algorithmic lending program, and they were very excited because their loan losses went down, and it was all very good until they did the tech audit of their algorithm, and they discovered that the AI had taught itself to discriminate against poor people. Good practice to audit what you're doing. Okay, so the prescription for better data, because we all want better data here, right? First of all, the conversation we just had now is a level of data literacy that most of the people you work with don't have. So helping people get better educated about what issues can creep into data and how to make it better is a first step. Secondly, you want to make sure you have processes and technology in place for core data hygiene. Third, AI filters can help make this better. Fourth, you can run analytics on top of those filters, both to make sure they're behaving and also to improve what you're doing with that data. And finally, check yourself before you wreck yourself. You want to make sure that on a regular, periodic basis, every 6 to 12 months, you're running an audit on your data and your algorithms. And this kind of work is part of a project that I'm now spooling up through my academic relationships called the Institutional Digital Assets Project. Because the mainstream asset management firms and financial houses are starting to treat digital assets as a serious asset class. But in order for them to really advance into that thesis, they need someone to help them understand how it plugs in with the conventional system. And so we're trying to help these organizations participate in token-based assets, conduct research on some of the issues, and then what this talk ties into is disseminating best practices. So, I'm David Schreier. I've put out a few books recently on some of my thoughts on blockchain and data and identity, so this is where to find them. And I'm happy to take questions now. Yes? Okay.
So it was expensive.
Okay.
So we thought, okay, why don't we pull it together?
Okay.
And then put it on the blockchain.
Okay.
But then I think the question comes in is about transparency, right?
All right.
And is it actual the data? Because when we talk about, oh, we put it on the blockchain, so, it's the correct data. If we actually do something with the data before that, then that selling point kind of vanishes, right? So how would you, like, what sort of
it depends what
you implement,
Yeah, so it depends what you're doing with that. Everyone pre-processes data before they put it on the blockchain. It's just a question of how much. No one is taking a raw feed from my phone and directly putting all of the data from my phone onto a blockchain. There's all sorts of processing that's going on before it gets there. So first of all, don't kid yourself into thinking that just because we say we put the data on a blockchain means we literally put all of the 44 zettabytes of raw data onto the blockchain. No one is doing that. Blockchain can't handle it, right? Imagine the latency. However, what you can do, and this is something we talk about in Trusted Data, is something called open algorithms. So there's an open source code project right now, OPAL, Open Algorithms. So if you go to opalproject.org, you can read about it. And we're essentially saying those algorithms that are processing that data, let's have a group of independent experts verify that they're not doing something bad, that they're not misbehaving. And those certified and approved algorithms are the ones that you'll use to run on your data. It's actually blockchain independent. It could be just for regular AI big data analytics, but it also can make blockchain better. Over here.
Thanks. David, I'm interested in the 5 Rs, and I'm wondering whether any of that is...
I'm sorry, interested in, say again?
I'm interested in the 5 Rs.
The 5 Rs, yes.
Mentioned in terms of audit.
Okay. Yeah.
Auditing your data, and I'm wondering whether that's any different today as opposed to historically. Wouldn't that be what you do anyway? Shouldn't that be the foundation of your data strategy, independent of technology?
Yes. So, and I said this in my talk, this is not new. The idea of data hygiene is not new. What's notable is that we are dealing today with the same problems I was dealing with 25 years ago as a junior database programmer. And so, yeah, I still have to talk about this stuff, unfortunately, because even today, we still don't have good data literacy and good data practice and good data hygiene. But the importance of it has become magnified because now we're taking that data and we're making it immutable. So now it's even harder to correct when we make a mistake. So let's just save ourselves a lot of pain later and fix the mistakes up front. Yeah. Okay, other questions? Yeah. I think we've got a couple here and then a couple more down front.
Hello. You didn't tell anything about the data lineage. How do you think about the data lineage is important when we manage data?
The data, I'm sorry, I'm missing the...
data lineage. So
data lineage, okay.
Horizontal lineage, vertical lineage, and so on.
Yeah, well, I mean, so So one argument will be, you're right, I did not get into that. It was a little beyond the scope of this discussion. The basic idea is, when I'm saying, oh, we have this data and we'll put this through, we sort of touch on it with the relevancy point. Is it actually coming from the right place? And the range point. Are we encompassing the right data? The data provenance would be another way to phrase data lineage, yes? Yeah, so like where is it coming from? Actually, an interesting point is where blockchain becomes an adjunct or an adjuvant to something else. So in our recommendations about how GDPR and other similar sort of regulations can be actually implemented and made good for the consumer, we suggest DLT can be the lineage tracker. It's not the main core thing, but it's the audit trail that tells you what's being done over there with your data and what the data lineage is. So it's a related concept, but slightly different to what I was talking about. Yeah. I think there was one question there and then two down front. Short questions now. Lightning round.
Regarding existing data that is not on the blockchain yet.
Yeah.
Would AI be useful in terms of cleaning up that existing data before putting onto the blockchain?
Yes, as long as you know what the AI is doing, AI explainability. You got to know how it's manipulating the data, and it can be helpful in figuring out of that existing data, what do we want to put on the blockchain and how can we clean it up, for sure. So the question was, how hard is it to train an AI to do that? And the answer is, unfortunately, it depends. So happy to talk offline, but the short version is AI is not a panacea either, and you have to use it intelligently. So I think there were a couple of questions down front. I know you had a question, sir.
Yeah, I mean, you mentioned a lot of this stuff had been around since time immemorial.
Yes.
Quite often, but are you seeing a change now in leadership, actually focusing on data governance and the things you've talked about here across industry?
Yes, yes. Industry is much more now focused on data governance because they have to be. A lot of people complain about regulation, constraining innovation, and make it more difficult, but frankly, it's because we now have data regulations that management has woken up and said, if I don't get this right, I could be fined 4% of my global revenue. So I better get it right. Yeah. So yes, much more talk in the C-suite around data quality, data governance, and distributed ledger as part of a solution set. There's one right there. Yeah.
Thanks. Do you think the blockchain then will reinforce data integrity at the front end? So if I run my algorithms and find out that I only get a 50% subset of data that I then put on my blockchain, that shows I inherently have something wrong with my systems in the first place.
Yeah, I mean, I think blockchain actually has a number of interesting direct and indirect roles to play in ensuring the integrity of data. And one of them is this whole observer effect. If we know who's looking at our data, then they will change their behavior in terms of how they deal with our data. And I think that's a good note to end on. I will hang out for a little bit at the break, but thank you all for your time.
Making time for questions. There were obviously a lot of interest in the audience. So we're now going to break for lunch, and for those of you who want to come back for the great debate, we'll give you 30 minutes to get your lunch, and we'll start the great debate at 1:30, and that is crypto and digital money and the future of institutions. So it should be fun, it should be provocative, so if you feel like coming back, come back. Otherwise, you've got an hour for lunch. So enjoy your lunch. Thank you very much. Okay, ladies and gentlemen, we're about to start the great debate, and I'm really delighted to share with you that there's more than 300 people on the live stream. So even though it seems like there's not so many people in this room, there's a lot of people who are sharing this exciting event with us. So I'm really looking forward to this one because I think it's going to be fun and controversial and provoke all sorts of opinions and ideas. So I'd like to welcome my good friend and CEO of the British Blockchain Frontier Technologies Association and many other things, Barry James, to the stage. So thank you.
Thank you, Jane. Thank you. And thank you, Jane, for putting this conference on and these things on and being willing to host what I hope too, and I believe, because I've been talking to people around the building today, going to be a great debate because we stand at a really important and crucial moment in history. We started this conversation way back, and the last stage was your last conference, Jane. But we do. We stand that is changing almost on a daily basis. And why is that? It's because we're about to remake money. We're about to remake the infrastructure. And you know what? If we designed the banking system or the infrastructure we've had, I said just designed, not even designed today, it wouldn't look like it does. To me, it looks like a piece of software that, you know, one of those pieces of software that got very tangled, getting a bit old, has holes in it, and guess what? It has a back door. This software has a back door. It's called quantitative easing and some other names. But so it wouldn't be. What if we had a future where we had public infrastructure managed transparently for the public good? That's not where we are right now. I published what I call my whoosh diagram. It's got two whooshes, one up and one down. A couple of days ago on LinkedIn, if you go and look, you'll find it. And it talks about where we're going. It talks about if we stay on the same path, what will happen is what's happening. And what's happening? What's happening was revealed by the incoming governor of the Bank of England 2 days ago. You can go and look at it on live stream. Sorry, it's not live stream, it was live stream at the time. But you can go and look at it online in the last sort of 30 minutes of the session with the Treasury Select Committee, where he was asked about Libra and digital currencies. And he said, yes, it was a wake-up call. And we've woken up. We're now in a race. And we're going to be doing this. And this is the incoming governor of the Bank of England. We're going to be doing this, and we're going to be doing it as fast as we can, because we're now in a race. And we're now in a race towards global money. And it was little reported at the time. I was just chatting to Fran, I beg your pardon, Fran, from Positive Money, who was going to join us in a moment, along with the panel. You know, Mark Carney, I believe, has set the pattern for this. In Jackson Hole, the last G8 meeting, he gave a sidelines interview that was actually not well reported, where he said, what if the dollar, you know, has run its course as a global reserve currency? What if a digital currency should come along to play that role? What would the advantages and disadvantages be? And it gave a clear window into that thinking. So a question I ask incessantly, some of you will be fed up of hearing me say this, is, you know, we need to know whether we're going to be architects of our future or its victims as we create a new digital financial infrastructure. There's a new group of banks. It's been announced. It's in a press release from the Bank of England. Central banks. There's a diagram I've put out there as well with a Venn diagram showing you how that relates to the G8, because it's not straight mapping, who are coming together on this and making decisions and deciding our future. So the point of this debate, okay, what we want to shake out here is, what do we want? How do we get the institutions that we need for the future. And we've got a great panel. I've got some questions. We've got a great panel. So I'd like to invite the panel to come and join us. With some perspective, shall we say, on the matter.
Are we sitting in order? It's a different pace.
So, I'd like to invite you to go down the line and just introduce yourself briefly, just a little bit about your background and you know, the organisation you represent and how it kind of fits into what we're talking about. Then I'm going to bowl some questions first at you, Frank, because you're right at the end. Sure. So, but just a bit of an intro. 1 minute, please.
Okay. How long?
1 minute, okay, one minute-ish for the intro.
So I'm Fran Boyd, I'm the director of Positive Money. We're a non-profit kind of think tank campaigning organisation, and our mission is to reform money in banking so that it enables a fair, democratic and sustainable economy. Very briefly, the way I came into it was I was a big environmentalist campaigner. The kind of crash happened, and I saw not only the climate change agenda getting shelved, but also kind of social concerns, austerity was unveiled, and I thought, wow, we really have a dysfunctional finance sector which seems to be underpinning our economy, and you know, in the UK, an economy that's quite skewed towards kind of a big finance sector and property markets that don't seem to be serving the needs of the public. So I found out Positive Money, ended up joining about 7 years ago, and we've gone on a journey where we've really expanded our work from very much focusing initially on a kind of conversation about how money's created and the issues with the amount of power that banks have, to actually working on a lot of different issues, whether it's green central banking, ownership of the banking system, but the most relevant topic here is around our work on central bank digital currencies or digital cash. And we released a paper in early 2016, which seems like quite a while ago, saying this was a good idea. And obviously 4 years later, we're seeing that acceleration and expansion of the debate. And I'm sure we'll talk more about why that's the case. And you know, for us, it's really about that public good, and that should be at the centre of a new form of digital cash.
Thanks, Fran. By the way, it's Fran Boyd from Positive Money. I say this because you're not up on there, because Victoria wasn't able to be with us.
No worries.
You'll have to squeeze up if she was.
We're not the same person.
So Positive Money is an organisation that's been campaigning for change with money for longer than probably anyone in this room, certainly than most of the people in crypto. James Sandberg, where do you come from? What do you eat?
My background is marketing. So first of all, I'm not an expert in central banking, and I'm not an expert in institutions, and I hope that actually adds a different perspective. So my background over the past 17 years is to be actually sort of working with financial services brands. So I've worked broadly across the financial sector, funds, bonds, equities, CFDs. I've done spread betting, sports betting, credit cards, mortgages, loans, alternative finance. So I've worked with a number of different financial services brands, whether it's targeting IFAs or pensions pot managers, or high net worth individuals, or actual end customers. And my company is called Customer Devoted because I help brands become devoted to their customers. So my perspective can be summarized in a few points. First of all, I think that institutions have held an enormous amount of power over the years due to regulation and the cost of regulation, which has now come down. I think digital and customers have converged into this place where actually innovation and insight, customer insight, is really what's going to drive innovation in financial services. And we've seen that, and that is proven in fintech. Will we see this in techfin? I don't know. That's one of the big questions I've got on my mind at the moment, in particular how powerful the platforms have become. You know, in terms of where I think some of the larger kind of institutions need to be focused is how are they being regulated? So the big question is...
Let's come on to that in a minute or two. We'll get to some of the broad issues as well that you've begun to introduce rightly there in terms of, you know, the power that goes with data and so on. Alpesh Doshti, Fintricity.
Hello. So I'm Alpesh Doshi. I run a company called Fintricity. As a brand, we've been around for more than 15 years, and I started the company as a fintech back in mid-2000s. So it wasn't called fintech in mid-2000s, but that's where we are. I work across financial services, so I've worked in investment banking and capital markets and asset management, wealth management, and I'm a technologist by background. I love both financial services and technology, and you know, the blanket of change that's going to happen around it is exciting for me. It's taken a lot longer than I thought it would, but you know, I'm seeing the sort of beginnings of that, and obviously some of the things we're going to talk about today are relevant. So thank you very much.
Yeah, thank you. Okay, and we'll be talking about mass adoption and how that's going to happen, and whether we're going to get a choice in some areas as well. So, Caroline, would you do the next?
Certainly. Yes, I'm Caroline Thomas. Basically, I've had 20-odd years of new product development and marketing across the financial world. I think we've all been involved in just about every bank or financial institution going. But for me, it was an interest in bringing and demystifying new technologies into banking, into payment companies, and into stock exchanges as well. And for all of those, I used to work at them and give them lots of advice. And therefore, I started setting up my own company, both as an entrepreneur and as an advisor. Because in the large organizations, you can have all the facts, all the figures, all the business case to make things happen, but you might not have the agility to actually make it happen and show how it can work. So generally, my life has been 5 years in large organizations saying how things could work with new technologies, and the next 4 or 5 years running my own company and selling back into my old clients, if you like. And I think for blockchain, it is, and the topic of today, there is such a game change going on, and the speed of change is something that has changed phenomenally. 20-odd years ago, when I was taking the internet into the Australian Stock Exchange, the threat to stockbrokers would take 2 or 3 years to happen. What we're seeing in banking right now is where a Monzo or somebody else comes out, the change is almost immediate within months.
Yeah. So at the point in history, Fran, first, and everyone else will move along, at the point in history when, one way or another, for the first time in history, we are going to get global money. We're going to get global money that, as one pundit said, you know, does, you know, exactly the same as if we were in the same room. I can hand it to you, you can take it from me. We are going to have that, but in also right now, you know, as the incoming governor, Andrew Bailey, said this week, you know, it is going to happen. We want the Bank of England to be leading the world, okay? In that frame, is this reverse Bitcoin? Have we woken the banks up with all of the problems that Bitcoin was created to address, handed them the toolkit? Is this a nightmare scenario?
Is this reverse Bitcoin?
Is it reverse Bitcoin? Is it a nightmare scenario, or is it a good thing? And what would make it one or the other?
I mean, I think obviously disruption and everything else is I think that obviously change is coming, but what happens isn't inevitable. And I think sometimes in our money communities we can get very kind of dystopian and it's all or nothing quite quickly. And I think, you know, what we've learned at Positive Money is that you can play a role in shaping the public debate. And I know from some of the conversations I've had with people at the Bank of International Settlements or elsewhere is that they see that they obviously see lots of central banks looking at CBDCs or a digital version of cash and potentially thinking about a global currency, in part as a response to Libra and Facebook's Libra being quite terrified, rightly so, I think. We don't want to kind of have again, the founders of the Libra wouldn't just be Facebook, it would be MasterCard and Visa. We know from their kind of activities, they don't prioritize the public interest. But actually, they believe that the drive really does have to come from government. It has to be a kind of democratic push to say, actually, we do need to introduce a CBDC. So it's not without reach of being influenced from the outside. And I don't think that we're going to see a kind of top-down central banks in, kind of putting a Bitcoin global currency that we will have to use on us. We have the power to shape that. And I think for us, it's always looking who has the control, what levers are there of accountability, and whose interests do they serve, and how are they accountable to the public that use that form of money. Because to date, I think even post-crash, we haven't really got to those key discussions, and we've seen governments often not really having the understanding or the confidence to really interrogate, how the monetary system works, how central banks are accountable, and how kind of disruption and innovation can evolve.
So we probably need to do something about that to make sure that there is oversight and transparency, I guess. That's why organisations like Positive Money exist, of course. Exactly. But you raise a really interesting point. And this is I want to sort of draw this and get your view, because I know you have thoughts on this. Whereas cryptocurrencies is and presumably always will be opt-in, central bank digital currencies are, by their nature, if they become established, if they become the established way of creating money, opt out. In fact, you can't opt out, because that becomes a legal tender. Are there any problems in that, James?
Well, I mean, I think really we're talking about choice here, right? So we're talking about choice. Yeah. So if we look at the financial services landscape and how much innovation, disruption, and what I actually call kind of better value propositions that meet customers' needs better, right, have come through. If you think about currency, I mean, essentially, I'm a customer. The only thing I care about is I want it to be safe, I want it to be good, I want it to be, to do the job well, right? I've got some basic premises. I don't really care if this is going through China or Russia or Turkey or Europe or the UK. So if the question is global currency, okay, I'm a consumer. The only thing that drives me is it good quality and is it affordable? Is it the best solution for the job? What job am I trying to get done? Does it meet the job requirements that I'm trying to get done? On that basis, sure, I think there'll try to be a lot of central banks that are trying to do a bit of a land grab, but to your point, actually, I think, it is driven by customers, right? It's all about adoption. So if you take a platform like Amazon, let's take a generic product category like socks, okay? If there's somebody who is selling a premium, well-known brand of sock at a price premium of £5, and then a Chinese supplier comes in and sells it for 50p, what's going to happen? Market share is going to go up with a more affordable solution, and therefore the market dynamics at play here, because we're digitally driven, global and totally connected, it's all about price, value proposition, and appropriateness of solution.
You raised some really interesting points, but in the room, would you put your hand up if you're a British citizen and you decided to adopt the pound sterling? Oh, just a minute. None of us did. So it's not about, it can't be about it, right? If it's a national currency, then we don't get opt-in. And that raises all sorts of issues. You alluded to some of them, but let me ask Alpesh. You're an expert in digital currencies, cryptocurrencies and identity, and you know about some of the issues around these. Given the moves in China, where they've said they will titrate, they will decide on an individual basis on how much they trust you, and therefore how their digital currency, which they're making noises they're going to adopt very soon. What are the issues around that?
Well, I mean, I think we're seeing some of the points around digital currencies, and the key thing for me is, or one of the areas is around payments infrastructure. So right now, we have a global payment system. It's not one system, it's multiple systems. And one of the challenges around multiple payment systems is that they don't integrate, they don't work very well together. Obviously have fiat currencies run by governments, and they're reluctant to let it go. And then if you look at the constituencies of the banks, it's not in the bank's interest to make payments more efficient. It's not in their interest to make it more efficient, because if it's more efficient, they lose a load of money. So they've been resisting, and from my perspective, when Libra came along with a large organization like Facebook, it was a massive threat to them. When a little company is trying to, like Bitcoin, no little company, obviously it's decentralized, nobody owns it, they didn't really pay much attention. When someone like Facebook came along and said, we want to solve our payments problem, because this is what they're trying to do, they want to solve our payments problem, and the banks thought, oh my God, we're going to lose a shed load of money unless we do something. If part of the Libra Foundation was a lot of the big companies who have, the problem they have is moving money around the world. So Facebook, eBay, any international company, if you look at some of the companies on there, they're all about moving money around the world. And it costs them a lot of money to do it.
So
that is the key thing that people don't get.
Just before we move on, let me just refocus again back onto where we started. Is the central banks coming together in a group? It's documented, we know it's happening, it's in motion.
Yeah.
Is this reverse Bitcoin?
No, I don't think it's reverse Bitcoin. I think it's just a defensive mechanism, because it will happen anyway. Bitcoin's getting adopted, Ethereum is getting there, and there's a bunch of other cryptos potentially are going to go.
So you still believe mass adoption can happen?
I think mass adoption of digital currencies will happen, because by default, a fiat currency in a country, and digital currency like the UK, will happen, and therefore we'll all adopt digital currencies anyway.
So, in fine, I'm just making an important distinction between digital currencies and cryptocurrencies. So maybe
I understand the difference.
Clearer.
Yeah, so the digital representation.
You still believe mass adoption of cryptocurrencies will happen?
I don't think it will, not yet.
Okay. Caroline, a lot to chew on there, right? So what are the implications of all this?
Well, listening to you all here, there's two examples actually I've experienced that came to mind. Talking about China, I convene with ISO International Standards. I'm a convener on the blockchain standards there. 80 different countries all discussing blockchain cryptocurrencies. The biggest amount of content that's coming in now is from China. So we have, I can't name names, but it's the major banks and the major Chinese blockchains who are demonstrating the use cases of, this is not a hypothetical future, here's the architecture, this is how it looks, we're going for it. So I think that's a real, when we're talking about central banks coming together, it's not just Bitcoin and Facebook and Libra, it's much more a geopolitical piece of...
It's about sovereignty, isn't it?
Yeah.
We're talking about sovereignty here, and actually when you read about China and their kind of focus on Bitcoin, they've decided, and it will happen, right? So the Bank of England, your earlier question, I think was really interesting. It is geopolitics at play in this space, right?
Yeah, it's all politics.
And then one really, really quick other one, I mentioned earlier in the week about, in Kenya, we've all heard of M-Pesa. Is it a digital currency? Is it a phone currency? What is it? For the government, it's a huge thing, because 49% of Kenyan GDP is going through M-Pesa. So the central bank doesn't feel under control when you've got 91 million people outside the piece.
The thing is that the point that I'll make is, you've got to look at it from a geopolitical perspective, from a global payments perspective, global currency perspective. The reason why China is moving faster on this is because today the world's reserve currency is the dollar, right? And obviously the US want to maintain the control over the world's reserve currency as the dollar, and China want it to be their currency, right? The yuan. And frankly, the way that they'll do it is by making it a digital currency. It'll become the de facto, because it'll be easier to move money around the world with. So at the moment, moving a dollar around the world is hard work, and it costs loads of money to do it, and it's very inefficient. If they create a digital currency, which they will, if you could move money by pressing a button, and China is now the second largest economy in the world, frankly, it will become the reserve currency, and that's one of the reasons why China's doing it.
Yeah, and that's exactly why, and thank you so much, I didn't even set this up, brings us to our second big question. The race is on, right? If we're going to have national money, right, we're going to have a central bank digital currencies. Who's going to get there first? Are they going to win the race to go global? We are, in some form, going to have a global currency. Okay, that raises questions. Who, if it's not Libra, who is going to be in charge of that? Who is going to provide the transparency? Who is going to control that? How will that be managed? How will that be governed for the good of us all? And do we have the institutions for that? I'm sorry, it's a really hard question, Fran, and you're going to get this again because we rely on you here. Have we got the institutions at a global level, at a national level, to support this change and make it open?
I mean, just very briefly on the kind of global aspect, I mean, I think we do face global challenges. So we've obviously got coronavirus at the moment, we've got climate change on the doorstep. So, if we're going to kind of tackle those, you'd hope that there could be a way that we could get towards a global currency that wasn't just for the for the 1% or just for the global financial markets. But I think a separate issue is that, that we can have different monies for different things, and the worry is that there's a push towards having a global money that everyone uses for everything, and that's a bad idea. That's concentrating power. That's very authoritarian. What we need to be thinking about is how can the UK have a currency which works for, the majority of people in the UK don't need to move money around the world, but what they do need to do is know that they've got a safe, secure currency that they can get, pay their rent in, get their salary in, and if there's a kind of crisis that they can get access to it. And actually, I think what we find in finance, money and banking so often is that we kind of think that one thing has to do everything when it comes to money, and it clearly hasn't worked because, we've got 2 million people in the UK who are unbanked. We've got the vast majority of new lending by the banks, going kind of into finance and property markets and not really getting into different parts of our country. And, I do think that there's a tendency in the UK, we're in London, we're in one of the biggest financial centres, when we look to the future of money, to get a bit carried away with that global perspective, and we need to be the leader, but actually we need to think domestically is different from international, and there's no reason that innovation in kind of digital currencies can't be looking to do different things for different constituencies. Yeah. And again, it always comes back to who's in control, what interests do they serve, and I think for me that's an important
I might be a little atypical. Probably am. But, my day is filled with interactions with people in San Francisco and in Hawaii this week and so on. So it's kind of becoming intrinsically more global as well. Before we go to you, James, for your sort of perspective on this milieu, how that looks from your point of view, I just want to say we're down to just over 7 minutes, and I want to leave at least half of that for questions from the floor. So have your questions ready. James.
So, okay, how do I use money today? How can I better use money tomorrow? I think if we talk about innovation, if you look at some of the ways in which banks have succeeded, it's about personalised recommendations, improvements in savings plans, pensions be bringing together all of these pots. Why? Because it's a problem, it's complicated. I've got all these pensions I want to put. So they're solving problems, right? So actually, in terms of how money is used today, it's fairly rudimentary. I have an amount in my bank and I spend it on a variety of different goods and services. Could technology and the data actually be leveraged by institutions in a way which ultimately helps me spend my money more intelligently, more affordably, more efficiently? And can it derive more insight to give me guidance? So I know HSBC experimented with some behavioural insight stuff a few years ago in their Nudge app, which is all about you're spending too much in comparison to your salary level on your weekly groceries. And so that's the kind of merging, I think, of how actually money could be more intelligent, right? And combining money with technology and data really should facilitate better value propositions, more efficient use of funds. And with regards to the question of globalization of that, I think let's look in our own backyard first of all, because there are lots of problems to solve with that. And actually, you alluded to one of those problems earlier on with mortgages. You know, so there are a huge number of challenges to solve. There are a lot of people in financial difficulty. How can we use technology, data, you know, in a more smart way?
Yeah, you're right. Money could be more intelligent. It could have smart contracts. It could have the ability to move around at no cost, and that's kind of where we're headed. Thank you for mentioning it, but James there alluded to my open letter to the Chancellor on a matter of 2 million mortgage prisoners in the UK. So if you're online and you want to go and look at that, it's in Crowdfund Insider. So, but I'll come to Alpesh. You know, where are the institutions that are fit for purpose? And if not, what new institutions do we need in this place that we're going of global, actually not necessarily global money, but a digital financial infrastructure for the future?
Well, I think the current infrastructure will be what it's like, but what the function of the current infrastructure will change. You know, obviously the Bank of England issues all our money in the UK. They already do it digitally. I mean, a lot of the back end, a lot of the interbank payments is all done digitally already. You know, so I think the fundamentals of the infrastructure already exist. The technological side of how they exist doesn't.
But don't those institutions, as they stand today, inevitably reflect that past of a banking system that is full of rents and holes and backdoors and all the rest of it? Is that what we want in the future?
No, but I think so the point is the banks will resist the change, but they will eventually adopt it because the Bank of England say, if you want to do business with us, this is how you're going to have to work. And the banks will then change. They have to, otherwise they won't do business with the Bank of England.
Which is a really great point I want to bring to Caroline now, because I want to keep a few minutes. The Bank of International Settlements report, this is the central bank of central banks, recently actually said, you know, there are three outcomes here. There's central banks without retail banks, there's central banks with retail banks, and to paraphrase, the central banks with a little bit of, you know, remaining. Will the banks have to reinvent themselves, or will they go all together at that level?
I think, having worked with a bank who's lasted 300 years of innovating one way or another, whether it's financial products or technology, I think they're capable of innovating. But I also agree with the point that the minute that Facebook and Libra came out, you're not talking about small startups with nice ideas who are breaking into the market. You're talking about monoliths who have not just data provenance, but the amount of customers that they have, the amount of insights that they have, and the ability to get money around the world that quickly. And banks can't do that. So they really have to start rethinking how they can partner. And again, I think with Libra, it was surprising how many card companies were all signing up to that.
That was defensive.
Completely defensive,
but I think the thing about Libra, which is also kind of like a symptom of a wider trend, which is probably going to start to happen, is these tech platforms, they own the customer. Completely. They are convenient. They're more convenient than anything else, absolutely, right? So I'm there, and I think back to 2011 when I worked with ICICI Bank, who were trying to embed a bank into Facebook in an app. Right? They created the first Facebook bank, so you could get your statements. Obviously, that's way out of date. But Libra is kind of moving in that, and we're starting to see Instagram introducing payments types of, all of this space, the platform is where the transaction.
So James and panel, sorry about this, but we've hit the 2-minute mark. Right, we've got to have questions from the floor now. Very strict. I will overrun as much as I'm allowed to, but I don't know whether I'm going to be allowed to or not. So questions from the floor, anyone, quickly. Make it short. Just here. Can we get a microphone quickly just here, please? It's coming.
Shout out.
Shout out for now.
I mean, okay, yeah, so if we're talking about, you know, the tech companies being corporate money and government money with the central banks, if it comes down to a competition between the two, I mean, it appears as though, I mean, look, money is technology, right? And it's completely digitized now, and we know that it works as technology, so I mean, who's going to win at the end of the day? Who's better at technology?
Who's got the most data? Yeah. That's the answer, probably.
That would be true in the normal economy, But we have players here who are not in the normal economy,
Yes.
who are above the normal economy as central banks. So in that scenario, who's going to win?
I actually think, I think there's an argument for both. I completely agree with your point, but, okay, so let's go back to the point of I care about using a product or a service because it's more convenient to me, it understands me, it's more personal to me. I'm going to choose that above anything else, right? So Facebook are able, through their algorithms, to understand the next financial product that this customer should be recommended, more than a financial institution will, right? So therefore, the experience will always be superior because of that data.
So I'm sorry to cut you off, but the financial institutions are going to have to and are going to get better at this. Who's going to win? We can take one last question if we're quick. Gentleman at the back there. I may get hung, but because it was 1 second a second ago.
Hi, thank
so
you.
This will probably going to have to be the last one.
Okay, so I'm one of probably a fairly small number of people that have actually had to run my business on crypto payments to the Philippines to run a team. And the thing that became clear to me is you've got two aspects. You've got one which is, the cryptocurrency as an asset class.
Yeah.
And you have the frictionless payments. And even using crypto for payments, I was still having to pay 2% to get it into the local currency.
Can you focus your question quickly?
Yes. Okay. So I'm interested in the panel's view of the difference between the asset class, cryptocurrencies as an asset class, versus the frictionless payments and how the central banks view that perspective.
So I absolutely think, if we say Libra is the one, right? There are 2 billion people on Facebook. If you said to them, to make a payment, you just go online, you put the person's name in and pay them. That's so much easier than trying to send $10 somebody to your same person, which will take quite a long time and cost a lot of money. That's going to get adoption, right? So when you talk about international payments, absolutely. I think if, when Libra happens, which I think it will absolutely change the way payments works internationally. So there's a separation between domestic currency and international payments. And I think that's we should distinguish between those two. Facebook will, with Libra, if it's so easy, like going back to how to move money around the world, if it was easy to make a payment from A to B from your cousin in Kenya, and you could just press a button and do it, people are going to do that. So that's why all the banks are scared. That's why the central banks are scared, because of the reach and the community that Facebook has is so huge compared to any single currency like sterling. It's really scary.
But it's the equivalent of the telephone, right? So the penetration. There's a great book called The Facebook Effect, which talks about Mark Zuckerberg's original vision, and what he actually wanted Facebook to be was he wanted it to be the same as the telephone. He wanted it to be that much in terms of use. We're not far off it, right? So that's why I say they're going to win. And that's why I say, if you're a partner in Libra, don't leave. Stay.
Absolutely.
You stand to gain a huge amount because, okay, sure, they're not popular. People don't like the whole platform, and there's a lot of issues and security and stuff. But actually, they've got the data, they've got the audience, they've got the world.
And they
have they got responsibility?
And they haven't. Excuse me.
It's about adoption.
And they haven't got transparent governance. Or at least not yet. We're going to have to be quick because I want to take one more question because I've got leave to take one more question. You were going to say something there.
I think it's responsibility. The missing piece in Facebook is what happens when the payment doesn't go through.
It's about trust.
Yeah.
Who do you trust with your money?
One more question. Do we have one more question from the audience? So I'll use the time to go down the panel. Final point out of this debate. What sticks out to you from this debate? What should we be doing, Fran? Apart from what you are doing, obviously. You're doing a lot of it.
Everyone should go on Positive Money website and sign up to our newsletter so you can follow our campaign.
Good one.
This is about
Positive Money.
This is about public democracy. Libra isn't inevitable, and I think that we need to have a public voice in the future of money debate. nationally, internationally, and also at a local level.
I'll give that a round of applause as well.
It's not fit for purpose, and we lose to risk a lot if we kind of blindly walk into handing more power over to a very concentrated number of tech, banks, payment services companies, and central banks.
Yeah. We need to engage. Absolutely, we need to engage. James, do you agree?
Yeah, I do. I think it's an important conversation to have, and it needs to be managed. And I think, you know, if you take into account all of the different moving parts, you know, we've got geopolitics, we've got disintermediation through blockchain, which is kind of pushing against that. We've got kind of platforms with massive amounts of data. It's very difficult to kind of know exactly where all of this stuff is going to land. I think ultimately traditional institutions have had it too good for too long. They haven't been regulated in the interests of customers, and then we've got GDPR, PSD2, MiFID, and now we've obviously got global banking. All of that is regulating what I would call potentially complacent institutions of old into being customer-centric. You know, so the platforms get it, they've got the data, they get the customer. The big institutions better move quickly, and much more quickly than they have done, because even fintech are nipping at their heels.
Very good point. So what we've got is we've got the platforms moving the institutions at the moment.
Yeah.
That's new. Alpesh.
No, that's it for me. It boils down to a number of things. One is trust. Who do you trust with your money? It's really straightforward. Who do you trust with your money? Secondly, it's about adoption. How can you get adoption around payments between parties? What's the most frictionless way of doing that? What's the easiest way of doing that? Given that you have to have trust. You're not going to give money to somebody you don't trust.
Yeah, just start a central bank and you can just dip my feet.
I know, but then the third thing is adoption. If it was easy to make a payment, people are going to do it. And if they feel safe with that mechanism to pay money and receive money and it costs nothing to send the money, that's what they're going to do. Because it's the easy and cheapest way to do it. And the only guy right now doing that, and I'm not for or against Libra, I'm just seeing what's happening in the landscape, is look at Libra and look at the number of people it has. That's 2 billion. And I don't necessarily agree around governance. They do have an open source governance model. So if you're a technologist and you understand open source, you understand how governance works as an open source technology, the Libra Foundation is set up to that kind of model. I'm not saying it's perfect, but it is in the direction of not owned or run by Facebook, because everybody thinks that's what it is, and I don't think it is.
Okay, well, I think there's a whole debate to have about just
but maybe just a fact on trust is that there was OMFIF did loads of polling, and out of who's most trusted to issue a currency, tech companies came out bottom, and actually governments and state institutions came out top.
So it's a bit of PR we're talking about.
Caroline, we're going to have to wrap up in a moment.
Two lines, I think you mentioned is the race is on. For me, it's you can't have the winner takes it all. The winner of the biggest data or the biggest platform, whether it's China, whether it's Facebook, whoever. You can't just have one winner for a global currency.
So thank you, Jane. Thank you for FinTech Worldwide for making this debate possible. So many new aspects and insights from this panel. Would you thank the panel? Thank you very much.
Thank you. What a fantastic panel, and Barry, thank you for your remarkable chairmanship and showmanship. It really made it worthwhile. I was actually watching it on the live stream as well as watching it in the flesh, and it looks better on the live stream, Barry, so go back and have a look at it. But that was great. I hope everyone enjoyed it, and I hope it opened up some questions in your mind. Our next session is around blockchain in the news. And one of the things we've been talking about over the last couple of the days is how blockchain's actually managed to get itself a bit of a bad reputation. So we've got a great panel here led by our media partner Lansons, who's going to spend some time talking to us how to keep blockchain in the news, and then hopefully in a good way. So Jessica, welcome. Thanks very much.
Come back because I like to hog the limelight and take my notes away.
Oh, and come on up.
Thank you.
So thank you for sticking with us this afternoon. I am Jess Warner, a director and partner at Lansons. Lansons work with governments, industry bodies and companies in the blockchain space, as well as other sectors, to help them build, protect and manage their reputations. And a really important part of what we do is media relations for our clients. So engaging with the media, because having a good news story about you or a bad can ultimately make or break the success of your organisation, and could overnight make or destroy your reputation. So we have 3 experts in this space who are acutely aware of their power. They are the newsmakers, the trendsetters. So really pleased to introduce, not quite the lineup up here, but Doug McKenzie from FinTech Finance, and we've got Jamie Crawley from FinExtra and James Bowater from Crypto AM, City AM's crypto specialist. Woo! So thanks so much for joining all, and I'll start with you, James. And just wanted to reflect on, you know, as an industry, there's a lot of hype, isn't there? There's a lot of noise. How do you pick through all of that and find out what the really interesting stories are? And what advice would you have for people here trying to get noticed amongst that crowd?
Well, I think, yes, you're right. There is a hell of a lot of hype, and there always has been, especially, you know, there's the hangover from the ICO sort of craziness. And I think, you know, that's taken us a long time to get over. In terms of finding out who I want to get involved with and all the rest of it, I think the most important thing is to get out there and meet people face to face as much as possible. It doesn't always just work to get a basket full of emails going, you know, look at my thing, look at my thing, look at my thing. Because also you want to make sure that hopefully, that when you do engage, you're not dealing with a scammer or a whatever person as well. So that's quite important to be able to disseminate. And I think that can only be accomplished by actually talking directly with them.
So before you report on a company or an individual in this space, do you do quite a lot of due diligence to make sure that they are legitimate and that you're not writing and endorsing anyone
as much as possible, for sure. I mean, I think in the 2 years that I've been doing Crypto AM, I think I've had one cock-up, which I'm not going to talk about. Yeah, I mean, that became quite evident quite quickly. But I think also City AM's, I've got Crypto AM within City AM, slightly different from what these other guys do, in as much as it's more of I'm more curating interesting content, and obviously the key feature of Spotlight is to help new companies expose themselves a bit as well as others who are more established but haven't got their message out yet. But yeah, no, it's not easy to filter, let's put it that way. But I think meeting and showing up is a key thing.
Great,
yeah.
Thank you. So, I mean, on the it's not easy to filter point, Doug, it'd be good to get your take on product launches, because I know that there are lots every day. I imagine that's a big part of what clogs up your inbox. So when you're seeing those come through, how do you decide what's an exciting product, what are you going to write about, and what's just, another very exciting for the company themselves, but possibly not for your readers and the wider community?
Definitely, yeah. I think that's a big part of this industry's problem, is making those what might be very exciting, as you said, for their company, turning it into an actual news story that is actually publishable, putting it on a video, and turning that use case for that company into a mass case for either readers and the wider audience as a whole. We get so many press releases which are just filled with very intense jargon, as of coming from the media side of things into the fintech scene. You're having that learning curve over the last half a decade. When you're presented with something that's not very easily translatable, even to me who knows the industry, it's then translating that into more content. And by that time, is it actually worth it at that point? So I think there's an effort needs to be made to democratize the language used in the industry. Financial services is already niche enough without then obviously having that tech element to it, and I think that's a really important thing to really hammer home those mass cases as well as the use cases, and actually turning those what could be done into what should be done. And if that's brought across in at least the opening salvo of the 100 press releases you get, I think you'll go a lot further to getting your message out there. But yeah, I think that covers that.
And I just touch on something that actually we spoke about before the panel, in terms of another thing that's going to prompt you to open that email and to read that particular press release. And you mentioned, Doug, that actually that does come back to having a relationship in the first place, and you actually knowing the company, knowing the individual, or knowing the press office, whoever's getting in touch with you. So that remains as important as ever when it comes to engaging with the media.
Definitely. It sounds really typically old school, I guess, but having that, people by people, and knowing if you make a cold call effectively or a cold email with your very exciting press launch, and you don't want fake niceties, but for instance, having that personalized kind of talk, this is what we're trying to showcase, it goes a long way for the press. For instance, I'm not going to name names, but I got an email the other day saying, hi, it would be really good to connect to talk about my new blockchain technology. We share very similar experiences and passions. And I thought, I've never met you. Okay, it was almost like a dating app. It goes a long way to actually having that personalized talk, maybe asking to showcase the product first, or meeting at a previous location, to kind of break down that barrier of just the insane amount of cold emails you get about the incredible amount of products, which are probably incredible, but it's breaking down that barrier, that first initial, because there's only so many you can cover before it's just effectively just white noise. You're releasing so many press releases, so many videos about so many products. You want to make good content and not just wash out with just middling to poor content.
Thank you. So it's about relationships, and it's about democratizing the language. On that latter point, Jamie, I'd be interested to get your take on an observation that I've got about the industry, which is, we haven't had too much of it at this conference, but I think as a whole, everyone is far too navel-gazing and obsessed with the technology, and not enough around storytelling about what's their product actually trying to solve, what's the real-world problem that we're looking to address here. What's your take on that?
I tend to agree. I think you phrase it in the right way. A comparison I often find quite applicable with blockchain is comparing it to the early days of the internet. And I doubt very much that in the early days of the internet, there were many technology companies or PRs who were pricking journalists or the media's interest by talking about the intricacies of TCP/IP and everything, or HTML or anything like that. What drove the internet was use cases and it was user experience. So it was email and it was e-commerce. It was taking the everyday, the mundanity of everyday life of communicating, transacting, shopping, and putting it online. That's what I'm really looking for from in blockchain is when we get to that point where when you can send someone a press release, you can pitch someone something, and you don't even need to mention blockchain anywhere in it. It's just self-evident that that is what lies at its core. Don't care about the intricacies of the technology. Is what are you trying to achieve here? How is this going to empower consumers? How is it going to make companies' lives easier? Bless you. And how is it, like you say, what is the end product? Why should I care?
Okay, so a question for all of you then. Who is doing this well? Who is talking about the solutions? Who's writing a good press release? Who is investing in relationships with you and telling a good story?
I'll throw one forward and link to what I just said, and it's a company I've spoken to a number of times. It's eToro. I'm sure you're very familiar with them, and I think that kind of, to my point, is why they're obviously doing a good job. What I was just saying is blockchain lies at the core of what they do. They're a social trading platform. They offer crypto. They've got a number of stable coins pegged to fiat currencies, commodities, and as well as Bitcoin, Ethereum, Litecoin, and so on. And and blockchain is fairly divorced from it. It's self-evident that it lies at their core. What they're doing is taking something that not a lot of people engage with, which is investing, making yourself financially independent, and putting it on, making it a social online experience. And I think I'm sure everyone's seen there's a few months ago, you can never load a YouTube video without their advert popping up at the start. And now, watch a Premier League game this weekend, you'll see their name plastered across half the billboards in about half a dozen games and behind Jurgen Klopp's face, hopefully, after Liverpool have got back to winning ways against Bournemouth.
I think the other thing that is important, actually, which I took them out, is companies who might not quite be ready yet, but who are actually doing a hell of a good job of educating. And I think that, I mean, just since we're naming names, there's two have sort of struck me recently. One is a company called Coiny, who's aiming to be a digital custodian. They've invested their own money into the project. That's another big boon to a story, is if they've actually backed themselves. So the other example would be Kudo. And then there's another company called World Mobile. And what they all have in common is that they've all, funded themselves at the outset, maintained a bit of stealth, but as part of their journey of going off to do their, money raising and all that kind of stuff, and WireX even as well is another good example, who are doing a Series B at the moment. They're educating people through networking and through hosting events, and institutions need to understand what their digital custodian is going to be doing. So that's a good one. It's sharing it's taking the jargon out, showing what actually the practicalities are and why they're going to make a difference. So I think those companies at the moment stand out to me off the top of my head. Who? Monolith. Yeah. No, you introduced me to them. See, that's called relationship at Ethereum.
There we go, live. Doug, what do you think?
And if I could also, I completely agree with you, Jamie. And also it's kind of having that blockchain capability, but having it behind the scenes and not having to flaunt it. I talk a lot about open banking. I talk all the time about how amazing open banking is. But at the end of the day, I don't think any of my friends or family know a thing about open banking, but they know the positives that have come about from the payments revolution as a result of it. And maybe if we stop talking about the specifics behind the technology, and again, going back to that use cases, for instance, as you said, eToro, having that platform that works, that uses the technology, I think that could be a really interesting outcome. We're very tech focused, when actually maybe, we should be looking at the product.
So the fun question, who's doing it badly? Who have been the PR car crashes or disasters that you've seen?
I've been offered, advertorial type, again, not going to name names, but it's more than a couple, to have adverts on our site or in videos, paid for in their own cryptocurrencies and everything like that. That's just a no-go, really.
Well, I mean, I'm concurring with that. We've got no facility to take crypto at Crypto AM. It's ridiculous, but it's true. I've been trying to find the right partner for that for some time. I also don't want our bank accounts to be shut.
Yeah.
So, that's another sidebar on it. But I mean, until we get our banking and our regulatory side sorted out so that there is no, I could name names, but I mean, there are certain banks that just know what their client's business model is, and the minute they push the button to start trading, say, "Oh no, we can't do that," and shut their accounts down. It's not cool.
Yeah, again, not naming names, but I suppose when I subconsciously switch off is when you get the feeling someone's just being slightly overly evangelical. This is a revolution. This is going to change the world. This is the new internet. Despite what I said a minute ago, so I'm kind of treading on my own toes, I suppose.
Web 3.0.
That sort of thing. I think what I would favour a little bit of caution, a cautious engagement. If you, it's very easy, it seems, to slip into overdrive, and it's very difficult to remain engaged with those sorts of people.
Yeah, understood. So I think just going on from that and understanding more, because you've given some really useful guidance, I think, to everyone on how they should work for you. Getting more granular, what does your week look like? What are your top tips for people engaging you? How should they get hold of you? How do they go about getting their name in the press? Jamie, you start.
If you want to get your name in the press, don't think about trying to appeal to us. We're not, not trying to do down the industry in which I'm trying to make a living. But as a journalist, what I'm looking at is I'm looking at the banks, I'm looking at large companies. So I think if you can get a blockchain company or a startup of some description, if you can get a level of engagement with an HSBC or a Barclays or a MasterCard or a Visa, I think you're 50% there. Kind of what you were saying before is if you're looking at a press release and there's an attached to a major bank or a major company like that, then it would. It sort of makes all the difference in the world, and it sort of leaps out the screen at you a bit more.
Well, my experience obviously is a little bit different, because I mean, I'm certainly not going to class myself as a journalist, as I was mentioning before. I'm not trained to be a journalist. Have I got my spacing right, Robert, yet? No, oh Lord. Anyway, no. What I was going to say is that actually, I've got a different sort of thought process. I mean, obviously my email address and everything's published in the newspaper anyway, so I can't really hide from that. But I actively go out and meet the community and try and build the community from a hands-on method. So I've created the London Blockchain Forum just for that purpose. There was way too many infighting, siloed, people said mine's better than yours and all that sort of stuff. But actually, if that needs to go, it's rather like the navel-gazing thing. But I mean, if the community can actually just work together, you don't have to share your secrets, for heaven's sake, but there's nothing wrong with sort of, recognizing that collectively we need to work together, be interoperable, we need to scale, and we need to be usable. I mean, that's the only way this is ever going to achieve mass adoption anyway. So I'm a bit more proactive, I guess. So I want to meet everyone, and I put on a lot of weight in the last 2 years. I might have to go to a clinic soon.
It's a sociable industry. And Doug, in terms of working with you guys, I mean, again, something we were chatting about was the extent to which all publications are pay to play, and that's obviously not undermining the editorial integrity of all of you, but ultimately, FinTech Finance, FinExtra, CityAM, CryptoAM, your businesses, right? So how does that work? What's that balance like?
Definitely. We partner with a lot of events typically, and obviously we're there with a camera crew, and it's one of those things where it's a marketing manager or a PR manager's dream when they see a camera team offering to do interviews at an event for free. And it's one of those things where obviously you build these relationships over the course of a couple of years, and some become very successful, get adopted by these banks, and you kind of see that growth, but it becomes one of those things where you then say to these companies that maybe you have given a lot of free press to, and you say, hey, would you like to be a part of our platform as well in terms of media and kind of back and forth effectively in that. and do something paid for, advertorial. Because, again, these products don't change too much. And ultimately, when you're in journalism or press, about product launches, there's only so much you can talk about. And so you do need that, as you said, that advertorial side of flow. And so I really do think there has to be this effective negotiation on the table where you say up front, we're just starting out, we love this content, we love your guys' platform, we'd love to work with you down the line sometime with something advertorial. But it's when you're speaking to a lot of large fintechs, and they come over all happy and at events, at conferences, and say, or privately over the phone say, hey, can we have an episode on us? And sometimes we've looked at some companies and said, well, we've done 6 episodes on you for free. Is there any chance you'd like to go for an advert? And that's when we've often had a lot of people just say, oh maybe next year. We've just done our budget, and you're thinking, oh okay, going to a conference that costs $8,000 or whatever. So I think there has to be this kind of back and forth. Otherwise, if it's just all one way, then it's just never gonna. The industry's never. It's unsustainable.
I mean, it's a massively important issue, and I think that, certainly, speaking for the newspaper I partner with, City AM's been around for 14 and a half years. It's free, it's handed out. So obviously it doesn't pay for itself. So adverts in there have to, contribute to they do fund the overheads. But within Crypto AM, I try and keep a 50-50 balance of, potentially sponsored content versus invited content. So I try to be as strict as I can be on that. So I've got obviously my own column, but then, the guest main feature I'm quite protective over, and it's not designed for people to shout about their brands or stuff. It's more to do with education. And then obviously we've got industry voices as well, which is another opportunity for people to write an essay that's topical at the time. But getting people to part with pounds, yeah, I told you that. I haven't got the facility. No, it's to get people to part with money. It's always a hard question, isn't it? But I think and I'm going to sort of be bit brutal, what pisses me off completely is when there are companies that you've either helped out and then they do get their money in and then they don't come back to you. That's a bit of a slap in the face. And I think also the other one is when full well that the company coffers are full and you're helping and you've been helping and then they're just not supportive back. It just shoots the relationship in the foot.
Yeah.
And there's no shame in paid content as long as the reader's aware. That's all.
I think for next year we're quite lucky in as far as it's been around for a long time, and for next year for me is as much a community as much as anything else, as well as news and comment analysis sort of thing I work on. We also do a lot of research papers and organise events akin to this, and we have a lot of video outputs, similar to what Doug's been talking about. So we've got a sort of a very vibrant sort of 30,000 strong community. So there is a lot of room for engagement on some level or other. And don't ask me, I'm not a salesman, but at some point or other, I'm sure some money exchanges hands at some point.
I actually asked one of our sales team, who was inquiring about a fintech that we'd been doing a lot of free content for a number of years. Finally, about maybe asking if they would like to put up for an advert. And even though we knew this person for 4 years, they said to her that they categorically don't pay for advertorial or content. And I thought, what on earth at all? And yeah, that was literally their answer. That they just assumed that in this new media environment that we're in, with YouTube, and everyone gets really excited about it, that there is no, you don't need to pay for anything because everyone's so excited about everything. But it goes back to that whole thing of there's so much content now. If you're not making good content and you're not paying for it, which is obviously, you get good content typically by paying for it, then you're going to get lost really quickly in all the white noise.
Yeah, it's a surefire way to irritate a lot of publications, isn't it? We've got about 4 minutes left. I've got a couple of final questions, but just wanted to see if anyone else in the audience had one. Otherwise, I'll keep going. So just wanted to wrap up really thinking about the future, thinking about trends and what you see as being really big and exciting this year and kind of looking 5 years ahead, because, in your roles, you're a good bellwether for where this sector's going, what's exciting, what makes a story. So would love to hear that from each of you to round up.
I would say in the short to medium term, it'd be central about digital currencies, which is what I'm looking at. Some of you may here for the panel on that yesterday, which was my one of my highlights of the event. Whether or not that's what we're going to see this year, I'm not sure. Maybe that's more of an 18, 24 month time period. But it is. I think there's a lot of scope for that to really accelerate. For example. The US, for example, is certainly not going to take a wait-and-see approach if China's well-known intentions to launch a digital currency come to fruition. That will certainly light a fire under the US. Well, exactly. So that's what I'm looking. That's what I'm looking at, and broadly in the more long term. A piece of work I've got coming up quite soon is on the future of blockchain, looking at things like smart contracts and identity and banking the unbanked, thinking broadly, this is where we are now, this is where we could go, this is where we want to go, how do we get from A to B?
Thanks, Toby.
And for me, it's definitely been, I was on a panel a couple of weeks ago about blockchain with a chap from PumaPay, and it's what they're pushing is this kind of changing the way that we pay for things. And I thought that was really interesting because a lot of the fintech revolution that I've seen to become successful has come about through the payment side of things. When people found out that they could send money to their friends through one app rather than having to type in bank details every single time, that's when we actually started getting traction on the ground. And so what them and other companies are doing is changing the way that organizations and companies can actually take funds from accounts. It becomes far more a relationship rather than just banks to banks sending money. It's pulling money out of accounts rather than just pushing it. Subscriptions like Netflix, it's going to transform the way we pay for things. I think that's really going to be quite exciting.
Well, I think that I think there's a certain degree of naivety as well that exists. We're quite far away, I think, from having the full infrastructure that's required. So that's obviously an important part. Obviously the protocol guys are busy building, and then usability and then the regulatory side of things will have a huge impact on that. But I'm also very excited to see how the blend of AI and blockchain can actually advance things, and so I think that's going to be an interesting one to watch.
Brilliant, thank you, James. We're out of time, so thank you so much for those final insights and also for sharing thoughts on how to work with you. I would summarise as be solution-focused, invest in those relationships, take the time to educate, and sometimes it pays to pay. Thank you.
Thank you.
Thank you. Oh, look, thanks very much. And, you know, I think it's a fascinating conversation as things are really changing with this whole digital world in the media as well. It's also good to know how we can get their attention. So our next session is around VCs and startups and how to find the next unicorn. It's actually not coronavirus that's getting us for this session. It's the Investor Roundtable on the stage too. But we've really been incredibly lucky to get two extraordinarily knowledgeable people in this area. So the panel's going to turn into a fireside chat, which I will moderate if someone brings me the microphone. And I would like to welcome Kevin Montserrat and Erin Grover onto the stage, please. Thank you. Thanks. Can someone just bring me the hand mic, please? Then I can sit down and it seems like we're by the fire. It seems like it's... When do you stand at a lectern when beside the fire? Not very often, I don't think. Thank you. Okay, just while we're waiting for the hand mic to come, it'd be great if you could briefly introduce yourselves and talk to people about what you do. Thank you.
Okay, so my name is Erin Grover, and I have a company called Altai Digital Capital. Pretty much, it's a fund-to-fund structure out of Ireland that does placement of client funds onto highly vetted trading algorithms. So I'm sure a lot of you know that, you know, using trading algorithms right now in the volatile market can be very profitable. So I have an amazing team that helps me to vet each product, and every product that we place clients onto is regulated. So also I'm a part of the Akasha Innovation Hub, which is an accelerator based out of Dublin for all things blockchain and blockchain for the greater good in the world. Akasha was originally founded by Mihai Elisi, who helped to co-found Ethereum in the early days with Vitalik Buterin. So I'm lucky to be a part of that, and they have multiple hubs around the world in Barcelona, Berlin, and Zug as well.
Thank you. Kevin.
Thank you very much. Kevin Montserrat, founder of Consilience Ventures, co-founder of Consilience Ventures. My background is economics, and I basically joined Microsoft Ventures in 2014-15 when it was very much the early days of corporate accelerator programs, and I get to work with a lot of high growth companies, typically around Series A and Series B, and help them with customer access, client, obviously capital access and talent access. So I built the whole venture ecosystem for Microsoft Europe, and in 2017, 2018, I thought maybe there's a better way to actually accelerate startups. And then I asked myself, what if we could create an environment where young startups focusing on real long-term value, long-term impact companies could get access to a network of people they wouldn't have access to otherwise, and they could get access to money on demand. And that's what we have created. We have tokenized a venture capital ecosystem composed of startups, experts, and investors coming together in one single marketplace, and we invest in Series A, Series B rounds across the world right now, focusing on Europe, but we've got the capacity to scale because at the core of that, there's a tech company.
So, Kevin, you've done more than introduce yourself. You've told us all about what you've created. But so I'd like to follow up on that because in conversations that we've had previously, you know, you've really spoken about the current VC models not really being fit for purpose, and that what you're trying to do is create a new model for VC. So I'd love you to just talk a little bit about what were the key problems in the traditional VC model, and then exactly how you're solving them with the model that you're working on.
Sure, thank you. So I guess the venture capital model is, for us, not very sustainable. You raise a fund, you sell it, you raise another fund, you sell it, and so on and so forth. And the money is very much still very centralized. At the end, we need the money to be decentralized so that there's more innovators and entrepreneurs having access to capital so that they can create great tech companies and solve real problems. So the main problem we're solving is a systemic problem. It's called alignment. the GPs, the VCs, and the startups are not fully aligned, and the VC is not very much aligned with its own limited partners as well. So the alignment is really much what we are solving, and we are solving this by creating the currency of entrepreneurs, which is backed by the portfolio that we are investing in, that we are growing. So that's how
So
we
you're solving the alignment problem. It seems to me you're also solving one of the other big problems that startups have, which is they have to spend all their time going and finding capital.
Yeah.
So just talk a little bit about that aspect.
Sure, very briefly, raising money takes at least 6 to 9 months, and the problem is that once you've got the money in the bank, then you need to know what to do with it. And because the startup ecosystem globally is a comedy show, then raising money is easy, but managing money is a different story. So it's good if you are based in the UK and if you've got an SEIS insured business, because you will find the money, but that doesn't mean that you are going to be able to create a successful business. So what we have created is basically an environment where you can get access, you can convert your shares into the currency of entrepreneurs at any time, so long as you are meeting the criteria we would like you to meet in order to show progress. And that's how we solved it.
Thanks. So that's alignment of people and money. Erin, I'd love to hear a little bit more from you, both how your model works and whether you sort of find some resonance with what Kevin's saying in terms of needing to solve some of these traditional VC problems.
Yes, so I have been on both sides of the fence. My first and second crypto trading companies were accelerated by the Akasha Foundation, but now I'm an advisor helping to accelerate other companies. So I agree it's a comedy show. Keeps me laughing every day, but I'm still participating in it. And I would say there are a number of challenges. I mean, where do you start? And I've never been really traditional, and the people I work with aren't traditional at all. So I would say it's kind of hard for me to talk about the traditional side of things. But what I'm enjoying with the Akasha Foundation and the hub in Ireland is that the people make it at the end of the day, regardless of the money that's there or the structure, and it's just an amazing group of people, and sometimes things are hard, but when you have the right mix, miracles do happen and things can be achieved on massive levels. So.
Thank you, and you spoke earlier about being involved with the Ethereum startup, and obviously that was a unicorn. We heard earlier from Ian Dowson that I think 6.6 billion in the UK is invested in fintech startups, and UK's had a number of unicorns. So just in your experience, what do you look for? What do you think makes the next unicorn?
Well, from my perspective, unicorns to me are companies, and keep in mind I'm only in blockchain right now, but unicorns for me are the ones who have technology that can actually be applicable in humanitarian situations, for example, and just very real life, tangible cases. And that's partially because I have 10 years of experience with the UN, but I'm looking to reach people beyond our bubble, right? So we're working on accelerating one project that has to do with the supply chain and farmers in multiple places around the world. So to me, that's a unicorn. Maybe other people don't agree, but that's really important for me. And then on the other side of things, a unicorn for me is in the trading world, working with funds in the crypto space that are actually regulated. Right now, that's a unicorn, because there are a lot of funds out there that aren't regulated, and I'm looking to make my investors happy with the bells and whistles of a traditional investment firm. So,
I want to come back and talk to you a little about emerging markets, but I'd like to just see what Kevin, how do you find the next unicorn? What are you looking for? And Erin's actually been redefining the unicorns on the stage, so I welcome new definitions for unicorns.
Well, I guess I'm not sure if we actually need a new definition for unicorns. I think unicorns become so popular right now that there's no need to actually we don't know if they are unicorns. I mean, if you've got just 25,000 unicorns in Europe, and and so on and so forth. So I guess there's a question around this, which doesn't mean that I disagree with what Erin said. I actually agree with it. In reality, I think we need to concentrate on zebra more than unicorns, and zebra are more kind of very much customer centric and creating value for all of the stakeholders of the companies, and not only the shareholders of the companies. And then this is very much where I agree with the impact that those companies, those new companies will have on emerging markets, because we will solve a lot of inequality problems with those new business models that are yet to be created. And I guess we would all agree here that we're only scratching the surface of what we can actually do with those new technologies. It's just that we have not had the right mindset for and you can use the best tool to somebody who is used to a new tool is obviously not going to be able to do anything with blockchain, and that's what's been happening, and that's why we've seen a lot of ERC20 coins spin out on the web and so on and so forth, because people were trying to create previous business models with new technologies. It's almost like if you are trying to cut a tomato with a spoon, it doesn't work. The way we find companies that are successful, and they do not need to be unicorns to be successful. We are creating a portfolio of 1,000 companies over the next 10 years. And just to give you an idea of the scale of what we are creating, if you have not been in the VC world, that would take about 30 to 40 VCs to reach the same level of diversification. So we are basically three-dimension diversification. We are diversifying across stages, so we can invest from pre-Series B up to IPO. We are diversifying across all technologies, from quantum up to kind of very traditional technologies and very well-proven technologies such as machine learning. And then we are diversifying across sectors as well. So from fintech up to biotech. Right now we've got biotech and fintech companies in our portfolio. So if you acquire the security token that we have created, you get maximum diversification, and we'll be investing in 1,000 companies over the next 10 years.
So, but when you're actually looking at a company that you're thinking of bringing into your accelerator, what do you look for in the team?
Question for me, I guess.
Yeah, question. Well, I'm going to ask Erin as well, but I'll just ask you.
Well, first of all, I'm expecting the founding team to be extremely savvy and understand and have an extreme good understanding of their market. I want them to, if they do not talk to me about product, if you do not understand your market. So I think market is the first thing that we really look at. Do you really understand your market? And then do you have enough understanding to actually build a product? Because once you know the market and you know the problem you're solving in the market and you know the environment in which you are growing, then I can believe you are going to be creating a product that makes sense, right? Although, of course, there is a lot of companies that get lost in the weeds because they know their market, but they do not understand how to position their product in the market. So, of course, even if you are an expert in your market, that doesn't mean that you are going to be a successful entrepreneur. But at least you start by having a good understanding of your market. And then you have to understand the concept of product market fit, which is a different concept. And then we apply science to understand product, to help companies to understand their product market fit. And once you understand your product market fit, then you can think of actually developing a product properly. And that's pretty much the phases that we go through. So, and at the end of the day, we all know we invest in, sorry, it's a very long answer, but at the end of the day, our network have worked with more than 500 companies for the past 10, 15 years. And we do know that none of the companies are perfect and have 100% everything right. We do know they all have problems. We just need to know those problems because we've got the network to make sure you are going to be able to solve it and prevent instead of react. So.
Thanks. Erin, I'd love you to give us your viewpoint on what you look for in a team.
Well, I definitely agree with you because I've seen a number of projects that don't know their markets, and it can be devastating if they go out there for funding without knowing. I'm looking for a great, experienced team, people with humility, But also, I am looking for people who know how to make a business plan and already have one. I've been finding over the past 6 months, looking at multiple projects, a lot of companies don't have a real business plan. They think that a deck is a business plan, and it's not. So, and it's an important process to go through. It's kind of like your master's degree, I think, when, as an entrepreneur, is to have a legit business plan, so.
Thank you. That's really interesting that you find that as a gap, that people, it's a bit like the ICO days, isn't it? A good deck and a white paper of some description, you can get a lot of money, but I think you're telling me that those days are over.
Yeah.
So let's just go back, because both of you have touched on it in some way, around the redefinition of unicorns and the value of companies that have an impact on broader social and humanitarian concerns. And one of the things I'd be interested in your commentary on is, you know, you're in Ireland, you're in London, you've got teams here. Some of the biggest problems in the planet are not in the UK, they're in Africa, they're in Asia, they're in India. And you talked about humanitarian and so forth. But what I'm seeing is the traditional development agencies and even governments to some extent are slow to embrace and really harness technology to solve problems in the way that we know that they can be solved. We had an interesting session this morning with John Kamara from Kenya, who was saying, we know what the problems are, we're building tech for those problems, so then there's 100,000 people who'll get on our platform right away because it's solving a problem. And I'd just be interested in any perspectives you've got on how to accelerate the development and adoption of technologies that can really solve some of the intractable problems of poverty, inequality, financial inclusion, you know, sustainable energy, and any one of those things that you know we need to solve. So I'd love any thoughts on that.
Wow. Sorry. I think about this often, and because I worked in the UN for such a long time, I have some perspective on that. But it's, you know, it takes some serious leadership and organization, and one of the problems with the UN and pretty much all the big organizations is that they're so big and disjointed, right? The communications are lacking between departments. So I will say, however, though, I am happy to see the UN embracing the blockchain for delivery of food rations to Syrian refugees, for example, which Oxfam is also doing. So, you know, sometimes it's baby steps, and these are big concepts that these organizations are embracing. And honestly, over the past year, I think some of the best real-world uses for the blockchain have come from the NGOs in that respect. But yeah, it's definitely baby steps.
Kevin, I'd love to hear any perspective you've got on that.
Yeah, I guess the short answer is culture. The fact that we still kind of idealize, you know, in a big part of the world, you know, big car, big yachts, big houses, and so on and so forth, and tend to forget that, you know, the pot is limited, and, you know, the more you've got, the less the others have. And it's simply because we've built our society around those concepts. But I guess if we reinvent our most profound beliefs around what is true happiness, what is true wealth, then using some of those technologies, we will be able to bridge the inequality gap globally, and therefore we will be able to bring the emerging markets forward and in more aligned. Now, of course, it's a bit being a purist, me saying this, because we're seeing what's happening, you know, on both sides of the world right now, and there's a lot of speculation around what that virus is meant for, and is this just not an excuse to justify the slowdown, the global economic slowdown, so that we can print more money. Because if there is a slowdown, there's a button that all of our central banks know is we print more money, and that's great. But the problem is that we're playing a finite game here. This is going to end one day, and we've got to ensure that we can basically do better things, better innovation with the governments. I guess there is a lot of government involvement, especially in emerging countries, because in most emerging countries there is a lot of involvement of government. So if we can essentially, enable the governments to understand a bit more better the concept of innovation and the concept of wealth creation, and kind of move away from the politics, but very much kind of be very focused on solving real problems and have long-term views and positions, then I guess we can do some great stuff.
Erin, you look like you want to make a follow-up.
Yeah, I agree with all of that. It's definitely a cultural and mind shift. And on top of that, what I see a lot of is, we're here in a room with people who are literate in blockchain technology, for example, to a certain level that most of the world is not. So it's also, taking some education. I mean, I know people working within different governments and corporations, and, because this is my life, I've talked to them about blockchain, and they're still having a hard time understanding what it is and the potential of its impact. So there's still a bit of education going on, I'd say.
But I think it's more than education, because I think it's like envisionment, because someone used this analogy the other day about people trying to build a faster horse. It's actually not a horse. We have all of these other tools available, and how it's not just developing country governments, it's also our governments. How do you envision people about the possibilities? So I'd love to hear any comments that you've got. And Kevin, I would also love you to talk about this whole idea of innovation as an asset class, because it seems like we need a whole new set of thinking, and incremental approaches to education is not going to get us where the possibilities are, and having people see that.
I'm not sure how I can address your first question. It's a very tricky one, and I did not get prepared. So I will.
We'll take interventions from the audience as well.
Yeah, well, I guess that should be more conversation, since we can actually have a conversation. It's a very tricky one. I would not be able to tell how we can really change this. I think around your last question, which is about innovation as an asset class, and in kind of capitalizing on value, and this is where I'm obviously very interested, because there is a massive issue right now in the innovation and in the innovation economy, if you want to call it this way, define it, venture capital industry or innovation economy or what have you. The concept that we have created to grow companies right now, it's extremely segmented, and everybody's got different interest. Everybody has a different agenda. The startups have their agenda, accelerators, incubators, they have their own agenda, VCs have their own agendas, the Ps have their own agendas, and so on and so on. So everybody's got a different agenda, and we are all trying to kind of eat part of the cake. So the innovation as an asset class for me, the way we discussed it with Jane is, try to basically create an environment where we can dare to create the most exciting innovation and the most complex technologies in order to solve the biggest problems, whether we're talking about going to Mars or whether we're going to solve, pollution, right? The problems, the size of the problems are extremely big, and the way we finance and we grow those companies is so complex and so segmented that I see founders with very, very limited ambitions. They expect to be a unicorn. Some of those founders, they expect to be 100 million companies. Some are expecting to be a unicorn. I'm like, is that even a purpose? I mean, it's great if you are turning money. It's great if you can actually buy whatever you want at the end of your journey. But can you not focus on something which is much, much bigger than yourself?
Yeah.
Let's just, go there, like like I'll take an example whether we like it or not, but look at Steve Jobs and Apple and Microsoft, for example. They were not trying to become a fucking unicorns, right? Because at this point there was no unicorn, right? Nobody was talking about unicorn back in the days. So they were trying to create something which was much bigger than themselves. And right now the whole societal construct of startup innovation, it's basically all around making quick money and then trying to kind of sell and so on and so forth. And that is obviously just a massive problem. That's why we talk about the innovation as an asset class, because if we start to really enable entrepreneurs to focus on long-term view and solving big problems, then our planet is our greatest asset, right? We only have two greatest assets, right? Time and planet, right? All of the rest is just, it's secondary almost. So can we not focus on this for now?
Yeah.
Erin,
absolutely.
I'd love to hear your views on that.
Yeah, I'm honestly tired of hearing the word unicorn, because like you were saying, everybody's trying to be a unicorn. Like the unicorns are the ones who aren't trying to be unicorns or talking about it. Sorry, but and I also lived in California for a while, in the VC community over there, and I never really found it too realistic. A lot of people running around name dropping Steve Jobs and Elon Musk all the time and not really doing anything but talking about those names. So I'm finding though that for me, people talk about innovation unicorns as if they're like pieces of technology, but I have a different opinion on that now. I feel like unicorns, or the people who are innovators, don't necessarily have anything to do with the technology, even if they have it within a company. Like the people themselves are just as valuable and even more valuable than the technology. I recently had someone who almost invested in my company and said, well, your company is not worth £1 million because your technology is not, the technology that we're not using is not ours. But the people in my company and the structure that we've created and all their experience and time is definitely worth £1 million. So I think people need to be careful when they say, oh, well, you're a unicorn because you have this like funky piece of technology. Well, people are valuable too, and you wouldn't have that technology if it wasn't for the people, so.
Just the point I wanted to catch back on, Kevin, with you, and I think that this is one around this, how you envision people, because I think Steve Jobs was creating a future that didn't exist, and he was quite powerful in being able to get people to believe in that future. So maybe we'll just go and watch a few Steve Jobs videos and try and recreate it. But we've got a little bit of time left, so I'd love to give people in the room an opportunity to ask a question or to comment. So just up there, I think I've got the handheld mic, so I'll go to the podium. Oh, you've got another mic. Okay, just up the back there.
Can I make a comment just on what you said about Steve Jobs creating the future, basically? I think one of the biggest mistakes that most startups do really is focus on the product and not on the values behind the product. And sometimes, if you listen to what Steve Jobs has made, Steve Jobs has, of course, he has sold millions of iPhones, but in reality, he has sold the values around all of the product he could create. And so long as those values are consistent with his customer target, then he would be creating the future, right? But he was much more around the values than the actual product themselves. Because if you only focus on selling the product, then what happens when your product becomes obsolete, right? So it's all about that long-term value that we were talking about just earlier. Just, I'm not sure if you're trying to raise, for your own company right now, but do not get lost in the weeds of talking only about your product, because at the end of the day, your product has a cycle.
Yeah.
Thank you. So let's take the comment or question from the floor.
Yeah, so whenever I've spoken to investors, they've talked about how they want to see exponential potential. And nearly all the projects I've worked on as a developer, it's hard work. There's a lot of issues to go through step by step in order to meet, the solution that we need to create for that particular problem we're trying to solve. And it sounds like, you know, as you just said there, there's a lot of hard work, right, to create those good solutions. It's very frustrating to see investors saying, right, well, yours is not exponential, so we're not interested. So, you know, I'd be interested to hear your, you know, considering this is focused on unicorn, but a lot of these problems, like, you know, the investments that you might make on particular problems, particularly in blockchain. So do you see opportunities within blockchain which are exponential rather than linear growth, because it takes effort to meet those solutions? Sort of what are your thoughts around that? Do you find exponential growth opportunities within blockchain?
Yeah, it's very difficult to hear from here, but we'll catch it and we'll. So I'll repeat the question for everybody. Is basically how do you then, you know, obviously solve the problem of only having access to capital when you have an exponential growth, the reality is that, you know. The short answer to you, which is, you know, comes down to your frustration using your own words, is that maybe you just don't need to raise money from VCs. There is one big mistake that, you know, most entrepreneurs do, is that you need to go through VCs to raise money. VCs is one of the options that you've got to raise money, but VCs have some very clear expectations about your business. And if you do not meet those expectations, and if you do not have any intention to meet those expectations, you, by all means, should not maybe raising money from the VCs. Do not waste your time. They won't waste yours.
Any other question from the floor? Yes, up the front. The microphone coming.
Okay, hi, my name is Sunny. So I've got a question because I work for a cryptocurrency exchange. So we deal with startups who are looking for money, funding. So you said that you have an incubator?
Yeah, not totally, but yes, we help companies to grow.
Okay, so how's the market moving? How are the VCs? Because I live in Singapore. I travel to Southeast Asia a lot in Dubai. So I see the traditional VCs have the family offices, the hedge funds, they're moving into the crypto space, like tokenization and everything, real estate. So what's your take on that?
As far as VCs moving into the crypto space?
Do you see the same similarities in UK?
Yes. Yeah, yes. I mean, what I'm seeing is worldwide. It's not limited to a country at this point. So,
what's the drive here, basically worldwide?
Profit.
What's the drive behind investing in this new technology?
Much higher profits than the traditional investment world. I mean, the returns within the crypto world right now are sometimes insane and unheard of sometimes. Yeah.
Kevin, did you want to make a comment?
No, I echo what Erin said. Thank you very much.
Okay, thank you. So let me just start drawing the panel to a close. And one of the things that I'd like for both of you to give us your viewpoint on is obviously innovation, the startup ecosystem, helping it to grow and develop and getting successful future companies is critical to the UK and to most other parts of the world. So if you were having a fireside chat with Boris Johnson, what would you be telling him he needs to do in the UK to post-Brexit, put UK and keep UK right as a world leader in terms of innovation, technology, growing new companies? What would your advice to him be?
Well, I would probably say the same thing to Boris that I would say to my own president in America, and that's to keep
What was his name?
I can't remember, but Yeah, so I would just say keep the borders open and let people come in. Because that's one of the big, from my perspective, that's one of the biggest issues in my country, is that they want to kick everybody out, and it's a lot harder to get visas now, but most of our innovation has happened because people come from other countries. I've seen the greatest amount of innovation come from diversity and people from all around the world getting together. So I would say the same to Boris.
Yeah, that's a really great point. Kevin, what would you like to add?
Well, I'm not sure I would say the same thing to Trump and Boris, but just to focus on Boris for now, I think I would definitely say that his investment should be on the digital transformation and focus purely on transforming the economy, because it's going to be tough. The European Commission wants something bad about the UK right now, and the European Commission has so much at stake during Brexit that they will make it hard for the UK. Therefore, take this as an opportunity to create a very robust digital economy, which is getting an edge over what the other European members will have, because they won't be able to change that quick.
Thank you. Prime Minister Boris, please take note of that. You heard it here at the London Blockchain Summit, and thank you very much to our amazing panel. Thank you very much.
Thank
Big
you.
hand. Thank you so much. Okay, so we're going to have a tea break now, so 30 minutes break. Please go and enjoy some refreshments downstairs, and we'll be back for the sessions after coffee. Thank you very much.
so the three of decentralized data marketplace. Should we get started? Hello, everybody. I realize it's Friday afternoon and we've all sort of just had the coffee, so we've got the best moment of the next half hour because you're all full of coffee and cake. And I think this session is going to be a very interesting one because it's really talking about, in a world of amazing new technologies that are out there, we're all talking about how great the tech is, but how many debates are actually going on about what's happening to our data, what's the opportunity to make the most of the data about us that's out there, and what do we really have to watch out for going forward. So the title here is Decentralized Data Marketplace. There's so many discussions out there about the huge potential of this technology, but particularly about the huge decentralized data marketplace that is out there. It's booming, it's getting bigger and bigger. Every different debate we've been having is talking about unfettered opportunity. But I think with our two guests here today, they're two who are actually CEOs and leaders in their own organizations. They're creating what the future is going to be like, hopefully to safeguard some of the same issues we have with everyday data. So if you two would like to introduce yourself, you might have met me earlier because I was doing a talk earlier. I'm Caroline Thomas, 20 years working in, it's called FinTech now, but always innovating in banking, finance, regulated industries, and more recently setting up my own companies to invent new technologies, but also as advisory. And for me, one of the big passions is how do you have privacy in this new world? So maybe Zain, if I start with you, you can tell us who you are and what's your passion in life to begin with for.
Hi everyone, my name is Zain Rana. I'm the founder of a project called Farmium. So what we're really trying to do is create a decentralized data economy. It's a growing asset both in value and quantity, and technology building more smarter applications like artificial intelligence or personalized apps through that. So what I'm really passionate about is really tackling the, current unethical process where you have these massive corporations becoming empires off of our information. That's contributed by all of us around in this room and outside of the room especially as well. But there's no benefit besides perhaps better engagement or better usage of the applications. So that's really what we're tackling, bringing the power of information and data and the value of that back to the people, essentially allowing you to profit off your information as you would with any other asset. But yeah, that's my probably biggest passion of many you'll probably see in the next 27 minutes.
Yeah, it's like unraveling the onion here because there's more and more, isn't it?
Yeah.
Alistair.
Hi, I'm Alistair Johnson, founder and CEO of Nuggets. Nuggets is identity and payment with self-sovereign data. Nuggets is all about taking back control of your data as a user. We believe personal information should be owned and controlled by the person. We believe that privacy is a fundamental human right, and that personal data is stored needs a fundamental change because it's definitely not working at the moment. You may have just seen recently Tesco's and the club cards all breaching data, and that demonstrates perfectly, pretty much on a daily basis these days, on what the problem is. And that's the realm that we work with in terms of data value. When a user chooses to share a piece of their information, we try to minimize it at any point in terms of Nuggets, but if they choose to, because it is their data at the end of the day, we expect a value exchange in return for the user to do that. We also give rewards as well to them if they do that, but also the merchants and other participants can do that as well.
It's good. So there's a common theme there of we actually have valuable data, and what are the vehicles or platforms that we have to either monetize it or get better value out of what we're doing. I think the difference between you two at the moment are the different industry sectors that you started off with. Zain, you're working with healthcare.
Yeah, so originally we started off on healthcare because health data is the most valuable data type. Forbes estimate its value to be about $200 per person. But essentially the Farmium technology applies to so many different industries. So over the past year and a half, we've had a massive focus on decentralized finance. So essentially creating indexes of value of data and data-backed stable coins and other approaches in decentralized finance, which I won't go into too much, but we're actually going into a rebranding process, which we have a lot of things that are going to go live, including a name change actually. We're really
Is this a live? This is going as a live feed,
yeah,
so
yeah. So I don't want to reveal too much. It's good you reminded me, actually.
But I think also you were mentioning earlier in the business that you were in, you've been involved with NHS, POCs and things. It's interesting, I think, for people here to understand how that might have worked. Where does the blockchain play a part? And where does the value of medical data, if you like, play a part?
I mean, right now it's a little bit difficult with when you have entities like the NHS, not necessarily for a bad way, it's better for the people because they like to keep everything highly centralized to protect the people's, I guess, worrying and burdening, oh, this is your information, make sure you look after it. We don't want to have control over it because it's decentralized. They try to keep things as centralized as possible, and I don't know if you remember, but I think in 2018 they were hacked and there was a ransomware of the NHS, and actually they asked for a ransom in Bitcoin, which is quite funny that we're mentioning that now. And I think there was a statistic that 19,000 people's appointments were affected. That was operations and like life-threatening things because it just went off the grid. But there's so many different data types. You can focus on financial data, social media data, etc. Health is something that we're really passionate about to begin with because that's our concrete plan, because we can obtain users far quicker that way, and it's something that every single one of us possesses. For example, I'm not a big fan of social media on my personal life, but some people might be a big user of it, whereas health data is no matter what, no matter who you are as a person or personality, you do have that, which is quite big.
And you were saying that really the POCs were going through chemists or pharmacies?
Yeah, so we actually created a software called Blue Patient, which is essentially a data analytics software. Healthcare practitioners input information. We have our proprietary artificial intelligence that it does a lot of the doctor's job, which means understanding the data, giving insights of your information, things like blood tests, so processing all of that paperwork quite instantly, really. And we launched that we created it in 2018 and launched it in 2019. So we've had about 9,500 users in the UK using that, which is quite good. But I think the perception that we sort of saw is that the UK is a little bit further behind. So I've spent a lot of time in Southeast Asia, and there's just so much appreciation for data economies because it's going to change the world. It will change technology as we know it. Things will become personalized towards us and will benefit and profit from it on a monetary level and through other means as well. But I think events like this are awesome because there's so much blockchain innovation here, and there's so much people who want to get in the industry, but they don't know how, but they're still in the UK. So it's great that we have this like hub where everyone can collate and share, I guess.
That's a good one. And I think it's also a good time for Alistair. Your business is looking after payments and money, so it's a different end of the value spectrum, if you like. We've heard a lot about fintech and some of the everything from Facebook to big banks getting in there. What are you doing that it's different in your use of blockchain and in your actual marketing approach?
Yeah. Well, at the end of the day, we started out problem first. We didn't just go, oh, blockchain, let's go and find something for it. We actually realized it started with myself having my own payment details used fraudulently online. You have to wait for the card to come back. And then you've suddenly realized you've got to plug it into 20 different e-commerce sites. And then we've all had this problem when our cards get cloned at the end of the day. So we actually solved that problem, and then we were looking for solutions where we had zero knowledge storage with transaction records, immutable, zero trust principles in terms of the technology, and that's when we saw the blockchain ticked all these. Now, at the end of the day, what we saw was we were addressing the everyday people's problems, and the thing is, if you most of us who are online nowadays, we do two key things. We access or log into something, and then we might pay for something, and we'll probably do that 2 or 3 times a day, and it's very common to us. Now, if you log into my Amazon account and see that I bought bought blue socks on Wednesday, I don't really care. But if you then start taking my payment details, I get quite upset. So we looked at the things that were immediate to the everyday people and started looking at how we could solve those problems. And that's what we're doing. We're getting an identity where it's a verified user, bringing them on board, and then interacting with those services with a digital identity, and then enabling payment through that. So no longer is the payment information left with the merchant, even going through the merchant, that it can all be resolved at the endpoint with the payment rails, or ideally, if you're using more advanced future payments, you can go direct to merchant as well. But if part of it as well is a stepping stone from going from today, where everyone has plastic in their wallet, to tomorrow, where we can just switch over to the faster payment methods, you know, DeFi and other principles like that. So yeah, very much for us, it's looking at the everyday use of people. And then normally where we interact is merchants, payment gateways, and banks and services for them accessing, and that can be on both levels, merchant service and on the consumer side, and entering into bank accounts and things like that.
And bringing it all together, I think, because I think that common area is almost the inconvenience of looking after your own data, and whether you're just trying to go shopping or you're trying to get into your own bank account, and it looks like the only people who can't remember anybody's passwords are yourselves, because they've been changing all the time. I'm wondering in the audience how many of you, I'm not asking you to put your hand up if you've been hacked or anything, but how many of you are getting more concerned about how your everyday data is being exploited or used, or whether you have control under it? Oh, I think that's a majority,
Everyone.
isn't it?
I think there's literally been a tipping point, and probably for Facebook, unfortunately, their point of a data breach, and numerous other ones, Marriott Hotels, BA, myself, I was breached through having flown with BA, and the interesting thing about that, they took my credit card details and my passport details. I changed both of those, and then the digital security system that they sent for me to protect me after the fact asked for 12 pieces of personal information. So I went from having 2 pieces of information that I deleted to having 12 pieces of information held by them that were even more dangerous for them to have. So the problem is, it's just getting, it's exponential in its growth of where the problem. And what you're often seeing is businesses say, oh, we're about privacy. So there's some very big brands out there that put their stamp and say we're all about privacy. But if you realize that if you've got any legacy system beyond the last few years, how can you have that privacy model? Because you've got such a big legacy system that cannot work to that. And it's only the modern companies that work by privacy by design from day one and are meticulous in it that you can actually truly be a private company and have access. I mean, in terms of us, we have no access whatsoever to the user information. And it's atomized into individually encrypted components because of that.
And I think that's one of those consistent questions that come out, whether you're looking for VCs or you're looking for clients or you're looking for different partners, is who's controlling the data, who's owning the data, and how can people trust organizations like yourselves to be custodians of. They believe that they own the data themselves, but how are they doing that?
Well, I mean, from our point of view, we work with trusted partners. The banks are seen as custodians from the past. Some people would say they don't trust the banks, but you really have to do and establish, because it's very difficult as a new business and a brand to say, trust me, I'm great, we've got all these, we built privacy by design. But you have to work with existing trusted brands, and with us, that's normally in the payment space and in terms of that. But also new requirements come out. There's requirements for age proofs and things like that that can be associated to the data. So those new requirements cause people to go into new realms of digital identities and things like that. So it actually pushes them towards that, because before that, those services didn't exist. So they have to work with new technology as well.
Yeah, and Zane, with your business as well, you mentioned there's a marketplace essentially, isn't it?
So I wouldn't really look at this as something that we've seen as an issue, because I think decentralization kind of fixes this anyway, where you have this essentially technology. You put trust in technology rather than custodians or people. So on Farmium, for example, you own your data portfolio. It grows over time in value and quantity, but we as a company can't touch that. All we can do is anonymize you if you request to be done so according to GDPR, but we don't actually have any control over it. Even actually our own interpretation and structuring of information. So there's so much different data types, and a lot of it isn't quality data. So filtering it out and structuring it so that applications on the Farmium network can refine and choose precise specific things for users, so age group or ethnicity or geography, whatever they require. We create our own AI to actually structure the data as much as it can be done so. So we have limited human intervention, which is awesome because then you're putting trust in technology. And in events like this, that sort of has a little bit of a buzz because Bitcoin, whether you like it or don't, that's essentially what it's built on. You trust code, you trust math rather than trusting banks or people. And the same in decentralized finance, which we touched on earlier, is trusting technology rather than people. And I trust definitely technology more than people.
Well, I think that DeFi is one of the big trends, again, that everybody's looking out for. Of how it's almost, people have got used to fintech, they've got used to digital identities and things like that, and now here's another wave. So looking ahead, if we're sitting here 1 or 2 years' time, how do you think that's going to be really impacting your business?
I mean, in terms of DeFi, and I talked on the panel yesterday in regard of that, I think the thing is the stepping stones, the on-ramp into that environment, at the moment is quite niche. I think it was recorded as having $1 billion in the DeFi environment, but you're looking at $3 trillion in the existing banking commercial environment. So it's still very quite niche, and part of that acceptance is coming in is things like verified identity, working with AML5, IDAS, and all these new requirements. And part of those new principles is like transaction proof makes for better identities than we have before. When you start to put identity and payment together, it becomes very powerful in terms of that. So I think that we will on-ramp almost DeFi into the existing world where the everyday people, because we're at the point when everyday people want to get a loan instantly or credit instantly from those services, they want it, but they may not have access to it. So when it's become accessible, that's when it will grow. And then what you'll see is the old school coming in and seeing that, hold on a minute, their loans and credit's a lot cheaper than ours, so we can't, because our legacy system costs twice as much to run than theirs. They'll have to move towards those models as well.
And it sounds like there's a change and an opportunity there where, particularly if you're trying to get credit at the moment, you need to turn up with this almost unattainable benchmark of, can you turn up at least with your utility bill and 10 years of pay slips and everything else. In emerging markets, that doesn't work. And if you actually look if a bank has that much information, maybe some of the platforms like the Facebooks and the Amazons have much better data insights than these banks. So how do you...
If you look at the moment, you have credit reference. It's like a group of people somewhere sit in a room and say yay or nay. And then now you start to see like Alipay's like AI rated credit, and it's starting to work a lot quicker. What we're saying is that basically if you have a transaction record, that there's no public information out there for the transparent, but if you have a transparent transaction record and you can see that you're doing good payments and the merchant said it's good, the payment gateway said it good, the acquirer of a bank said it's good, and you record tens of thousands of those against your digital identity, isn't that 10 times stronger as a value point than a driver's license and a discussion over what happened over the last 3 years? And then if you start to bring into play things like homomorphic encryption alongside PSD2 and bring in all your bank statements, and then without revealing your data, you can see that I've had 10 £1,000 transactions and they all went through, that people can then go, I'll give you a car loan or something like that against that principle. And so then it becomes very powerful in what technology can do, but yet without revealing any personal information.
And then in a sense, the blockchain can help by having that breadcrumb trail, anonymized breadcrumb trail for your credit.
That's really the essence of what it is. It's that transaction record against that. And you can go to a new service, and when you land, instead of what happens at the moment, you land in Chicago, buy a fluffy toy, and they say, you should be in London still, I'm not having this. They can look at your digital identity and go, you're really good, you've never had a bad mark against you, I'm happy to transact with this identity.
Completely, and I think part of that, Zane, as you're expanding your business from farmers, say, into finance, and you're talking possibly about a world of identity. There is a world of identity opportunities there. How are you going to navigate through that?
I mean, so for right now, that's not something we worry about too much. But like, if you look at, for example, DeFi, where this topic came up from, with data, really the area we're trying to focus, which is something we've been developing on for about 6 months or so now. It's just something we're really excited about. And with data, it affects everyone in this room, because if you look at decentralized finance, to put it simply, are just censorship-resistant financial models. So, for example, Tether is a centralized, well, in my opinion, is a centralized approach. So for those of you who haven't heard of Tether, essentially it's fiat one-to-one pegging. So imagine 100 people in this room. One person says, I have $100 in my account, and issues 100 stable coins pegged for $1. We trust him, we trust his wallet. That's centralized. And a different approach is, imagine if there's 100 people in this room, probably a little bit less, but if there's 100 people and we all contributed $1, and that was $100 of stable coins. Imagine if instead of $1, if it was $1 of data as an asset, and now that's back to 100 stable coins. It's a far more decentralized approach, and it's using data as an asset, which is something we're looking to see. I think data will become not just a language, but the currency of technology, of the future as well. It will be exchanged, it will be sought after, and it will need to be privatized. And blockchain does exactly that. So through blockchain, we can enforce in technology, in code, user centricity, user control. There's no corporation that needs to own your data. You own it. And when applications pay to access yours and another 1,000 people's data, you get a share of that. It's completely decentralized. It's a model similar to decentralized cryptocurrency exchanges, if any of you have seen that, where you can actually earn shares of and stuff like that, and you get a fee, the fee that's paid of the volume and stuff, you get a share of that. But this is done for data, so there are a lot of different things going to be created from this industry. Decentralized finance is one that's been talked about over the past couple of months a lot, but there are so many different ones, and I think the reason to get excited about it is because we're creating data at rates we've never seen before. So there's a statistic that over the past 2 years alone, more than 90% of the world's data was created. We've got 5G now, IoT device usage is increasing, so we're going to see rates of data creation that we've never seen before. So what do we do with all of this? So now you have so many new models and opportunities to be created, and that's the reason to get excited about this industry right now, this particular industry, data through blockchain, data economies through blockchain technology, where people are trusted, people own their data, encoded in code, and they can earn shares, especially tokens as a listing feature, which is Farmium's model. And yeah, there's just
and then you've got different layers like AI on top.
Yes,
There could be the intelligent brain that's helping sort of resource the ledger of amazing data that's there, and 5G data and an AI mix, and you really have some big changes happening really quickly. A quick note on DeFi. I believe tomorrow is part of Blockchain Week. There's a DeFi session, an all-day workshop on that. So look on the website for that one. There's 3 minutes left, so I'd like to see if there's any questions from the audience of whether it's DeFi, whether it's how are we managing your privacy and the ownership of your data in this brave new world that we're going into. We've got a roving microphone.
Everyone's stunned.
Do you think that's...
Go to a pub then, yeah?
No, I think the caffeine's wearing off, but... Oh, there is a question.
Hi, yeah. So there are a lot of players. So with the B2B lending, there are a lot of people using alternative data. So sort of the data points you've mentioned to loan to SMEs. On the consumer side, there have been similar companies who have tried to use these data sources to credit score people or to analyze their data, to sort of do behavioral analytics on them and make loans eventually. But these guys haven't been very successful. What are your thoughts on that? Are they using the wrong data points? Are these data sets not large enough? Do you have any opinions on that?
I mean, to be honest, there's lots of different companies who have tried creating things off data marketplaces, and many of them have failed. It's hard to boil it down to just one reason, but I think the centralized versus decentralized argument is a massive one, how much you give trust or ownership of the end user. With me, I'm a heavy advocate for decentralization is the future. There'll be decentralized currencies, there'll be decentralized internet usages, there'll be so many different ones. And I think that's a massive aspect to it. If you have something that's centralized in many different industries, it'll fail. And I think in a data economy where you need to have so much trust, not having that encoded is a massive issue, and it can't scale, in my opinion, to the same extent. There are other reasons why these things have failed, and one of the biggest ones I would say is liquidity of data. You need information that's contributed by so many different people all over the world, and it has to be high quality data, otherwise it's useless. So again, having a decentralized model where people contribute data into this decentralized network, this decentralized blockchain, and then they get a fee every month or so whenever their data is used. It's a far better model than, I guess, trying to obtain people's data without their permission or without full benefit, or they have any stake in things. In my opinion, these two reasons are probably the biggest, and I think enforcing them through blockchain is quite great. And also, actually, a third one, I would say, one which blockchain isn't really talked about too much. On a simple level, blockchain is just a data structure. Take all the media and hype away, that is essentially what it is. So having integrity of data, you can track whenever any information has been tampered with or whenever anything's been appended to the data log, etc. Through blockchain, you can do that, and you can create immutability and trust in that. So whenever that data is transacted, you don't have to validate the information's integrity. It hasn't been tampered with, forged, or it's not fraudulent. So again, blockchain enforces exactly that. So that's the reason I'm really excited about this, because previous technologies may not have been able to do that. Blockchain can, and it will as well.
Alistair?
In our point of view, we're a little bit different. We're not really handling the data to distribute it or go against it. We're enabling the individual to look after their data, and take back control of it. Our model in terms of commercial is transaction fees. So if you do transact with someone, there's a transaction fee to the merchant. It's free to the user. Now, in terms of the user getting any gain from that, if they do give an email for a discount at a service, they get a value as well from ourselves, and the merchant can also give them a value in terms of that. So that's how it works. So we're not so much providing that information as a central data source to crunch it, but there's a value return for individuals' data, and that's what we see as being very important. Our actual model is to keep as much as you can to yourself and minimize that, and things with like ZKPs and homomorphic encryption will actually make that easier in future as it gets more accepted. But with things like homomorphic encryption, you can get a lot of data information back from it, but having never revealed your information. So that's really the model that we see as it goes forward into that. And alongside that, there's also a lot of behavioral data and metadata. We've all seen stories of the NSA in the past where they've got so much data they can't use it because they can't get to it quick enough. But what they've ended up looking at is, and they're a great example of how to manage large amounts of data, is they've looked at the metadata around it. And that actually becomes more useful because it enables you to focus in on which data you should look at or ask for or work with thereafter. So it's a lot better way of dealing with massive amounts of data.
It's a good summary. And with that, we have to go, otherwise we get thrown off, don't we? But I think one of the main messages, first of all, that there's companies like you out there providing solutions for this, and for the audience, really start getting aware of how valuable you are. Your personality, your buying habits, everything is now a data marketplace. So start doing your own asset management of yourself. Thank you very much. Thank you.
Thank you very much. That was absolutely fascinating, and I'm sure people have got enormous insights out of that. I love that idea of asset management of yourself. Thank you. That's a great concept.
We'll set up a portfolio next.
Absolutely. All right, so I'm really delighted to welcome the next panel, which is led by my good friend and colleague and co-conspirator, Johnny Fry, which is around the rise of the decentralised organisation. So thanks, Johnny. Great to see you.
Nice to see you. Thanks very much.
Come up.
Okay. What are we waiting for?
Here we go.
Please, come
Waiting
up.
for invitation. We wanted to be invited.
So this is Tony, David, and Jonathan.
I'll bring it on.
Who
snuck in.
Here we go.
Okay, so what we want to have a sort of 20, 25 minute sort of session on, looking at the rise of decentralization. But in order to do that, what we're interested in doing is perhaps going back and looking at some of the historical aspects of how have we got to where we are. But before we do that, what I'd like to do is to just ask my panel members just to briefly introduce themselves. I'll kick off. I run a company called Team Blockchain. It's been running for about 4 years, and we basically look at how, where and why blockchain and digital assets are being used by commercial operations. We write a weekly analysis called Digital Bytes, which basically has a series of case studies looking at different jurisdictions and different sectors, again, using the technology. And then once a month, we hold a meetup, which you're very welcome to come to, which showcases typically 3 companies, again, what have they learnt and what are the challenges and what are the benefits of the technology and digital assets. So that's essentially what we do. But I'm surrounded by our colonial friends from across the pond. So if the man from Buffalo, Jonathan, perhaps you can kick off and explain who you are and where you come from.
Good afternoon. Jonathan Dunsmore. I'm a corporate securities attorney based in Buffalo, New York, but I do travel around this crazy world of ours trying to not only educate regulators, but also startups on what blockchain is, how to use it, how to develop it properly, what type of strategic alliances they need to start and kind of develop within their own country and outside of their country. So it's kind of this mission of advocacy that is probably not going to slow down anytime soon, and I'm glad because we do realize, coming from my side of the capital markets, that the OTC markets and generally the capital markets in general are ripe with fraud and misrepresentation, and so that's one of the things we're trying to clean up.
So as part of the Empire Strikes Back theme, Anthony Abel, originally from Canada is the accent, settled here. My background really is a serial entrepreneur and a serial financier. So I've funded and built in one form or another some 28 companies. I ran an offshore fund for a little while, ran a partnership building tech companies, and is focusing on breakout technology companies into the global marketplace. I'm particularly here because I've been focusing on the blockchain technologies, DLT technologies, and realized some 4 or 5 years ago how it's ultimately going to change the very fabric of our societies and the way that we operate and work. And that's not just in the business sense, but that is increasingly going to become our social sense. And we might even hit upon the aspects of blockchain marriages while we're sitting here on the panel. So that should be livening up the conversation a little bit for everybody in the room. But we're very keen on it, technologies. We can see where it's going. We like the element of truth that is defined by blockchain and ledger technologies, and we're here to support the economy that is coming from these technologies.
David.
Hello, my name is David Parsons. I'm with TPX Property Exchange. We're focusing on the fractionalization of property. My background, I'm the CTO of this organization. I've been doing this for now almost 2 years in terms of deploying blockchain technology with respect to tokenization of property, trading it, putting it on exchanges, and using it in the finance economy.
Brilliant. Okay, so one of the things that I'm always very keen is to not talk about the technology, because I own a mobile phone. I have no idea how it works. I struggle sometimes even know how to turn it on, but that's a different issue. So what I'd like to do is focus in on an example of an asset that most of us are familiar with because most of us actually own it, and that's property. For those of you who live in the UK, you may or may not be familiar with this, but if you were ever to buy your house off of the church, there's no stamp duty. And the reason for that is that church property is not registered with the land registry. So what I'd like to do is ask David just to take us back, because I said we're going to have a little bit of a history lesson, take us back a couple of 100 years into a situation where it was decentralized with property, because that's something you've been looking at. Can you explain what the typical situation was with property, almost on a global basis?
Sure. So 200 years ago, when you decided to purchase a house, how did that work? How did you determine if the person you're buying it from actually owned the house? What were the land rights for that house? How did you exchange money? And this pretty much didn't change for thousands of years, except for a little bit of tweaking. only up till today when we got the banks involved, and the banks wanted to, they wanted a little bit more information. But anyway, going back 200 years, the way it worked was you would show up in a village, you would show up with your bag of real money, which was gold and silver, and there was no counterparty risk, there's no checks accepted, and then you would determine if somebody was offering a home for sale or you proffered to buy a house, they would say, okay, it's this much. In terms of determining if they own that, you would ask around their neighbors, do they own it? You would ask the local constable, or you would ask their neighbors, do they own it? And the local community would say, yeah, pretty much they own it.
So it was decentralized?
It was decentralized.
You didn't go to the local office?
There wasn't a land registry, there wasn't a book that you would go to. Everyone knew locally, decentralized, that this person owned this. And then you would exchange a bag of gold for a bill of sale, a piece of paper that says you paid this much for it, and your name was on it. And that was it. You moved into the house, and that was the property. So today, that process, effectively, as we moved into the new finance era, and we had people didn't know each other, the community became less cohesion. Then you had to prove who owned the house. There had to be a need for a land registry. People wanted to use it as collateral. So if they loaned you money, they wanted to make sure you were the person who owned it and the house was actually yours. All of these additional ecosystems evolved to make sure that you actually owned the house. It was you who were taking, if it was a mortgage, you actually owned the house and they can take it back from you. So today, we decided when we started our project was, let's see if we can go back 200 years and make the purchasing and selling of homes that easy. Bag of gold, you get the property title to the house or a bill of sale, which means you owned it. So from our evolution perspective, we've used blockchain technology to enable you to tokenize your house into fungible units, fractionalized units, and enable anyone from around the world to purchase your house, a piece of your house, immediately, and take title. That means the land registry in the UK or in the United States, the local county registrar would recognize you as the title owner, the titular owner of that.
So hang on, Dave. So I've got a house and it's $1 million and I need to raise some money for the kids'
You would
school.
sell 20% of it to someone in China instantly.
And then I pay them rent because they've lent me money?
It depends on the nature of the property. So some properties, you live in a house, there's no reason you should have to pay for that privilege. You don't need to.
So just sell a percentage of the ownership, in effect.
They just take
so you can sell a percentage of the equity.
Here's a really fundamental truth that I think everybody in the audience will enjoy hearing, and hopefully you have enough of a study of economics to follow me on this one. The central DNA of our capitalist system and the trading that we do is based upon property and property rights. If but only you can find a distilled version of truth as to who owns that property right, whatever it might be, and have that as something that we can put in our pocket and give to the next person and that they can trust that property right. So the trust goes with the property right. Our financial system is addicted to property. It's how it leverages its value. It's how it creates private credit. It's how it makes its money for itself. It can't arguably survive without it. Fundamentally, what's shifting now with the blockchain technologies is it puts this aspect of controlling the rights that you have of one form or another in a trusted version back into the system and taking out a lot of the middlemen who, quite honestly, haven't necessarily produced the value that we all think we should enjoy. I think I'm being very polite there. And so this blockchain technology, this aspect of trust built into the very digital representation of the thing that we own, is the lifeblood to our financial system. And what's changing in the world right now is it's making each one of you in the audience own that privilege, to be able to use that privilege for yourself and not for all the intermediaries that stand between what you own and the value you'd like to have it represent. And that's a big change. And that's going to change our economies, both in the way that they function. It's also going to change our social interactions. So for us, it's a very exciting environment. I go back to a fundamental truth about trust as well. Trust is about the number of successful transactions we have over time with people that we know. That's a fundamental truth over thousands of years. In our digital age, the world is moving too fast for us to have necessarily many transactions with one individual that we know. So we have the central pinning of identity, which you would have heard of quite a bit over the length of this conference. And you also have this aspect of how do you record successful transactions and how do you record the ownership of that thing through that process. So what we're actually seeing is blockchain is now putting trust back into anonymous digital relationships. And we should all embrace that because it's ultimately going to make our economies work.
Okay, Jonathan, that sounds all good in theory, but
it does. And
you're the cynical lawyer here.
Here's the devil's advocate in me. Because we still rely on the government, right? Your government, my government, even the Canadians. We have to go to the government and say, hey, I got this deed from these guys off this blockchain thing. I want to take out a mortgage, or I want to take out debt, or I want to do one of these creative things, which I do believe is eventually going to be the backbone of our economy. But we still rely on that centralized, trusted third party being the state. And that's where things get really murky and really ugly, especially in places where this, quite frankly, is needed the most in developing countries. Because most of our wealth, as we have all articulated, comes from the property. So if I can take out equity or debt in that property, then I can have the possibility of going and starting a small business or creating this new, economy in my own country, right? My own small little nation of, I don't want to throw anybody under the bus. So that's kind of the problem I have with decentralized organization, because when you start drilling down, you hit fucking bedrock, and the bedrock generally relies on the state. And the state's not going to hand over that power to anyone or anything to a certain degree, right?
Remember, ownership, education.
But David, I mean, could we just go back to history?
Yeah.
We're back in the history class, I'm sorry.
Sure.
Can we just remind people, I think most people are familiar with the fact that companies as we know them were really created by the Dutch, the concept of a joint stock company. But can you perhaps just remind us where the terminology of company and those funny things called dividends, where that comes from?
Yeah, company, the word company and the governance, a company is a company of sailors. That's where the word company comes from. They were on a small ship and it was a company of sailors. And occasionally they would find booty, pirate, and they would be pirates. And at the end of the voyage, they would divvy up, divide all of the spoils. That's where the word dividends come from. So a company of sailors, and they produce dividends for the owners of the ship.
Okay, so the reason I wanted David just to remind us of that is that very interesting at the moment. One topic that isn't talked about because it's sort of, it's just almost the elephant in the room, and that is these things called ICOs, not the Information Commission Officer, but initial coin offerings, which at the moment have kind of gone to one side because they are seen as being dodgy, nefarious actors, and to be fair, a lot of money was raised, but a lot of money was stolen. But very interestingly, the word pirate reminds me of a conversation that I had 2 weeks ago with a French lawyer of a very large law firm, and perversely the following day with a Dutch lawyer. And they're arguing that the precedent of the way pirates were financed, i.e. the crown typically, or wealthy individuals, the equivalent of accredited investors, professional investors, high net worths, gave a pirate a few bars of gold. He went out, and she went out, and actually bought ships, men and arms. The French would go and beat up the Brits would beat up the Spanish would beat up the Dutch, and we were all beating each other up and bringing up the booty back, dividing it up,
exactly,
giving the money to the crown and wealthy people. In the UK, the most famous of all of those pirates is some chap called Nelson. If you wander out of here, you'll see where he is on that lump of concrete in the square next door, and that's how he became such a proficient sailor.
And by the way, just to interject, in the US Constitution, this concept of privateering, it's called privateering, it's called letters of marque and reprisal. It's in the United States Constitution. The President of the United States can actually
But what it
execute
is,
this.
it's not a company.
Yeah.
It's not a debt instrument. Perversely, it's a gentleman's agreement. I'll give you this. If you're successful, we're sharing the booty. And so these French and Dutch lawyers are currently arguing with the French and Dutch government. We want to use this as a 400-year-old precedent to enable small and medium-sized businesses to raise money. I personally believe, with the terrible situation the world's facing with coronavirus, small and medium-sized companies are going to squeal to raise money like we've never heard before. And governments will look to change the rules and regulations potentially to actually encourage this so-called decentralized systems, and they'll be relying on precedents which are 400 or 500 years old. So it's just a slide aside. But Jonathan, I'm interested. So do you think that you're going to see more blockchain coming into society? And if so, is that a good thing?
Oh, absolutely. I mean, I say on my LinkedIn, everybody follow me. I'm a blockchain believer because for these reasons that these gentlemen are working on, you want to have this trusted, non-third party that says, I actually own this. And so whether it is a central backed currency that, in theory has its own problems, but is centrally backed, it allows us to do transactions across borders. And that's where we all know the world is coming to. We talked about globalization for years and years and years. And now that it's here, we're going, oh crap, we need to learn how to trust each other first. And, going to
but how do you enforce the law? We've done a transaction globally. We don't know each other.
The same way we trusted each other back 200 years ago.
But we were in the same village then.
Well, but that's what I'm kind of alluding to is the internet is that village.
So that's the digital village.
That's the digital village that we're starting to slowly create. Like you said, you don't understand what's going on in your phone, but we've had enough conversations. I've seen you on Skype, unless you're pulling some really clever AI tricks or using deep fakes or something. I know that's you. Now, once again, when we start using blockchain technology, hopefully we'll be able to see that, oh, I am a New York licensed attorney, and here's my bar, right? Here's my degree. Here's all these other things that are verifiable through this non-trustless, third party on a blockchain. So it's immutable, right? And should the bar decide to revoke...
But what about the governance, though? When things go wrong, who decides...
That's what I said, there's always bedrock. And that bedrock comes back down to the government because the government is, regardless, like I said, of whether it's mine or yours, nobody's going to give this position up. They would be ludicrous too.
In the systems that we're designing, we're very focused on the role of government. Government is third party, governance, transparency, trust, regulation. There is a place for this in the blockchain world. The key thing, it adds a reference point and it helps to police the systems that we ourselves are creating from the community. That's important because quite honestly, any which way you cut it, you need that third party to play a role. The key thing is we only want it to play a role that's efficient and not inefficient.
But Tony, so you're creating a system which potentially embraces a centralized system like a land registry.
Yes.
But you've gone, I understand you've spoken to the regulators here in the UK and the US and Europe.
Yeah, absolutely.
And presumably they've been pretty cynical about what you're doing and saying, well, hang on, this sounds a bit odd. What's the reception been?
Well, we can handle this two ways. I mean, when we approach them, two things. One is we weren't asking them to do anything terribly different. We're asking them to enshrine the existing workflow processes they have and where appropriate and applicable, allow blockchain technology to exist within them. They effectively agreed that that is a principle that they wish to pursue. And blockchain technology, as we can see, is something that they finally got to a point of acceptance to. It's a good idea generally. Now they have some views about crypto, but that's a bit different. So blockchain, DLT, ledger technologies are here to stay. The other aspect to this is a need. There is actually joint endeavor, joint need starting to happen. A lot of our economies are suffering. They'll probably continue to suffer for a whole series of macroeconomic reasons that I can trust you don't want us to go into. But if you start to look at that, their need is actually coming to a point where they have to embrace these technologies or suffer a catastrophic loss of value in their own economies.
So are we seeing a merger, would you say, sorry, Professor History here, David, do you think we're seeing a merger between almost being able to reinforce a centralized, if we stick with property, a centralized trusted database, either land registry, but the way you can get on and off ramp almost is using this technology? Is that a way to look at it?
When you adjudicate who owns a piece of property, it's done by levels of evidence. The land registry actually doesn't determine if you own the property. It's only one piece of evidence or trust that you've...
So that's the trust that Tony...
Exactly. So if you can show that I paid for it, I've received a title to it, I've been using it in a transaction, then that helps you convince you, if using blockchain terminology, it's 6 blocks deep. That means you own the property. So this is just adding to what already exists in terms of law, in terms of people's understanding of who owns a piece of property and how to use it.
But that's where we jump into the complexities of identity, right? Jonathan Dunsmore, I know there's 3 of me, right? They're not attorneys.
Oh my goodness, surely not.
Everybody prepare. But there's 3 people that share my name. And so if one of them was to go and register a piece of property, how do I not go to that same deed office or government and say, hey, I'm actually them, I need my property?
Well, that gets back to the blockchain. It's possession.
Exactly.
So if you own the key, remember, blockchain is typically non-nominative. If you own the key and you can show that you can control the key, then you own it. You know, possession is 9/10 of the law. In this case, it's 100%, 10 out of 10.
The systems that lead up to a lot of this, you know, when we're doing the work around, because we do some of this work together, the work that's taking through to the point where you create a property that could be traded in a blockchain environment, well, hello, search, survey, existing workflow process, checking the provenance, checking all the rights, making sure they're properly captured, properly stated, verify, validate, audit, check. But once you've created that record, how many times do you have to do it again to have the same version of truth?
Yeah,
ideally, not many.
Exactly.
Yeah, but when you move property,
the value of blockchain.
Yeah, exactly. So from a practical perspective, when you move property in, say, the United States, in some states you're spending 10% of the total value as a cost to move a piece of property. In England, it's about 3 or 4%, I think. Yeah, you know what it is.
Europe, it's 6-7%.
6 or 7%, and that's going to inefficiencies. It's going to some conveyancer, some attorney, some notary saying, yes, I looked at your passport, it's you, maybe not, but you know, I'll sign the conveyancing deed. So really, we're making the movement of property very frictionless. And we're taking out the inefficiency, dramatically taking out the inefficiencies.
I mean, to be bold here for a second, and a good takeaway for everybody here, we see the world changing. Libra was a good initiative. It's based on debt. Our future economies, we believe, on a macroeconomic, are moving to an asset-based economy. We no longer pay ourselves with fiat. We pay ourselves with digital tokens representing a physical asset, which we can all check on the blockchain, on the internet, and we can have trust in. It's very hard sometimes to trust our central bankers because they're printing up a hell of a lot of money right now, and they have no way of paying they're cashing checks they can never pay, or writing checks they can never pay, I should say. And so this economy, this thinking, this aspect of moving to an asset-based economy where we can get back to trusting each other and trading properly is something that we certainly embrace.
So expanding on that, one of the gentlemen were talking about, you know, actually owning your own data and saying, hey, this person is this person, this is his data. You know, maybe I can trade my data that I own as a decentralized person as having, you know, possibly the US government rein me in, but we'll see. And I can come to you and say, hey, this is how much, you know, assets I own, this is my data. Maybe you should let me have some money so I can go buy this property on a blockchain. And then this is a crowdsourced event. Everything is kind of put up on chain. They say, well, we've verified it through, you know, data analytics that this person is who they say they are. It's 100019788K, whatever. And he needs a loan. We judge his credit worthiness as this, all on chain.
Okay, so an example of how decentralized technology is helping to prove provenance, create trust, and then hopefully make improve the efficiency of an asset that we know.
Yeah.
Just mindful of time. Has anyone got any? Anyone violently disagree with anything we've said, or have you got a question? Yes, sir. Have we got a microphone, or just
shout loudly?
Just shout loudly.
Yeah.
Oh, here it comes.
Oh, there we go. Here it comes.
Thank you.
Hi, thank you. So could you talk about where you are with this? Because it sounds like there's a challenge in adoption that you need to get for land registry. You need to get a large area, you know, whether it's a county or a town.
A country.
Country.
To adopt. And I think there have been some cases like Honduras, I understood, was an initial thing. And eventually they didn't go through, and then Sweden. Could you talk about, you know, the challenges of adoption and, you know, compared to
the issue here isn't one of adoption. I might surprise you with that. What we've actually done is mirror what has been a legal practice for 50 years. I don't want to go into all the details because it's somewhat bespoke. But the legal structures we use are in use for 50 years, and the land registries have no choice but to use this system because they're already using it. And therein lies the difference. The key thing is not to try to go, we're not trying to change the world violently. We're trying to enable it. And so enabling it means you use better systems and processes that match the existing workflow process, not try to change it.
So you're not trying to replace the land registries, as we said earlier.
No.
You're trying to make the on-off ramp to the land registry just more efficient. Is that the way to look at it?
We'll make it very efficient, is the
Yeah.
short answer. And the records that we're producing will be much more comprehensive with the land registries and the deed offices. They love this because they have security concerns, and our security and systems and processes and checks and balances are much more thorough than theirs. The land registry is the authoritative source. That will never change. But they're also checking our land
One of
registry
the
against theirs.
authoritative sources.
Okay.
Well, that's what I was arguing, is that it could change depending on how much data is available.
Yes.
On-chain.
We're enabling that.
Yeah, yeah.
All our stuff is wide open to the land registry. We don't own it. It's information that we've collected on that property. Arguably, we've collected a lot better. By the way, there's an interesting little point here before we go. When a lot of the industry does valuations on property, they don't do a search or a survey per se. They drive past the property to make sure it hasn't burnt down.
Make sure
That's the stage, that's where we are. They're over-reliant on data analytics, and no one's checked these properties for 30 years.
Has anyone got any other questions they would? Yes, the chap at the back, please. Thank you.
Hi, have you looked at low to middle income countries versus high income countries in implementing these sort of systems? And is there any difference in the adoption between the two networks? Obviously, in high-income countries, we have systems that people relatively trust, but they don't necessarily exist in those low-income countries. So have you investigated that at all?
Well, from a initial deployment, we focused on the Commonwealth countries because of the rule of law. You have the English common law system. So in terms of determining who owns a property, it's pretty much set in 1,000 years of law. So we've been focusing on the 5 English Commonwealth countries. The other countries that we've been looking at, such as on the continent, some countries on the continent don't have a land registry. Greece, as an example, just recently, after 3,000 years, only decided to have a land registry only 5 or 6 years ago. Same thing in determining land ownership in Italy is a 17-year process. So using countries such as Italy, it's a little bit challenging to use it as collateral. So to get back to your question, our primary focus is in the English common law countries.
Okay. I'm mindful we're getting a big sort of red sign flashing saying, you know, STFU, so we better sort of wind it up. So thank you very much, Jonathan. Thank you, Tony and David. Thank you, my panel.
Thank you.
Thank you very much. Thank you very much. And I would now like to see if we've got our next speaker. Is Cara here? Yep. Okay, fantastic. Welcome. We really appreciate Kiara's son coming to speak to us from one of our sponsors, Wobi. She's just flown in this morning, and people have gone to a lot of effort to get here despite the virus, and we're deeply grateful. And I'd love to welcome you to the stage. Thank you, Kiara. Thank you so much for coming. Big hand.
So first of all, no panic. I didn't fly from Wuhan or China. I based in New York, and I just landed from New York. Okay. So I'm very happy to be here. My name is Ciara Sun. I'm the Vice President at FWW Group, and I'm the Head of Global Markets and Business. So can I actually get a clicker on?
It's here. Just
Oh, okay. Thank you. So my topic today is about blockchain and how it relates and reacts to the traditional finance market. A little bit about me. After my MBA program, I joined Boston Consulting Group for traditional strategy and management consulting, focusing on the financial services area. Just an interesting fact. So it looks quite impossible for a simple photo sharing app to be sold for over $1 billion, but Instagram did it. And a simple chat app sold for $19 billion, and WhatsApp did it. And look at Bitcoin. A decentralized, permissionless system worth $133 billion. Bitcoin made it possible. Why should you be interested in cryptocurrency? As we can see that in the year of 2019, Facebook announced Libra, and Central Bank of China announced DSAP. So a lot of the traditional government and business leads are coming into the play of blockchain and cryptocurrency. And Bitcoin outperformed traditional assets by 300% on average. And it still outperformed all major financial assets in 2019, include gold, silver, and S&P 500. And it has very low correlation with gold and S&P 500 and other traditional commodities. And this is something that I want to mention. The halving event is happening within 3 months from today. And look at historical data, halving events constantly have positive effect on the Bitcoin price. And we see a lot of the interest from traditional institutions coming into play in Bitcoin and other cryptocurrency. So what do investors need to access crypto? They need legal fiat on-ramps, they need a complete ecosystem of financial products and services, and they definitely need seamless trading experience. So who are we? We are Huobi, and we offer more than 50 different products and services in the blockchain ecosystem. We have our Huobi Global Exchange, that's one of the top exchanges in the world. We offer spot trading, OTC brokerage, and futures trading. We also offer staking, wallet, financial services, consulting services, and our Huobi chain, which just went live by end of last month. And we also offer lending, business, and research and education for blockchain in China. And we provide services to more than 10 million users across the globe for over 170 different countries. So why are we doing this for such a big appearance around the globe? As we can see that current economic and infrastructure development is very uneven across the countries in terms of logistics, information, as well as finance. So blockchain and digital assets can actually help to build a more open, lower cost, and more efficient global financial infrastructure solution. So on the right side, we can see that a traditional cross-border payment infrastructure. On the right side is what blockchain can do. So in the future, blockchain and digital assets are likely to become the foundation of new generations of global financial infrastructure and will have a profound impact on the global financial landscape. So this is currently what we are doing globally. In Argentina, we partner with Ministry of Finance and also Social Security. And in Nigeria, we work with the Central Bank, SEC, and Fidelity Bank. And we are working with a lot of different partners around the globe to help with some cross-border payment solutions with technology of blockchain. So this is something that's definitely important in the whole cryptocurrency industry: security, security, and security. These are just some of the events that happened in the past in the history of our industry. A lot of security issues. So that's why with Huobi, we put in 2 years of effort and developed this Star Atlas system. It's an on-chain monitoring system to be able to identify and blacklist malicious addresses automatically. And with real-time monitoring, we can identify those accounts and take actions immediately. So some of the examples happened in the past. We helped some of the government entities and as well as banks around the globe to help freeze accounts, so that we can trace back and help with funds that are stolen and converted into Bitcoin. So with that spoken, we've been doing well in the industry. Our aggregate funds over the assets account to 12.8 billion US dollars, and we made 680 million US dollars in revenue in 2019. And that's all transparent public information because we use 20% of our revenue to do our HT token repurchase and burning. And this is just data showing that trust from our customers because, exchanges are different than wallet or custodian. They put assets on the exchange to trade. So that's actually a fair way to rank exchanges rather than just trading volume, I believe. And in the 6 years of history for Huobi Exchange, trading volume exceeds 3.8 trillion US dollars by the end of 2019. And we actually broken 10 records in global daily Bitcoin trading volume. So spot trading is where we started, and trading volume daily is over 800 million. And derivatives, we actually launched it by the end of 2018, so it's very early, but we've made major achievements on futures trading, and with the zero clawback, we're still currently keeping the world record. By January 20th, 2020, our derivative trading volume actually surpassed OKEX and BMAX and become #1 worldwide. And as of today, we started system upgrade. So our system responds 1 times faster, and throughout increased by over 50%. And by March 26, our perpetual swap will be available to our customers. Thank you so much, and I'm open to questions if you have any of them.
Any questions?
Yeah, so I wanted to ask, where does the majority of your trading volume come from? In which part of the world?
Where's the data coming from?
No, the trading volume. Like, does it come from China or the US or Russia or?
Oh yeah, so over 60% of our trading volume comes actually from the Western market, and 40 of them comes from Eastern market. And as we launched our institutional business unit in 2019, right now on Huobi Exchange, there are over 42% of trading volume actually comes from institutions.
Given all the problems the world's currently facing with COVID-19, are you seeing more or less interest from Asia in trading of cryptocurrencies?
Well, compared to the Western market, I'd say right now it's really a tie. But compared to the past, we've seen more interest. With registered users number increase, it's about the same. But actively trading numbers of users increased quite a bit compared to 2 years ago. Yep.
Hey, could you give a summary of where the Chinese regulators are and how that's changed, in the last year or two, in terms of supporting crypto and exchanges like yourself? Assuming you're still based in China.
Okay, so in 2017, September 4th, that's when the Chinese government shut down exchanges in China. And we shut it down, and that's where, some of our competitors took off when they choose to kind of ignore the regulations and compliance. And later on, we decided to still operates, but we moved outside of China. We moved to our base to Singapore. And in China, we don't do anything associated with cryptocurrency or exchange business. Our Huobi China entity, which is based in Hainan, that's the sandbox for blockchain in China. We do blockchain technology solutions, educations, and research, just only regarding to blockchain. And as of last year, October 24th, that's when the president endorsed the industry of blockchain, and he encouraged everyone to learn about blockchain. So we made a decision to put blockchain education and research as top of our strategy, and we've used over 10 million Chinese yuan to help government entities and traditional business and corporates, and as well as top universities to learn about blockchain. And we did as of now, over 250 different workshops for blockchain education.
Hi, thank you for your time. I'm curious, so with your reach and the volume that you have, and the partnerships that you have with remittance that you mentioned, do you have a plan to do something like a Libra Play for a global remittance, one app for them all kind of situation?
So as I mentioned, we are actually working on a project. It's called Huobi Cloud 2.0. So it's a cross-border payment that we work with some of the Belt and Roads countries. Last December, we actually hosted the first government-backed blockchain industry in Hainan, and we invited Minister of Finance from over 18 countries, and we had closed-door discussions of how blockchain technology and cryptocurrency can help with cross-border payment.
Thank you.
Yep.
Thanks very much.
Thank you.
Thank you. Yeah, thank you very much, Kara, and thank you, Huobi, for sponsoring this conference. We're now coming on to our last session, which is also always one of the most fun and thought-provoking sessions, and I'm really delighted to welcome the panel, and they're going to take some big bets and make some predictions and tell us about what the future trends in blockchain are going to be. So please welcome Caroline Thomas, who's just done a sterling job today, and the panel to talk to us about future trends. Thank you.
Hello, everybody. Just give a minute to get the great panel together.
Go around the other side.
And first of all, thanks to Jane for organising such an amazing event today between here and the live feed. I think we've covered so many debates, and I personally, I'm sure many of you here go to a lot of different events, and some of them are quite banal, but some of them really bring out the tricky issues and encourage us all to we are creating the future, and the best thing we can do is to use our expertise to talk to each other in these events, to start sharing those experiences that we have, and today, particularly sharing the visions that we have. So I think the format for today, I'll get our panel to introduce themselves. They're from a various range of backgrounds in industry type, and whether it's academia or business or consultancy, there's different skills there. And really the model is, where are we going to be this time next year? What is happening to the blockchain environment this time next year? What's good and what's bad? And then we can explore maybe some of the particular industry sectors that these teams actually reflect. And really finish up with all right, in 10, 20 years, what are we going to be telling the grandchildren and the great-grandchildren? Because even now, our children and grandchildren are digitally savvy, much more digitally savvy than maybe many people in this audience. What on earth is it going to be like within 30 years, let alone within this time next year? So first of all, I think I'll get the panel to introduce themselves from right to left. Scott, shall we start with you?
Sure. Hi, guys. My name's Scott Trowbridge. I am WeWork's FinTech and Blockchain focused incubator manager. A bit about WeWork FinTech Blockchain Labs. We essentially help early stage startups. So we do that through several different initiatives using WeWork's infrastructure and global resources. We bring in mentors, we bring in investors, we do investor demo nights, etc. So yeah, our goal with WeWork Labs is to really help early stage fintech and blockchain companies grow in many different ways.
So you're seeing the early stage, or you're at the promise stage of everybody coming on board going, I'm going to make this happen?
Yeah, absolutely. And like working on many different problems, many different initiatives, and it's really interesting to, I guess, see like who are really being futuristic in this space.
We'll wait for that one. And you, tell us about you.
Yeah, okay. So my name is Yu Xiong. My full-time work, I'm a professor in Surrey University Business School and associate dean for international. However, I also do some similar things compared to my colleague here. So for example, I have some similar thing about run co-working space. So I'm the co-chairman of Cocoon Global. So I think maybe many of you know. I became the chair from last year. So we focus on now more about fintech. So now 7,000 square meters based in Liverpool Street Station in London. I also created another space in Newcastle called the Task Park Newcastle. So that one, last year we have a national rank of top 10 innovation space. So we rank number 3, said that it's apart from WeWork, we rank because all the others are not so like a chain in WeWork. So basically I'm relevant to 2 innovation space in the UK. But I use this space to link with the funding. So I have one of my company invested £34 million last year, and also I link to many other funds as well. So like a fintech companies. So one of the company called PXB, which I'm a chief scientist for that company. We have a daily active user. It's a blockchain to help photograph intellectual property. So we have a daily active user of 10,000. So that is number 1 in China. It's a Chinese company, and the number 2 in the world. So I have another company called UKDE, so which is I have a cryptocurrency bank card. So basically, we have spent many resources, money, and also other like expertise to help the fintech and the blockchain companies.
Yeah, and I think you mentioned earlier, 17 years based in the UK, actually working with Cocoon Networks, or the Cocoon Centre in Shoreditch, which again is looking at an awful lot of Chinese innovation that's going on, and the opportunity of 5G, all the way through to your Magna Carta one, which we might talk about later, which is a different model again, and also the academia that you're doing between Newcastle and Surrey. It really is bringing all these disconnected parts of the innovation world together, I think. So this will be interesting. And then Maria.
Hi, my name is Maria Vigliotti, and I am a technologist. I'm a computer scientist. I wear different hats. So I run a consultancy company called Sunblock Consulting, and we offer all sorts of consulting activities, from building MVP to do research to training. And I have worked extensively in the blockchain space, doing projects with certification of artists, certification academic qualification, and a lot of work in West Africa around land registry. And the importance is very important. We don't realize how critical our institutions are, and where those institutions do not perform an important functionality, the impact they can have in the economy. And for example, in terms of land registry, there is a 9 trillion trapped capital that cannot be leveraged because there is fundamentally a missing land registry. In the UK, we work with a government-led company called the Design Artist Copyright Society, and we are building a global registry to enable transaction of art to be sold and also to certify art. Again, there is a big problem there because the black market is worth 34 billion, and those 44 millions means no retribution to artists and tax, not leverage of tax. So those are really big problems where the blockchain can play an important role. And I'm also a visiting fellow, an honorary visiting fellow at the Imperial College London, where I did my PhD, and I worked there as an academic for a very long time, But one of the reasons why I was invited here is because my book, The Executive Guide to Blockchain, which is really, something really important to me, because having worked as a technology has been very important to explain things to people who are not really technologically minded, to business people in a clear way, and so the book is out there, and it's called The Executive Guide to Blockchain. So
We'll make sure everybody gets the link to that afterwards.
Thank you.
But it sounds like a lot of your role is actually demystifying this great tech out there, but how do we take it into a commercial or a business or a bank that doesn't quite know where it all was, separating the hype from the reality, I think.
Yes, thank you.
And so when we look at the futures, I think that'll be interesting.
Yes.
And Mahmood, tell us about you.
Yes, of course. I'm Vinod. I lead fintech investing for Draper Esprit. We're slightly later stage investors, so slightly much further on from Scott at WeWork. We are typically investing anywhere between 10 and 30 million. I think some of the notable fintech investments we've made are in companies like N26 and Revolut. In the crypto space, we're investors in a company called Ledger, and probably got about 8 or 9 investments that we make in this space every year.
So you're not going to get out of this room, are you?
No, absolutely. Well,
we'll have to escort him out, I think.
Here to help in any way I can.
So I think there is a range here already on the panel, and I think I'd almost like, where are we going to be in 1 year's time in blockchain? And it might be useful. There's a huge range of industries and things that we might be able to involve in, get excited about. But I wouldn't mind each of you just sort of mentioning, say, the top 2 or 3 industry sectors that you think are going to be important. And then, keeping an eye on the time, we'll do another round of saying which attribute of blockchain, whether it's privacy or distribution or whichever, you think is going to be that critical debating point going forward for the next year and up to that 30-year vision. I'm looking at you, Scott, because you're at the end. So.
Sure. Yeah, I think it's really interesting to look at historical trends. You look at how fintech has progressed so much, even just in London. So I think the stats still remain solid, but UK as a country has the 3rd largest amount of fintech investment outside of USA and China. And London alone has the 2nd highest number of fintech unicorns external to San Francisco. I think that's pretty phenomenal based on the population size. And the reason why that's really progressed so much is because you look at fintech as a category. All of these complex infrastructures that you see with traditional banking and legacy banks, that's now become more acceptable, and the infrastructure's basically become far easier to use. You look at the acquisition of Visa with Plaid for 5.25 billion recently. They essentially enable any startup, any company to start offering financial services. And I think we've now seen that progression and wave, whereby that's only going to progress further. And utilizing blockchain, there's a really interesting trend around DeFi and some of the companies innovating in that space, which I'm really, really excited about.
It's a good one, yes. And it's interesting, isn't it? Because I think UK might be the center of a fintech bubble, if we're not including Silicon Valley. But also, I think from the work I did at Barclays, where you're looking for fintech, you end up with some of the most successful companies are people like Everledger, who on the face of it isn't a fintech company, but for risk and insurance and everything else, is the secondary market of fintech, if you like. Yeah. And you, what do you think?
Yeah, I agree with Scott that we look at this from the historical view, how this fintech development, but I can go even earlier than this, than if you look at the history. So as you mentioned about the Magna Carta, Yes. So actually, my company acquired the Magna Carta Island, and so basically that's 800 years ago when King John was kidnapped to this island, and then for the first time I said that that's the decentralization of political power, and I want this island to be used again. So I talked to the parliament to say, look, so we should use this symbol to represent the UK, shout in the world to say this island will again do the decentralization of finance power. So if we think about the regulations and also the development of how the political power is decentralized, we can predict maybe how the finance power will be decentralized. It's not a 1 day or 1 year work. So it's maybe more than that. So that's why last year, because I'm on the all-party parliament group on blockchain, I'm one of the 14 expert board. So I proposed that we bring this island into a blockchain island, and UK should use this Magna Carta as the voice shouted to the world, to lead the world. So actually my title in my speech in the parliament called Magna Carta, the internet, also blockchain is the internet's Magna Carta moment, right? So, and I got a very warm welcome, because using this Magna Carta, the most important document in history, we can use this to anticipate what would happen gradually, how the system will be decentralized, so in the next few years.
So really, it almost goes back to some of the earlier conversations today we had about geopolitics and who's controlling our data and our industry, if you like.
Yeah, it's
and
a conflict process.
In a significant sense, was that decentralization of power.
Yes.
And now we are here in the blockchain age. So what's it going to be like in 10 years' time? I think it's going to be fascinating on that one.
Yes, correct.
Okay. And Maria, what do you think? An industry sector or an attribute of blockchain?
No, well, I like to stick my neck out.
Good, that's what we're here to do, right?
Take some risk, live
really feel. This is the
dangerously, yes. I think that because of the nature of blockchain requires, it makes sense when you have a lot of mistrusting participants. In my view, blockchain will take a bigger role. It is already doing so, but it will grow in terms of supply chain and logistics, because very often there you need a number of people who are completely mistrusting, and they don't know how to share those documents. And very often there are some very sophisticated contractual obligations, and nobody wants to actually, I mean, there are other ways in which you can verify that the contract has been signed by somebody, that there is a there is a distance and people have signed it and everything is correct. But those ad hoc solutions are very expensive. You have to hire a person who is specialized in cryptography, and that costs money. Then you need a specialized implementation. This is all cost money. So one way to think about the blockchain, if we want to, is to think about a commodization, how do you say?
Commodization?
Commodization of opportunity to verify document for a group of people who actually maintain the ownership of those fundamental data. But each of them can verify that those documents did happen and everybody agreed to it. And this really important feature is showing its power, not only in the project that I mentioned earlier, but for example, in other projects around the world with, Everledger is an example of supply chain where really brings together a group of participants. But if we look around Walmart, and so there are really big events happening around the world, because ultimately, conflict in business costs money.
And we might be seeing that when you mention supply chains in particular, we're seeing IBM and Maersk and Hyperloop.
Yes, exactly.
All with a huge promise, I think, from an enterprise point of view. Everybody can see the potential there. And almost it's not blockchain that's the problem, it's getting the trust between the people and the organizations. I'm realizing we're cut for time here, so where would you be placing your investments?
10 seconds. 10 seconds counting down. So we've been increasingly interested in the idea of decentralized finance, and specifically within that, thinking about the products and financial services that we interact with today, but in a decentralized format. And one particular interesting application of that is actually in the idea of staking, for example. So I think that we're just having a look at some of the stats today. We've got over 900 million locked up, actually, in staking companies. So that means you've got enough assets in crypto sitting on the Ethereum blockchain that are yielding some kind of return. And one example of that is a dApp called Compound. And they're a great company where they're actually being able to generate the AUM that actually would have yielded some kind of result on the asset if it hadn't done anything. And so what you really want to think about is how can you create yield? And that is, I think, an interesting idea. When you got such a low interest rate environment, I think for us thinking through what yield looks like in the future through crypto could be interesting.
So it sounds to me like we're still trying to solve old world problems of how do you make wealth in society, and there's a whole new way of, you're saying there's a whole new potential for that. And I think there's we had a very short session today, so this is why we're talking so quickly. But I think I can see a whole range of different business areas, because it's everything from fintech to diamonds is one piece there. And then it's really interesting that 2 of the panel are involved in actually underwriting the innovation agenda, if you like, not just for the UK, but globally. WeWork is a global brand, and you, with your different organizations, have a global reach, particularly with China. So I think headlines are, there's global change coming. The earlier debate today was the race is on for whether it's institutional finance, like central banks, or whether it's social finance coming from Facebook. It sounds to me like the speed of change is phenomenal. So it'll be fascinating when we're all here this time next year with Jane. What on earth, what sort of year are we going to have? Are we all looking sprightly? Are we all looking energized? And actually, how big are all the companies going to be? Because the scale, I think, of growth is going to be phenomenal this year. So. Oh, crikey. Right. Shall I start from this side?
Yeah, sure. Well, I go back to my original thesis around the future of what decentralized finance would look like. So we imagine a world where you'd have, one problem you definitely will be able to solve for is the unbanked.
Yes.
We can skip the infrastructure phase and move into lightweight infrastructure. And that works as long as you have an internet connection and a phone. And that's already what's happening in most of Africa and a lot of parts of Southeast Asia. And so we'd expect that to continue. But that would mean that you might skip the phase of having the Revoluts and the Monzos and the N26s. You might go to a We Pay Direct, where you just skip the whole entire phase, go straight into payments, and you get into the idea of whether you're capturing income or capturing spend, and you're in the flow of funds.
I mentioned earlier, in an earlier talk about M-Pesa in Kenya,
M-Pesa, that's
which
right.
is 49% of Kenyan GDP.
Yes.
And that's not blockchain, it's not crypto, but it's a completely different form of finance.
Yep.
So I think this is going to be bigger. Maria?
I think what we will see is a central bank, could be China or other, issue some digital currency, and that will change dramatically the landscape. I cannot exactly say whether this will be a pure blockchain or distributed ledger technology, but definitely that will change depending on who gets first and the economic power, how we trade internationally, and how our view of money will actually probably change, hopefully for the better, in including the unbanks, but that will be seen.
Yeah, I think since we are getting more authentic data, a huge amount of authentic data, and this will, in my view, at least have 3 very important impacts. One is that we will see the company management will become more deeper and more effective, more efficient, because I'm a professor of supply chain management, and so I'm happy to say, so Maria talked about some supply chain side of things, but I'm sure supply chain for any industry will be impacted. So this is once the company management style will be changed. And also because of more authentic data, and so the global collaboration, working with people which is miles, hundreds of miles away is not a problem in future. So we'll see more global collaboration. And the third trend is that I think the government will be fundamentally transformed, especially those governments we feel now is very low efficient, and because the cost of running government, the anti-corruption side, the cost is reduced. So, for example, China, we will see the government will be changed significantly. That's why the Chinese government wants that to happen and promote blockchain in the top level. So this is 3 changes.
Yes, I was speaking in India just before Christmas, where they've got blockchain districts and they're doing use cases for ISO.
Yeah.
And in many countries I talk, you get 5 use cases coming in, and there were 33 use cases coming in, land registry, counterfeit pharmacies, everything that was there. And the scale of that, again, was huge. But all going through, all linking to the Indian centralized identity system. So I think it's really interesting seeing how these big players are doing it.
Yeah.
And Scott?
Yeah.
No pressure.
So trend for 2020. I think, as you rightly said, it's kind of a combination of seeing different applications and services being conjoined together. You have like Compound, that in conjunction with a product like MakerDAO and DAI, their stablecoin. Someone in the room. So they essentially enable you to have much higher like savings and interest than you can with a traditional legacy bank.
Yep.
So my trend would be what I'm kind of defining as super applications. And this is, as you can kind of see with, I guess like Uber, they have the most granular data on their customers. They know exactly what car they're driving, they know exactly how much money they're making, they know exactly how many journeys, rides they're making there, the degree of their driving, the ratings that they get. And if you can combine that with the use of like smart contracts and the ability to actually make instant settlement, also you maybe look at Uber offering their own car insurance because they have the most granular data on that customer. So what I'm trying to get to is I think we're going to see a combination of different services coming in together, offering something more pragmatic than an independent service itself.
And where blockchain basically is the trust framework that holds all that together. I think one of those earlier debates was who would have thought Airbnb, who would have thought of renting out your own home, which is, for most people, is their biggest asset, and then renting it out to a stranger. So that's such a level of trust that nobody thought would exist before. Add it to all these technologies that are coming in, and I think it's going to be a phenomenal year. So should I hand to you? Thank you. Thank you, Jane. I think Jane's going to do the final chat. And thanks to the panel.
Thank you.
Thank you very much.
Thank you.
Thank you. That was great. Yeah. Thanks. Thanks, guys. Fabulous. Thank you. Okay, so thank you so much. So we've got a lot to think about and a lot of expectations, which we'll invite these guys back in 12 months' time and have a look. So, London, this is it. Blockchain Week 2020 is drawing to a close. I know that there's people on the live stream, and I'm really pleased that we had so many people joining the live stream. Obviously, during the middle of the COVID epidemic is not the time to run a conference. However, for those people who've been at the conference, I'm sure you will agree with me that the quality and the conversation has been outstanding. We've had just the most impressive array of speakers, and I personally have got a lot out of every session. And I want to thank Sharon Henley, who has been juggling usually, thank you. Over the last few days, we've had at least 5 speakers a day dropping out, and then we've been managing to replace them and still have an absolutely terrific conference. So thank you very much. I want to thank all of the people in the community who've come and supported us, because it's really important that you get value out of these events. I want to thank our partners and our sponsors, because without you, we wouldn't be able to put on events like this. You know, I think that blockchain remains fascinating to us all. I think it will underpin much of what we do in the future. Maybe next year we won't be talking about blockchain, because we'll be looking at how it's being used in conjunction with many other technologies to achieve impact, to provide service, to create efficiencies, overcome inefficiencies. So just really look forward to what this new year brings. And to say from FinTech Worldwide, thank you very much for your support. In interviewing with our community, people have been saying they want visibility, they want capital, they want talent, they want education. I hope that this conference has been an opportunity for you to learn some things, to network and meet with some great people. We've had FinTech TV filming downstairs, so some of this content is going to go to air on FinTech TV. And you'll be able to watch the live stream if you did miss any sessions. So we look forward to creating with you still our ambition of a global distributed FinTech blockchain supercluster. So if you're even half interested in what on earth that means, please get in touch with us, and we'd love to share, we'd love to partner with you, because we're all about using technology to create value. So thanks very much everyone for coming. Thank you, London. And if anyone would like to join us, we're really happy that CraftCoin, who is our entertainment/refreshment/beer partner, is putting on drinks at the Mercato Mayfair from 6 p.m. So if anyone still wants to come out and brave the weather and brave other people, come to Mercato Mayfair and have a drink with us. So thank you very much, everyone. And thanks to all of the FinTech Worldwide team and the venue team who made this just such a great event. So thank you, everyone.